minutes early, the crowd they down like the It's gonna have a lot of trouble. That's the best thing. What sort of worried about? One goes to the house. I think about it. All right, Phil, we're live on air. Wrong going. Bobby. Also, very incorrect. Want to run forward something? Yeah, oh no, just
And we're live. We are here at the Bitcoin.com news desk, live at Token2049 Singapore. I'm your host, Graham Stone, alongside David Sensel of Bitcoin.com News. How are you doing today, sir?
Pretty good. Weren't we just doing this like a week ago?
We were doing this a week ago from Seoul, but We're here now in Singapore, and we'll be live streaming for the next 2 days from the conference floor. All right, so let's set the stage here. Token2049 Singapore, the world's biggest crypto event. We've got 25,000 attendees, I believe.
That's conservative.
Conservative. The tickets just were sold out. We had people trying to get tickets, scrambling the last minute to get tickets. 25,000 people are going to be here.
I have an anecdote about that, by the way.
Go ahead.
I'm not going to name the person that I was interviewing that talked about this, but let's just say a very influential, big name in crypto. Their team was having trouble procuring extra tickets.
Absolutely.
And that's crazy.
Yeah.
That like a crypto luminaries team was like, I can't get tickets. I'll pay any kind of money.
So perhaps a sign of where we are in the cycle. Peak FOMO, peak hype.
No,
not quite.
No. Where's the FOMO yet?
No. Okay, well, let's see. We got 300 speakers here at lined up at Token2049. 500 exhibitors. David, you and I walked around a little bit this morning. There's a lot of dance music. There's multiple DJs.
Can you guys not hear this? I hope it's coming through a little bit. If you see us like kind of doing this during the day,
we got
that's a reason for
pretty
it.
Good music, actually. And most importantly, we've got a ton of great interviews lined up. We've got who's going to be here at the Bitcoin.com Live's news desk. We've got Robinhood co-founder and CEO Vlad Tenev.
Also, amazing dresser, right? Like
okay.
He had a conference, I think, last month or so, and he was looking dapper.
Yeah,
which is nice. Also, nice. Dapper gentleman. We have Cardano founder Charles Hoskinson.
Okay, yeah.
Saw him earlier this morning. He was at KBW rocking a blue shirt that was like inspired by the waves of Kanagawa, the Japanese thing.
Okay.
I hope he wears that for our interview.
Yeah. Very much looking forward to seeing Charles Hoskinson, obviously a legend in the space. You've got former Time Magazine president Keith Grossman, who's now heading up the enterprise arm of MoonPay, which is one of the biggest on and off ramps in crypto. We'll be interviewing him.
And I've worked with the gentleman on some writing projects too, so I can't wait to meet him in person.
Absolutely.
Actually, yeah. Tether CEO. What's his name again?
Paolo Arduino.
That's a joke.
I don't get it.
Only,
right.
Well, I mean, who doesn't know this guy? The Tether CEO.
Yeah.
One of the biggest names in the space.
Yeah.
USDT, obviously the largest stablecoin, and it's not even close.
Yeah. Recently, rumors of a private placement for Tether, valuing the company at $500 billion.
I've heard about
a little rich,
that.
Perhaps,
yeah.
But maybe we can get into that in the interview.
Just as a little spoiler, I did this interview already.
Did you bring that up?
I did not, but it was a short but sweet interview, and honestly, all of his answers kind of reframed how I think about Tether and all of their announcements. So I'm not going to spoil it, but it was actually quite good. And you and I should talk about this maybe in Token Narratives tomorrow.
All right.
Because it was illuminating, honestly.
Okay. We've also got co-founder and CEO of Backpack, which is an emerging crypto super app. And you also did that interview.
That's right.
2 days ago in Tokyo.
In Tokyo. They're based in Tokyo. So we did that. And similar to the Justin Sun interview that I did for KPW. Had a little creativity here and there, so if you guys like it or not.
Work some props into it.
We'll see.
Looking forward to that.
Not exactly, but yeah, I have to find out.
All right, who else we got?
Co-founder of Redstone, the up-and-coming Oracle provider. They're giving Chainlink a run for their money. Basically, if there's a first mover advantage, there's definitely like a second mover advantage, right? You can kind of streamline the tech. You don't have all that, what do they call it, technical debt.
Right.
And so they've made, I think, major strides as an Oracle provider.
Okay, so that should be interesting. And we've got many other interviews lined up. But before we get to all that, let's talk about some of the giveaways that we're going to be having during the live stream. So first of all, golden tickets. All right, so how this works is you have to download the Bitcoin.com wallet. So download it right now. Just go to wallet.bitcoin.com or simply bitcoin.com. Download the wallet. Once you've installed the wallet and create an account, what you'll do is during the live stream, we're going to be throwing up QR codes randomly throughout the entire day. You scan the QR code with the QR code reader in the Bitcoin.com wallet, and whoever does that first is going to be able to claim the money that's on there. Magic, what's the word you used? Magically, yes. It's a paper wallet actually, but yeah, so we're going to be giving away tons of these throughout the live stream, so make sure you're paying attention. You have your Bitcoin.com wallet ready and scan the QR code that pops up on the screen throughout the live stream. We also have another exciting giveaway, which is $2,000 of TBTC. This is Threshold Networks wrapped Bitcoin. And Threshold, of course, is proudly sponsoring our Bitcoin.com news live news desk here. And so how this contest works is basically you just have to follow Bitcoin.com news on X, which is BTCTN. Follow at the T Network on X, repost our live stream post, and throw a comment or a question in any of the posts any of the clips or posts coming on X that are coming out of our live stream coverage.
And we're going to be checking those comments.
We're going to be checking those comments and addressing them later in the live stream today. We got $2,000 in prizes up. The grand prize is $1,000 TBTC. And we're going to have 4 runner-up prizes, $250 in TBTC each. So, yeah, make sure you get in there, follow, add your comment. That's the contest. All right, David, any last thoughts before we break up the intro here?
No, excited for this event. Like you said, the biggest one of the year. So let's get to it.
All right. So we'll be right back. We're going to be doing our weekly recap of the news right after this.
So I got into crypto around 2017 during that cycle, that ICO boom.
2017, I was first introduced to Bitcoin. Actually, my first love of crypto was Monero.
I got into crypto in 2017, mainly out of desperation. I started hearing about it, and basically, I'm like, okay, this is my ticket.
I got into crypto around 2017. Yeah, it seems quite classic at this point, but yeah, the big bull run basically. Got into mostly ETH at that point.
Discovered Bitcoin in probably mid-2016. Read all I could about it. Got really super interested in it. Put in a little bit of my money. And then, just started building things for it.
I probably got into crypto around 2018-ish. And I knew about it for many years prior to that, but never really got into it.
I started my journey in crypto in 2010. Back when I first installed the Qt miner exe.
I'm a full stack engineer, mainly deal with front end web, but I've had my hands in a few different parts of the code bases.
I am a media product manager. I basically handle a lot of the Bitcoin.com news media.
I'm the marketing operations lead at Bitcoin.com. I manage the marketing team. So we've got video team, designers, copywriters, and yeah, we're just trying to spread the word about economic freedom and our products, make sure that everything looks cool.
And right now in particular, I'm kind of building a new exchange product with some of the new cool stuff that's coming out in Hyperliquid, DYDX, and trying to figure out how to make a new decentralized product that still looks like a custodial exchange.
I am the tech lead for revenue, which means I'm responsible for finding revenue streams.
I work with the film and video, do editing, film the conferences, making different content of that sort. Yeah.
So I'm basically leading up the engineering org, mostly managing all the engineering side of things at this point. Making sure we stay on track is basically what I'm doing, yeah.
Japan is one of the most peaceful countries in the world. The crime rate is quite low.
Everything works and it's safe. You can walk anywhere, you can just go anywhere. You never have to worry. You can leave your backpack on the train and you'll get it back. Like all of that stuff I really like.
The infrastructure is fantastic. You can go wherever you want to. Any time of day and night, everything's going on. It's full of energy. People always say like New York's a city that never sleeps, but I've been there and it does sleep, whereas Tokyo doesn't sleep.
The middle class experience in Japan is second to none. What in many countries would be like a 3-star restaurant, you get that like without really going out of your way.
Super clean, super safe. You know, you can walk anywhere, you can take the train anywhere, lots of good food. It's got like all of the pros.
It's fun, exciting. There's always something going on. People are really kind and friendly. Food's amazing, and they've got amazing toilets. I can't think of any negatives about living in Japan. Maybe I think the language barrier is a bit tricky sometimes, and also the bureaucracy.
It's kind of disconnected from the rest of the world. It's easy to sort of lose touch with reality, I guess, with what's happening in the rest of the world.
They tend to misinterpret rules versus laws. That creates a lot of issues, especially for the crypto industry.
You know, everything's Japanese. You got to speak the language. And if you don't, you're kind of always going to be an outsider, I guess.
So it's hard to, I guess, like break into that culture.
I think number one piece of advice I have about visiting Japan is read up on the local customs, for lack of a better word, or mannerisms. Be polite, don't be an asshole tourist.
I personally think you shouldn't spend a lot of money on food. The ambient level of service and quality is so high that you can go to relatively inexpensive places and it'll blow you away.
You're going to have to take the subway. You're going to have to take the JR. You're going to have to take the Shinkansen. Now, yeah, you can stop every station, get your little ticket and do whatever, but just get a transit card. It can be an app on your phone. It can be like the physical card like I have. That way, you just put money on it, and then you can get in and out of the train. If you're buying individual tickets, it's not going to make any sense to you at all.
I guess if you're traveling to Japan, it's to mostly just go out a little bit from Tokyo and enjoy. Because I really like you get 1 hour, 2 hours out in Tokyo, like Hakone or Easy or somewhere like that. Everything changes. It goes from being this big city to becoming nature. If you go far enough, you'll be the only tourist, right? If you go off the beaten path, you get a car, then you can go to the real place.
You can go anywhere and find something interesting to do. So I think like a lot of people just come and do the circuit of like Kyoto, Shibuya Scramble, maybe try and stay in an area that's a little bit off the beaten path and explore that area. There's lots of stuff.
I would avoid temples in Kyoto. Just go to like any medium-sized city outside of Kyoto, Osaka, and Tokyo, and you're going to have a much better experience.
I think for sure you should spend some time to like scope out an area you like before like, I don't know, committing to like an apartment or something like that.
Be ready for the bureaucracy, and everything is going to be in Japanese. So either you gotta, get your Google translation game going, or you gotta find someone to help you.
Try to learn the language, try to learn the culture, but still be yourself. You're a different animal. Try to stay yourself.
Just do a lot of research. You have friends living in Japan, talk to them, get as much information as you can before just jumping into it.
The things that make Japan great, like it's so clean, it's so safe, those are only possible because of the restrictions. Be prepared to be spending a lot of time sorting your trash, dealing with local regulations.
It's not the same as your home country, so just roll with it. Makes it more fun. Don't expect it to be like your home. Don't judge the things that are different. Just accept that that's how it is and go with it.
So the best thing about crypto, I think, is everything changes and that you never really know where you're going. When I started, if someone told me about NFTs or meme coins, I would have been like, what are you talking about? What are you talking about?
I think there's just always something new to learn, something new is happening in crypto. The trends come off often and go away just as often. So got to ride the waves.
I get to see what's happening in this sort of new age of fintech and be ready to pounce on like these potential investment opportunities.
It can be a little bit stressful at times, especially once you get into the groove of working on the project and needing to change.
And we're back here at the Bitcoin.com news desk, live at Token2049 Singapore, powered by Threshold Network. I'm Graham Stone, co-hosting along with Bitcoin.com news and research gigabrain, Mr. David Sensel. And we're here to give you our weekly recap of the biggest news. So let's get into it.
It's good to see you in person.
Yeah, good to see you as well, bro. Let's get into it. So we got some bullishness, right? Vanguard, the $10 trillion mutual fund giant, is reportedly preparing a shocking pivot, which is to give its brokerage clients access to crypto ETFs. So this would be a massive reversal. Vanguard has long been one of the loudest critics of crypto, dismissing...
They've been dragging their feet.
They've been dragging their feet. They dismiss Bitcoin as speculative and lacking intrinsic value. It's still at the rumor stage here, but it looks like the rumors are coming from respectable sources. So Vanguard, reportedly pivoting to enable crypto ETF trading for all their brokers.
What do you think did it? Was it the $50 billion they inflows into Bitcoin ETFs in like 18 months?
Yeah, someone at the Vanguard may have noticed that and thought, oh, maybe we should try to get in on this gravy train.
50 billion in inflows, you say?
So, yes. Yeah, so obviously, if finalized, this would mark one of the most dramatic U-turns yet by a traditional finance in crypto. So pretty bullish. It would obviously mean more inflows into Bitcoin and crypto ETFs. Again, Vanguard has $10 trillion in the assets under management.
Yeah.
So
I mean, call me when Warren Buffett gets in. That'll be like the last holdout, right?
Yeah.
Don't you think?
Yeah. All right.
In regulation,
This is also bullish.
this is another bullish thing.
Yeah.
This time in regulation terms. There was a roundtable between the SEC and the CFTC. For those unfamiliar, the SEC and the CFTC have been fighting over the past, like, I don't know, as long as I can remember.
It's a turf war.
Yeah. Who controls crypto regulation in the U.S.?
No, I want to regulate it.
I want the power.
I want the power.
Right?
Yeah.
So they have a roundtable, and they acknowledge that there's been some bad blood between the two, and I think they're now going to amicably carve up crypto.
That's the idea.
Yeah, that's the idea.
Yeah. So, CFTC Chair Caroline Pham, her quote is, "Financial markets are critical to fueling America's growers, producers, and innovators that drive our economic growth and prosperity." That's the rationale behind why they should actually do their job and regulate correctly.
And also, it should be noted, since we're here live at a conference,
Yeah.
that Pham has been on somewhat of a crypto conference event tour.
Yes.
See that, WebEx
She was at WebEx.
and KBW?
She was at KBW.
She's also here, right?
I'm not sure, but I wouldn't be surprised.
So at least she's doing her part, trying to get out there.
Yeah.
If you want to be cynical, you could say that maybe she's trying to best position herself and the organization to
To go through the revolving door from government to industry. That
or just like situate what parts her organization is going to control.
Oh, I see.
Right in the resolution.
Okay. Well, anyway, another interesting part of this whole roundtable between the SEC and CFTC is that there was talk of perpetual trading being legalized in the U.S. And this has implications for two of the hottest projects that everyone's been talking about in crypto the last few weeks, months actually, but especially the last few weeks, which is Hyperliquid and then the emergence of Aster. So the question is, I think, if perpetuals become legal in the U.S., is that bullish or bearish for these decentralized derivatives, perpetuals derivatives exchanges?
My sense of that is, like, just on hearing this question and not thinking too closely about it, liquidity is king, and just because it's now legal in the U.S.,
it might be legal.
Yeah,
Not yet.
Right. Global markets, they congregate around one or two winners.
Yeah.
Why would they be U.S. based?
Yeah.
Yeah.
Well,
What about you?
I wouldn't be surprised if the U.S. starts coming at players like Hyperliquid and Aster and be like, no, you just can't do that. You have to KYC everyone. And that will be that is the sort of the moat, or the reason people are using these decentralized perp DEXs is because they don't have to KYC. And, so when the official version comes online in the U.S., you could argue that would end sort of the Hyperliquids and Aster's reason for getting so much traction.
I mean, I think those are two separate fights, though. For me, it's will the U.S. force Hyperliquid to start KYC? That's one separate issue.
Yeah.
A lot of people think eventually,
Yeah.
if Hyperliquid gets big enough,
Yeah.
they'll actually.
Yeah.
And then there's a counter, or the second part to that is, at that point, will Hyperliquid be, or has to be decentralized enough to like maybe make a case in court that you can't tell this decentralized protocol to KYC?
Yeah.
No.
Well, I would also think that if they're going to make perp DEX legal, or perp DEX trading or perp trading is legal in the U.S., that would be the first step to then next trying to ban the non-official versions, that like the non-KYC versions, right? First, make it legal in the US. Here's the rules. And if you're not playing by the rules, we're going to come after you.
Yeah. And again, though, like you see with Binance, right? Like Binance, US is much smaller than like your global finance.
Yeah.
It really hasn't hurt Binance.
Yeah.
The international situation.
Good point. Yeah. All right, let's move on to another story, which is Circle, the issuer of USDC, is reportedly introducing a somewhat controversial, or at least amongst crypto purists, a controversial new feature, which is transaction reversibility in certain cases like frauds, hacks, or disputes. So crypto purists would point out that this goes against the whole immutability use case of crypto. David, I know you've got a differing opinion on this. Why is Circle on the right track with implementing transaction reversibility? This proposal to implement transaction reversibility.
Well, before I answer, I would say that there's a lot of evidence that I kind of supported this on statement setting token narratives.
Oh yeah, you've been going on about this forever.
Yeah, right. My mom, boomers, people who don't care about crypto.
Yeah.
They need transaction reversibility.
You need chargebacks.
Yeah. You make mistakes.
Yeah.
You got to be able to reverse it.
Yeah.
You have to have it. And for daily transactions, for daily life, who cares about immutability?
Yeah, absolutely.
That's just insane.
And also, Circle clarified with the whole uproar around this, that they wouldn't actually be reversing blockchain transactions. It's just they'd be adding a governance layer where people can send a new transaction to reverse what actually happened.
So I've talked about this a lot. I've heard Emid Malkan talk about this. Basically, you're just adding a layer.
Yeah.
Right. The transaction goes in, it sits for a designated hour.
Yeah.
And then if nothing happens, it sends it out, and then that's immutable.
Sure. So you delay the settlement.
Exactly.
Yes.
Delay the settlement. And there's many ways to do it, and it's opt in. It doesn't mean that every transaction has this.
Yeah. Now, just zooming out to the big picture, the reason why this is important is basically this kind of rule or this kind of capacity, Circle would argue, and probably most people in TradFi would argue, is required, is necessary for TradFi to actually adopt crypto rails.
Yeah. And again, to me, this is a necessary step to be adopted to mainstream.
Mainstream, yeah.
You and I talk about this all the time. Like, how deep are we in crypto? We're at a crypto conference. We're on a live stream.
Yeah.
We've got tons of great fans everywhere.
Oh,
It's proud.
hold them back.
Yeah. You guys can't see it, but trust me, it's there. When I send you money to settle up a tab like at a restaurant, I sweat about it.
Oh yeah.
Right? Like okay, is this grams?
Yeah. You check 3 times, and then you go check the Block Explorer. Did it go through? That's not how you onboard 1 billion people
No.
to crypto.
That's how you what's it called? Get people to onboard for one transaction.
And then they're like, I'm never coming
Never
back.
going to use this crap again. and then it goes through. So yeah, 100% necessary.
All right.
Also, this one last thing. People who are upset about this, we're talking about.
Yeah, they're already censorable.
Yeah, I mean, they're already it's already a centralized organization.
Yeah.
Right? These are not Bitcoin backed smart contracts.
Yeah.
Stable coins on it. Get out of here.
Yeah.
It's
All right, let's move on to Coinbase's whining. What do we got, David?
all right, so Coinbase, and I would have to say others like PayPal, and I think several others too. But they're going on the offensive against all the big banks and bank lobbyists over stablecoin rewards. As you might be familiar with, the Genius Act had some stipulations put in place by the bank lobbies to forbid yields on stablecoins, like U.S. sanctioned stablecoins.
Yes, and of course, people are just getting around that by changing the word yield to rewards.
And and at the time, I told you, I said this is a nothing burger. PayPal and everybody else, Coinbase, they're going to find ways around it. There are infinite ways around this.
Yes.
This thing. But it's probably why they let it go through. They didn't back it. I'm not seeing this will.
Yeah.
All right. Anyway, so Coinbase, what did they write here?
Yeah, Brian Armstrong said they're blasting the banks for hypocrisy, saying they're just mad they're losing. Big banks don't need another bailout. They need better products. So that, the banks are basically, they're complaining. Hey, you can't offer yield. Coinbase does offer yield. They recently just unveiled a product for Canadian customers, 4.1% yield on USDC on their dollar holdings in their bank accounts. Canadians get typically zero interest on their actual money, like the fiat money in their bank accounts. So
you hear that? 10 Canadians that have crypto? Those 10 Canadians now can get 4% on their stablecoin yield.
Yeah, there you go.
You and 9 of your friends. Yeah. Are there any Canadian crypto movements? I wonder. Do you actually know any? Just one.
Oh, yeah. No, well, I wouldn't say they're users. They're speculators, just like everybody else.
Again, this is inevitable, I think, right? Rewards or like air mile style systems. There's so many ways around this. It's going to happen.
Yeah.
And to me, this is almost performative.
Yeah.
I have to feel like the bank lobbyists know that this is inevitable. They're just trying to slow down the inevitable result. So.
All right, let's move on to another interesting story, which involves Circle. So they are partnering up with Deutsche Force Group, one of Europe's largest market infrastructure providers, to integrate stable coins directly into core financial markets in Europe. So the partnership will bring Circle's USDC and EURC, so their European stablecoin, into Deutsche Force's ecosystem, starting with trading on the 360T platform and the 3DX digital exchange, plus custody and settlement through Clearstream and crypto finance. So first deal of its kind between a European exchange operator and a global stablecoin issuer. CEO of Circle, Jeremy Allaire, said the collaboration will reduce settlement risk, cut costs, and improve efficiency for banks, asset managers, and the wider markets. I think this is a pretty big deal, actually, David.
Why's that?
Well, because it seems like they're trying to actually integrate stablecoins into the financial system, like stock markets in Europe. That kind of seemed like just only a year ago. That seemed much further away, and it actually seems like it's happening.
Yeah, I'm going to be a wet blanket. No surprise here, but as far as like stablecoin usage, the U.S. and Europe kind of non-markets. I was speaking with Paolo.
Yeah,
my good friend Paolo.
Were you on his private jet?
Close enough. Private room in a fancy hotel.
Okay.
But anyway,
all the users are in the global south. Okay, but we're talking not about like peer-to-peer use case, right? We're talking about the rails, right? So being able to so we're talking about stock markets in Europe, and then being able to like switch between stocks and stable coins, basically trying to bring crypto blockchain rails to the stock market.
No, and it's a worthy cause, but it's probably years away, right? Like, TradFi is going to do it slowly. The system that they have now, it works badly, all right? But it works. And so they'll probably be the last people to really adopt this in like a major way.
Yeah.
It will happen. So these steps are necessary, but
yeah. So, speaking of TradFi being slow at things, I want to bring up this other story about Iran. But before we get to that, Swift
Yes, there we go.
is proposing using blockchain. And they're not going to be using, their proposal is not to use Ripple, as it's been rumored for like the last decade, but actually to create their own consortium of banks, big banks. There's a ton on the list: Bank of America, Citi, J.P. Morgan, HSBC.
Do they?
It goes on and on.
Do they have a blockchain name? Is it Swift?
I don't know, but Consensus is involved. So basically a private permissioned blockchain between these giant financial institutions to replace Swift, right?
So Swift is making Swift.
Swift is making Swift 3.0 or whatever it is, right?
10.0.
So they're not going to be adopting someone else's that was created for them. They're going to be making their own. That's what it seems like. I think this is huge news. Like, I think it's just so funny, like that for years and years and years, people have been saying, "Oh, Swift is going to get replaced by our blockchain." But
who here hates Swift?
Yeah, everybody hates Swift. Yeah,
Swift.
But actually, and I was listening to an interesting podcast the other day about this Wart with someone, I forget the guy, but he's like, Swift is actually really decentralized. It's an extremely decentralized network. There's like 10,000 nodes.
Yeah,
right.
The dollar is a very decentralized.
Yes, and the problem is the tech is from the 60s. So the plan here is to just upgrade the tech to blockchain, and it'll still be as decentralized. They've got all their consortium of people involved here, institutions involved. So they might actually fix cross-border payments.
But okay, I agree with all that, except the tech now, do they really have to charge what they charge now? Right? Like,
yeah, so okay, exactly. So
like it is a monopoly, gouging, terrible monopoly. Fees that they charge with modern tech should not be.
So they're disrupting themselves, I guess, here. Presumably they're going to be making less money on international transfers, but maybe actually doing more. They realize they have to compete now.
Yeah. I mean, I hope they fail. Personally. I hope they fail miserably.
Yeah, I don't think they will. I think this is going to be adopted. I think it'll take a time, as we were saying, like it takes them forever. But I think this is, they're going to make their own system and just upgrade the tech.
What was the transaction volume on stablecoins last year or up to this point? Like Visa had 14 trillion or something like that.
Yeah, but
and stablecoins had 15 trillion already.
But those are two it's not apples to apples comparison.
No, I get that. My point though is they take into account how many stablecoin L1s have launched this year.
Yeah.
With a sole focus on stablecoin transaction settlement.
Yeah.
You have like Tempo for Stripe.
Yeah.
Plasma just launched this week.
Yeah.
To like great fanfare.
Yeah.
We interviewed Stable at KBW. They're backed by Tether as well. And fees are paid in USDT. They have like backing from major banks as well. Google is Google with a focus on transaction, stablecoin transaction infrastructure. There's another one that's slipping my mind. And now we know Swift. I don't know. I feel like I don't know. I mean, yeah, they have the
network.
They have the old school network. I don't know if they're gonna be able to withstand the fast pace of companies that actually do things.
Yeah, I think they've got a good chance. But anyway, let's go back to stablecoins for a minute because as we talked about, David, with the rise of US dollar stablecoins around the world, as we've discussed many times, there's going to be pushback around the world. Countries want to maintain the hegemony over their currencies. And the latest entrant into the battle is Iran. So Iranian authorities have introduced stringent new restrictions on stablecoin usage, limiting annual purchases to $5,000 per person and total holdings to $10,000.
And that per year, I guess.
Yes, annual purchases to $5,000. Total max ever $10,000. So basically locking down stablecoins. I think this is the it's not the first and it won't be the last.
Right. We mentioned this on the weekly, I believe, a month ago. There's a Bank of England, right?
Yes, there's a proposal in the UK, very similar, making limits on the amount of people can hold stablecoins.
Yeah, and at that time, I think you called it. You're like, we're going to see this a lot more. Like, we're going to see the Bank of England's proposal.
So
kind of word for word, maybe with the numbers changed, and here we are.
Yeah, Iran's next.
This looks almost exactly like the Bank of England's.
Any predictions on who's next? I got Russia.
No, I don't.
Russia's pretty high on my list.
I think it'll be something like Indonesia, something like that.
Yeah, could be.
Yeah. Maybe a Middle Eastern country. I don't know.
Yeah. And then the question is, how is the U.S. going to respond? Sanctions. I mean.
Well, no, Iran. I mean, I don't think
they're already under sanctions.
Had any sanctions.
Exactly.
Right?
So maybe that's why Iran's like, whatever.
Yeah.
What can we lose?
Yeah, exactly. But also, I mean, if there's any kind of entrepreneurship in Iran, which I imagine is typical.
Oh yeah, people are not going to be happy about this.
Yeah. But also, I think they probably can just ignore it.
The only way to police this is via centralized exchanges. So it's going to, stablecoin usage is still going to continue in Iran, but it's going to get pushed to peer-to-peer networks.
Where it probably already is, though.
Where probably a lot of it already is. But, it'll slow down adoption of it, but it's not going to stop it.
Yeah.
All right, we got two more stories. Let's talk about Aster for a moment. So Aster, the up-and-coming entrant in the derivatives, perpetual derivatives space, rose to fame over the last couple of weeks and briefly hit number one for 24-hour transaction volume, beating Tether of an M&A protocol or app in the space. Briefly beating Tether, pulling in almost $29 million in 24-hour fees, where Tether was $22 million. And its Aster's competitor, Hyperliquid, was down at like 2 million, 2 or 3 million in that period. Tether is back up to number one. This is just from a few days ago. But point is, Aster is pulling in a ton of fees. Why is that not the whole story, David?
Well, so Aster's rise is well known, and I covered it in my newsletter a little bit, some of the promo posts.
Yeah.
I put in $100 and I made $700,000.
Yes.
But in the second half of last week, all these problems started coming up. Accounts were getting frozen, negative balances.
Okay.
Yeah,
a lot of people have been complaining that the platform isn't as slick as you would hope.
They had some glaring mistakes, but again, honestly, for me, those aren't really. It's a new platform. You expect this kind of thing. I would say some of the more worrying things are things that we talked about, like watch trading.
Yeah, well, people are trading a lot of volume on Aster in hopes of getting an airdrop. So they're basically points farming, right? And then if you look at that, can be verified by the fact that by the open interest numbers, right? So open interest on Aster is 1/10 of the open interest on Hyperliquid, while the volume numbers are reversed the other direction. So Aster's volume is 10x Hyperliquid. So what that's telling you is that people are just trading back and forth, points farming. So it's not sustainable.
Not only that, but apparently some very good traders that I follow were posting graphs of how the open interest was being put into the order books, and it looks like it's not spiking like you would it's it looks like Legos.
Okay, so what does that mean?
It means you're not even trying to hide that it's a computer.
I see.
Sort of launching the thing, right? There's nothing natural about it. the overall open interest in how things are being traded.
Yeah.
Again, I wish him the best of luck, but I think maybe this per dex meta, I don't know.
Might have been the flash in the pan, but not the first flash in the pan for perp dexes, right? We like DYDX. Well,
okay,
it goes back, right? We've had waves of these.
Yeah, I mean, we talked about this with meme coins earlier in the year. I think when you have one coin kick off like this, that does not meme coin season create. It has to be like 2 or 3 coins after that.
Yeah.
Where you're really like, oh, okay, this is a new meta.
Yeah.
So if Aster holds and if there's like echoes of Aster or whatever, then you could say, oh yeah, we have a new meta.
Yeah.
It's a Permdex meta. Right now, I'm not convinced.
Yeah. And I think, as you've mentioned, David, with these perps dexes, it's all about liquidity. So you need. It's probably a power law. There's going to be like one that has 80% and then maybe a competitor. All right, let's move on to our last story for the week, which is that legendary cryptographer and Bitcoin OG Nick Szabo is back. And he's been posting on X. I don't know what happened to him. He kind of retired, but he's back. He's been posting on X, and he's been saying that Bitcoin is king. And the reason is
breaking news. Breaking news.
Right. Okay. So people were getting into the comments saying, "Hey, check out my project," and he was like engaging in good faith. But then he said, "Okay, the reason Bitcoin is king is that so many of these other projects have quote prioritized so many other deseriata over trust minimization." So Nick Szabo, a fan of. Can you explain the etymology of this word, deseriata?
He's a fan of poems from the 1920s, I think.
Yeah, so bells and whistles?
Yeah, bells and whistles, things that are attractive to look at.
Yeah.
But and maybe actually like through capital are not very important in terms of like what the actual thing itself is.
Yeah, and then the real thing itself is, according to Nick Szabo, trust minimization. Right, so that's why Bitcoin is so valuable. Decentralization, trust minimization.
Get out your telegraphs. Send the news to the East Coast, West Coast. By the way, a team member with us at this conference. I'm not gonna out him. Believes that Mr. Szabo is Satoshi.
A lot of people think Szabo is Satoshi. So,
but when I hear phrases like this thing that you just said, no, like I'm coming out of retirement and I'm going to tell you, Bitcoin is king.
Oh, okay.
Because of didgeridoo. I'm like this guy's not Satoshi.
He's not Satoshi.
No, God.
There's no way. There's no way.
No. Didgeridoos. Satoshi was not writing like that. Yeah. Anyway, great guy.
Yeah. Definitely not a CIA agent.
CIA plant.
All right, that's it for the weekly. So thank you, David. Next up, we've got co-founder of Wintermute.
That's right.
Yoan Turpin. You're going to be interviewing him.
Solo.
A
little scared.
Yeah, so looking forward to that. We'll be right back. Oh, and don't forget, check the screen for the golden tickets. We're going to be flashing them up during the breaks between the interviews.
Remember, guys, you got to get the Bitcoin.com wallet first. You have to get it.
Download the wallet.
The reason you have to get it is these golden tickets are paper wallets. I don't know if you know what that means, but the paper wallets is a self-custodial Bitcoin. And so you need some way to interpret how to get the Bitcoin. Anyone can get it. Anyone. So
first come, first serve. Scan it with the QR code reader on your phone in the Bitcoin.com wallet app and get the prize. We got between $5 and $50, I think. We're going to be putting up dozens of these throughout the day. All right, we'll be right back.
We are giving away free self-custody Bitcoin during our live conference coverage. First, download the Bitcoin.com wallet app. During our conference coverage, we're going to show you these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner to scan these golden ticket QR codes. Swipe to automatically send the Bitcoin to your self-custody wallet. But be ready, be fast, because anyone watching can get the Bitcoin.
This is Bitcoin.com news.
All right, so I'm here to tell you while we're waiting for our next guest to come on that you got to make sure to download the Bitcoin.com wallet app. Once you have that installed, we're going to be flashing up QR codes that have Bitcoin on them. You just scan the QR code with the QR code reader in the app, and whoever does that first is going to get the amount of Bitcoin that's on there between $5 and $50. So do it.
Free self-custody Bitcoin. Scan this QR code right here from within the Bitcoin.com wallet app. You better hurry up. Anyone can get it. Oh, is it still there? Is it gone? I don't know. Okay, we are back with our first interview of this conference. We are at the Bitcoin.com news desk, live from Token2049 in Singapore, powered by Threshold Network. I am with the co-founder of Winterview, Yoan Turpin. Hello, sir.
Good morning. Good morning. How are you? Thanks for the invite.
I'm very, very good. This is the second time I've had the privilege to interview you.
I think it's the second time I have the privilege to talk to you since Austin, since I got a bit vaccinated against traveling to the US. The consensus.
Yeah. I think I saw you briefly in maybe Dubai. We crossed paths
during the, I don't know, exchange that can be named. I cannot be named.
I don't remember exactly what.
Starting with B, like many others anyway.
Exactly, yeah. All right, so just to start with like an easy question, I guess. Can you please just refamiliarize myself and our audience with the path that took you, your history, the path that took you from what you were doing before to what you're doing today?
You wanna essentially how I got into crypto?
Basically,
how we got to go.
Yeah.
Just kind of the same, but I'll try to give you the shorter story.
All right.
So the gist of it is essentially I started as a macro trader, but I also wanted very much I was also an angel investor from so mostly Web 2 actually, so 2008, 2014, 15 or so. I got slightly acquainted with the crypto space in 2012 because I was trading rates and I was building my first venture there, doing essentially negative interest rates, sort of, what people used to call NERP. And it was kind of boring. It was kind of like, basically I was building this business that should have been a lot more exciting, and then opportunities kind of disappeared. Because if you trade interest rates and then rates go to zero or negative, no big funds, no one has the incentive to actually do anything and change their expectation.
Is that because they're just buying bonds, basically? Is it just like bonds?
Just because they're buying bonds and they're saying, well, then the vol goes to zero and then nothing happens. There's no expectation in just rates actually changing. And a lot of the business I was building at the time, so 2011, 2014, was all making money of some dislocations in big funds like the Brethren of the world, Bluecrest of the world, the Pinnacle of the world. These big funds were actually just had so much size that they were just pushing the prices a bit, and it's little efficiency. I was there to make a bit of money out of it. So I kind of killed a bit of my business at the time. So I went on this big road of looking into wine, looking into oil, looking into lending for collectible cars, looking into diamond, looking into rare instruments.
Wow.
So you have all these little pockets of markets that have even if we talk about Pokemon cards today, Pokemon cards about
that's right,
$2 billion market. So the red wine, the border market at the time was maybe $5 or $6 billion or something like that.
Really?
And then it just look into it, it's like, do I have an edge? Can I actually do anything with this? So I went through all these things actually, so 2012, 13, Bitcoin looked actually kind of interesting, but it was kind of boring from our perspective because my main business, I could make or lose 5 million euros or so overnight. But Bitcoin was trading on MTRs was essentially it would take you 3 weeks to get $30,000 out in cash. And then it's just
no liquidity.
No liquidity, yeah. So it didn't look like a big opportunity for me. It was very interesting and intellectually, not a good business opportunity. So that's one of the aspects. Second aspect is I was really frustrated with, so while looking for alpha, I'm looking for pockets of how to be a better investor essentially. I was really actively just in the angel investing. So I had some money left from having been a successful enough trader in Holland. And I had a form of retirement, not retirement money, more house money, not retirement money from that first venture and rates in 2014. So I reinvested a lot of that in actually angel sort of late seed investments in the UK and across the world.
And this was mostly in finance or tech?
There's a lot of tech finance, a lot of B2B, a lot of things that I found that I could help commercially some of the founders. And I would find actually often commercially successful founders as well, so very experienced people who could get a big enterprise deal. So a lot of SaaS,
right, yeah.
It sounded good on paper, but it was actually fairly difficult to scale. Enterprise sales are actually very, very long cycles. But long story short, what I found is I wanted to just mix a bit this this world of the startups and then the world of trading as such, and then they all coincided towards me. A big frustration of mine was that I couldn't really find. I went to startups investing because I couldn't find any alpha in the public market. You know what we call liquidity in crypto is very much like it's been the case in the equity market of at least 15 years. So if you think of the example I use all the time, so I think for boring you with this, but it's Amazon. I think 3 years in, you can still buy it at the end of the night. You can buy it at $1.
Yeah.
But essentially, like Uber, you could just give basically 5,500 eggs to the angel investors of Uber. They know when they listed in when it's 13 or 14 years after the inception. So people like whatever, J. Carl and Naval and so on invested, I think, about $3 million in 2008.
Oh my God.
And then, whatever, 5,500 eggs.
Yeah.
The $25,000 check was worth $325 million.
That's amazing.
So these sort of returns are expressive on paper. Just can you repeat the question? But I think it's just the gist of it is that a lot of the value was completely extracted before it reached or at the point of reaching the capital market. So just really wanted a new, more democratic system as such. I was really into crowdfunding in 2011, 12.
Okay.
And then sort of because there was a bit of the gist of the same sort of philosophy of giving most people more democratic access to investing.
Yeah.
And essentially it ended up just all merging into crypto and then just us building waiting it. So Evgeny was actually already started to build it. He was just working this out with our early CTO basically out of his essentially out of his garage, out of his living room.
Nice.
And I'm more joined as a co-founder 2017 to essentially take them out of the garage and bring the first few rounds of funding and so on, be the first, on paper, the first trader, but essentially the first ecosystem builder there. And then build more the BD side of the business and so on and so forth. So that's great.
That's great. I love that. So Wintermute is obviously one of the biggest market makers in crypto now. And I know Wintermute has other verticals as well, right?
Yeah.
Like investing, things of that nature. How would you differentiate what Wintermute does from other players in the space?
So we are first in spot crypto. So we do about 50% of the global volumes. Trade about 450 tokens, which is actually pretty little compared to the 84 Bitcoins that are, or Solana coins that are out there. But it's what is differentiating. I think we were VC backed, so it's very deep for us to have long-term capital.
Okay.
And it really enabled us to actually be DeFi centric first. So we went DeFi in 2019, and we've really had we were quite ready for DeFi summer essentially, or open finance summer as it probably should be called. It's a bit of a history rewriting that.
What a rebrand.
Essentially, to be much more aligned with long-term investors as opposed to having hedge fund investors, which was essentially one of the big learnings from my first business. So it was just the short-term focus versus long-term focus was very, very, very cheap. So now we're very long-term focused. We very much build infrastructure all day. So I think that's one of the key differentiations. A lot of trading firms have some tech that just enables the trading, but then we just build some tech that we happen to make money from trading. The same way that in Google, it's very much, you don't think of Google as an advertising company, and maybe you do.
A little bit, yeah.
A little bit, but they see themselves as a tech company. They're building tech and they happen to make money from advertising.
Right.
We're building tech and happen to make money from trading. So it's very much the same logic. So we see ourselves much more as a middleware in a lot of the DeFi ecosystem, especially. We continue to do more and more DeFi across Ethereum, across Solana. So we're number 1 and number 2 on Ethereum, DeFi. Same thing with Solana. We even have our own awareness now. So it's a question of how integrated do we want to be in the ecosystem, and it means that we do 10-30% of the volume stuff. People see a lot of that volume on chain and just make all sorts of assumptions. Sadly or not sadly, it's only about 5% of the volumes. So a lot of the times it's more just making sure that prices in DeFi are basically the same that prices in CeFi. You're asking about the side of the business, so there's the OTC side of the business that has actually grown quite a bit. That was 5% of the business maybe 4 years ago, and it's now more like 20-25% of the business.
Why has it increased so much?
I think it's just a big sign of institutionalization.
Of course.
And we moved from like having 50 or a few hundred counterparties in 2021 to having 2,000 plus counterparties now. Counterparties in terms of people who trade.
Do you expect that to continue to increase in the business overall as players come in?
Yeah, exactly. I mean, there's just 250 DATs out there, so short trader is with us and with some other competitors, but they should be already aboard. There's a derivative side of the business that we run in Singapore also. That's growing as well. It's growing a bit slowly as a former option trader. I find a bit early to do for trading. So the options space is actually pretty small in crypto compared to
very small.
I mean, it's a bit bigger now, but the old stat, 1.5% of the volume are in options, and then 25% for traditional finance. So it's a big gap there.
Is that mostly because of regulatory speed bumps, or
there's a few reasons, I think, but I think the main reason is that in TradFi, but it's two big reasons. It depends on who wants to trade it, who wants leverage.
Okay.
In TradFi, you tend to go and you get more leverage, so you can get like a 7-10x from doing a long short or such from trading stocks. But you can get 100x, you can get a lot more leverage from the option. In crypto, you can get a fund, you can get some features of like 100x or sometimes more, which no one should do, but some people do. But basically, people get leverage to the other one instead of getting leverage through options. So that's one aspect. I think the second aspect that I think is very key in transforming in a good way, like getting more price discovery and getting a whole ecosystem around derivatives. Crypto is that in TradFi, you may be a corporate and you want to hedge certain exposure.
Yeah, that's what I was saying.
The bank has some more exotic product that they sell to the corporate, and that exotic product the bank itself is going to hedge and actually ends up on the equivalent of a derivative, the equivalent of market. And then so you have this whole economy around it that has a more customer-facing relationship on the bank side. And then people need to hedge, and then it's raise up floor. That trickles down the option market, the more vanilla option market. That doesn't happen that much in crypto. It's starting to happen. We do more and more bilateral trading for derivatives. So that's happening on our side, but it's very much the assumption of it. So I think we're just far from 25% of them.
Yeah. So presumably, as institutions and more traditional financial players get into crypto, they'll almost kind of force the issue of options being more and more important.
Yeah.
Right, because they want these hedging instruments.
They want. There's different needs. There's a need for hedging. There's a need that's for extra leverage, there's a need to be filled because there's pubs, there's other that are actually more liquid. But there's also a need that will be very interesting. It's a need for to create more yield. So there's only about if you borrow Bitcoin or so, when we borrow Bitcoin, even at current charge, it costs just maybe 2.5%.
Yeah.
And if you think of all the supply out there and all these DATs out there, we'll need to find some yield. So I think a lot of people will actually go down the route of being just more, maybe structured, maybe all the way down to structured products. I don't know, but at least something a bit more complex. Getting some yield out of essentially an asset like Bitcoin that still moves about at the 30-35% volatility. So which means essentially it still moves 1.5, 1.75% a day. It's a normal Bitcoin.
Yeah.
So it's very much the key to just create a bit more yield as well.
Very cool. Okay, I have two follow-up questions, moving back a little bit, that I'd like to address. First question, you said that you were first in spot. Is that centralized and decentralized, or is it?
It's global market. Decentralized, if I consider we're between global one and number three, depending on the days.
Yeah.
But yeah, globally it's about 60% market share. The reassuring piece of this is that we tend to have high market share when things move.
Okay.
Which means we have a better infrastructure than better to all the people just get a bit more conservative when it's a bit more turbulences and such. So I think it's a reassuring factor.
So yeah, just again, for my audience, a lot of market makers, when volatility starts to spike, they remove themselves from the market a lot, right?
They either remove themselves or they just go wider,
Okay,
which means that they are less likely to
right.
to get trades in this.
And because you have more infrastructure or maybe more confidence and whatnot, you can.
Yeah, so the idea is that I mean, as the infrastructure is good, as you have as you gain scale, essentially, so as you have essentially access to cheaper capital as well, you can actually quote tighter and you make things more efficient for everyone. Really.
Yeah, and then especially in those moments of volatility, you can step in and really take lion's share of the volume.
Yeah, and then it's across CPIs on the screen. It's it's also off the screen through chat. There's a lot of when I mentioned OTC figures earlier that are very much growing. A lot of that OTC is also with some retail apps. It's also a lot of automated OTC as well.
Okay.
Through an API, so that's growing quite a lot as well.
Okay. And I heard you say this. You said you like to think of yourselves as a tech company that makes money off of trading. I really like that framing. I've never heard that being ascribed to Wintermute. I was wondering if you could just flesh that out a little more.
So it means that we just focus on building trust, and essentially it's the quality of the flow, the quality of the liquidity, the quality of the trading that perspires, that basically comes out of the infrastructure. It's essentially the product, and then that's what inspires for good coding and really good people. When we deal with I think there's two different big, obvious angles. One, when we help some foundations with liquidity, we borrow from them. We can have a better presence today. It's a bit of a virtual cycle because it means that if we do well with the foundation, we get access to good contracts. We get access to good contracts. We also have good presence on exchanges. We do good work on exchanges. The exchanges are reassured that we'll be in the order book and we won't leave when things move around and so on. Which means that they won't have as many complaints or they will have actually good service for their own users, for the exchange users of themselves. So it's very much the dimension of having a reliable infrastructure there, and just really enable the rest of the business. And after this, there's a whole commercial side to the business on making sure that the tech that you built, it's like any other tech business, the tech that you build, that people actually know about it.
Right.
People actually know the value of it. And sometimes we still, I think a lot of founders are very, very knowledgeable about the blockchain technologies and the tech itself. They're not always super knowledgeable about finance and what is the good market making and so on. So I think it always needs to be fleshed out. It's always good to have third-party validations and have exchanges typically that helps. Funnily enough, there's a lot of DeFi-related projects that we signed in the past that were just basically coming to us just because they knew how much we were building into fun.
Oh, cool.
Because they just see
how
much you're trading on that.
I'd also imagine just going off this virtuous cycle, if Wintermute is not market making, it probably raises questions. Like, well, hang on, why is it Wintermute involved?
It doesn't have to be about it. It's not always bad. Sometimes it's very much a opportunity. It's more akin to a partnership where we grow these projects on a service agreement per se. So it's like if you do an intro, it's very much on the best effort basis. So it's not like there's this and then there's we have 100 small competitors that is all trying to do pretty much sometimes they're just happy to trade at a loss. So we won't necessarily say yes to that. So it's not always a bad sign. I think there's a good of there's some healthy or some less healthy competition there. But I think the reassuring piece is we sometimes see the foundations just sometimes leaving and then they come back. And it's like, okay.
Are you in those circumstances? Are you gracious or do you? No.
I don't put it in people's face. I'm very. I don't. I think.
Well. Welcome back.
That would be pretty.
I'm just joking.
No, I don't do these sort of things. I hope my colleagues don't.
Anyway.
No, it's more. I think it's just being respectful that this is my fourth company, and I think it's just. I like it's very difficult as a founder to just understand like every little piece of the business, and then these guys have been very much like we're still not listed at good, and then probably won't list for quite a long time. Like what a lot of founders end up doing is like they have to build the tech and on the fly, but also this thing essentially listed very very early on. And being dealing with the noise of very often dealing with the noise of the community and something like, and it's even less executive than they are finance and so on. So I don't going to blame anyone. Very politely just I'm trying to do my best to make sure that people understand what we do. If we can. And then choosing your battle, like who needs to really understand your business and like
Of course. All right, so crypto is kind of famous for like market inefficiencies. I'm sure that's one of the big reasons that drew you to crypto early on. Is being able to step in and kind of make the markets more efficient. I was just wondering, today in 2025, do you see any market inefficiencies in crypto that like surprise you still? Like, good Lord, I can't believe this thing or this aspect is still so inefficient. Or is it just everything's gotten better and is continuing to get more efficient?
I think a lot is done better. Like it's when we came into crypto in 2017, it's funny because you're saying that we were early when I was raising for 2013, 18. But everyone told me that I was late. And it's funny because I think there's different generations of market makers who actually made money from like 2015. There's a few of these famous Chinese VCs.
Are they still around?
No.
Yeah, that's what I thought.
Most of them like just halving some like South American Bitcoin against some Chinese Bitcoin or whatever, and making like 2% basically like clicking, which is just impossible to do nowadays. And it's not what we asked them for. And nowadays it's just really shifted from like, I think it's very much shifted from like some sort of geographic arbitrage in the same asset to much more like very much having sufficient balance sheets, having sufficient infra, and then making less than a basis point. So, for trade pretty much, and then very much trading very, very high frequency. So we trade like 4, 5, 6 million times a day. And yes, things get more efficient, but it's good. Like it's not a bad thing. Because as things get more efficient, it accommodates for actually bigger players to come in. And as you said, like it's getting more efficient in the way that bigger players, allegedly, they have more money. So allegedly, they're more knowledgeable about managing their money and then thinking of what a certain asset should be priced at. And then you just get smarter people in the room. So obviously, per trade, the margin goes down. But then you have much bigger players involved. So essentially, the volumes actually grow exponentially as well. So you think of like the biggest days we had like in 2021, it was about $26 billion or so, but on average we trade like $3 to $5 billion a day, and now it's more 15. Wow. So sure, there's less margin, but there's a lot more volume as well. And we've had days earlier this year in January, it's like we nearly see like nearly $40 billion of daily volume.
Yeah.
Which is a sign of this of socialization, just maturity in the space. It doesn't have to be just institutions. But it's good for everyone. It means that when you're buying an altcoin, that you don't have to pay like a few percentage points.
Yeah.
So, but to your point, like, is unique opportunities. I think people have been going, down the tail of like the very long tail of maybe memes because of this, and it's tricky because it's so noisy. So a lot of memes, and then it's like, you just need to try to find that like top 20 out of the 84 million is a bit difficult.
Yeah.
So there's opportunities there. I think people have just looked opportunities more in DeFi and more niche points. There's opportunities and if you have the right infrastructure to face some of the retail apps and so on. But again, it's much more TradFi looking opportunities, to be honest.
Okay. But going forward, it's more
I think
opportunities.
I think it looks good. I mean, that's more for us as a business. I think I think there's still a lot of, as retail, I think there's a lot of interesting, farming opportunities. There's a new cycle of perplexes. So
that's the new meta, right? Perplex meta.
I think this is the third cycle.
Since you brought up the subject, do you have any like general thoughts about this so-called new Perplex meta?
So
is it going to be like a flash in the pan kind of thing, or is it going to does it have legs?
No. I think it's a different side. we have this thesis for that. So essentially, the idea explores so like GMX could run and then so Hyperliquid could fly. That's the question is,
I like it.
I think the way I see the space, and it's quite a consensus on the ventures team side as well. So we don't know how that for the venture side of it. We have quite a few investments in like DEXs and credit related and stuff. The theme or the thesis nowadays is very much that we think that CeFi is going to look like TradFi more and more. DeFi would look like a CDFi, which is already the case. But I think it's more like more like a non-custodial and CeFi features and such.
Yeah.
DeFi non-custodial trading percent. And then it's like the question of like they want everything and it's get start. I don't think that's the case. I think there's a lot of interesting plays that they have with the others M3 and stuff. So getting Ajax and getting what is it called? Base logs on so essentially bringing your liquidity to them and just doing your revenue share. I think we really see the space and like much more than only go for it.
Okay.
And we see what the means. I think Lighter is progressing.
Yes, I heard of. Yeah.
And then it's an interesting thing.
Do you so my co-host Graham over there and I've talked a bit about this, but do you see this like perp-dex meta being kind of like a Pareto distribution where it's going to be like a winner take most due to liquidity, and so then you'll have like one or two major perp-dexes and then like a long tail out, viable but just like smaller, more niche.
So it's funny. So for CeFi, it's been very much about regulatory arbitrage for many years.
Yeah.
And I think for DeFi, it's been much more about the same 1,000 traders just shifting from incentives to incentive.
Farming, basically. Farming airdrops and things like that.
And I think that's the reason why Hyperliquid, even Lighter like this, so like
Astra maybe too.
So everyone is just much more and more cognizant of basically like, we're doing like a season 1 and 2, but there will always be a season 3 or 4. So stay on the platform kind of thing. For me, the key piece to look at would be really like, and I had some hope actually doing this, is that when is crypto user acquisition? When does it fall from being just people are gonna account on Binance and like people are gonna account on CeFi first.
Yeah.
Then they realize, I don't have access to the meme I want to have access to, or I'm a bit worried about my clients, or there's someone in compliance, someone who blocked my account again, and I just want to have control about this.
Yeah.
And then people move into DeFi. So I think the question is like, once you get DeFi, DeFi to actually recruit users to crypto to trade away. And I think that's the key piece. And I think I had some hope with Moonshot when the Trump part actually goes.
So I was going to ask you about Trump. Yeah.
Allegedly, there was it 400,000 users on these figures in one day. And suddenly they left the rest.
Interesting. Interesting.
So it's like the question of like, how do you get just really like user acquisition through DeFi? I think whether it is the oligopolies or the kind of next probably win most of them.
So would it be fair to say you think this perp-dex thing, we're still early days, and it sounds to me like one key metric you'd be really paying attention to is like active users, new active users, and not like the same old 5,000 to 10,000 users that are just going from
say 1,000.
Sorry, saying 1,000 users going from perp-dex to perp-dex. That's kind of what you're focused on.
That would be my the filter. So.
But still very early.
And then the second piece is that if you manage this, is that when it's there more prices covering more liquidity in DeFi, when does it flip? And then the flip is very much when you have liquidity with all the features that you actually find in CeFi and
Do you think eventually it will flip? Like these like DeFi-ish perp-dex platforms, will they ever?
More access to coin for spots.
Maybe not.
Okay.
Oh, really?
For options, it's very difficult.
Okay.
For options, the nature of bonds is when you trade an option and you hedge it, usually on the same exchange, the rationale about the margin efficiency It's actually very difficult to have centralized other payments. And maybe someone can solve this.
All right. I don't want to get into follow-up questions on that because I know enough to know that I'm out of my depth when I'm trying to get into margin stuff. Let me ask you about like the different regions of crypto.
Yeah.
So this is kind of connected to liquidity and stuff like that. So crypto is ostensibly borderless.
Yeah.
But I was wondering if, from your perspective, are there any kind of like liquidity differences between like Asia, Europe, America, maybe the Middle East, or is it all just kind of one big market for you? Like one big borderless market.
For us, it's not. It's not fully borderless. Of course,
Yeah, I mean, like Korea, for example.
So Korea is still not in Korea. Maybe in 6 months time, maybe it will change completely. But then, it's not an easy market as easy to access. No, globally, it's I think West versus Asia. I think it was really useful for us to be in London first. Be very much like an individual place to trade in the US, trade in Asia. I think it used to be much more fragmented, where all the retail users, a lot of the retail traders were essentially in Asia.
Oh, really?
There's a good presence in the US as well, but it's a bit. I think mostly most of the volumes being, when you see a lot of the Asian exchanges having very much taken over the lion's share of the business.
Yeah.
I would say it depends why they're talented as well. So we found a lot of talent, and more trading talent, and Western Europe and the US as well. There's a lot more tradition about trading houses and so on in the US than in Asia. So I think it's a bit of like the institutional money that comes in. Like we as a firm, we have more and more focus in the US nowadays, because you see a whole tranche of TradFi essentially, getting into crypto. Mostly in the main coins and such. I think there's a bit of difference also, like about which asset people trade or which coins people trade. It's more and more model these days in terms of like new trades from what I think. Around gaming, like a lot of the Southeast Asian communities and so on. If you go to Vietnam, it's quite impressive because they had some political discontent with like who was pro crypto, who was against crypto, but essentially they have a good bit of 20 million people who also crypto in Vietnam, for example. So you have a lot of these like Asian pockets that are quite interesting. Like Indonesia is quite interesting, but it's very difficult to bank there. So it's all about, you have all these Asian pockets of retail, especially. But the institutional money tends to be much more Western money. So with the new flow that comes in, it's very much it's like Western money. We've seen this in a lot of Asian countries where essentially Korea still doesn't have an ETF, Japan doesn't have an ETF. Here you can trade through an American platform and you can actually buy your hybrid and so on, and it's not not that easy. And it just creates a bit of a gap. So these gaps still exist. There's also a bit of tax differences.
Yeah, of course. Japan is terrible.
I mean, Japan is simply like 50%.
Yeah, 50%. If you reach a certain amount, the top
exactly.
50.
That's what makes guys like Metaplanet very popular also. So, long short, there's some discrepancies, but it's really not as pronounced, especially since it's made for about 2 years now that it's about.
Yeah. So, but you would say roughly though the divide would be like you said, east and west.
Still.
Yeah, still. And then within Asia, it sounds like there's still a little fragmentation. Obviously, Korea's off on their own a little bit. And then like Japan, I guess, and Indonesia, Singapore. Those are all kind of one market, I guess, or still fragmented?
Indonesia is fragmented as well.
Oh, wow, yeah.
So it's all it's and it's all about who gets access to banking.
Regulation rears its ugly head in crypto. All right, I have one more question for you, sir. I was just wondering if how much Wintermute, yourself, the people within Wintermute pay attention to like macroeconomic data coming out and or like traditional finance to inform what you're doing within crypto, like on a day-to-day basis, and then on longer time frames.
It impacts some of the derivatives trading. I think it impacts more people we trade with. Macro, it helps and doesn't help. I think we're all hoping that, Bitcoin is typically like a protection against like prices and stuff like this. It's not really it's like equities. I think it's a function of as a business itself, so since we trade market neutral, so we don't make money, things go up and down. Apart from the venture side, where we long, we very much, volume sensitive as such. So volume sensitive meaning like we make more money if there's more volume as such. That means that if there's a cheaper capital, there's cheaper money going around, there's more, say balance sheet money printing, then of course we can do that as no ranks and actually helpful to business. It also means that we're actually borrowed. So we have a balance sheet. We don't have any external funds process. We don't manage third-party funds, but we do borrow from people. And then we borrow typically, our cost of borrowing is typically Bitcoin basis. So,
Okay.
borrow from some collections in Mickey. We borrow from a lot of things on the silver and stars and funds for the trading percent. And the cost does go to 8-9% so unrealized. When base rate is out in 4%. So it's very much so, my focus impacts the business from a financing perspective. It impacts the business to the second degree when it's easier to finance, so you have to put some amount of leverage. There's a wealth effect, especially that's too far.
Yeah.
So new hires are usually useful for everyone, new loans. You can see what next sorts of reinvestment. So so there's some secondary effect on cycle, but ultimately the way you build a market-making business, it's very much you kind of like building all these buckets all day, and you're hoping that it rains.
Yeah, nice. I like that analogy. Yeah.
It's the same way like we're building infrastructure all day. We don't know when it's gonna rain.
Got it. Yeah, absolutely. So I guess my question wasn't framed exactly how I wanted to do, but let's say that an FOMC meeting's coming up.
Yeah.
Old Jerome Powell's going to get up there and say some stuff. Is it kind of a thing like, okay, all hands on deck, we gotta be ready for this kind of thing, or is it you have your buckets already in place and you just are like, okay, let's see if it rains when Powell speaks, or is it like, all right, make sure everyone's around just in case there's volatility around this?
There's on the spot side, it doesn't impact the business. On the derivative side, there will be like 2-3 people who will be on deck. Just because there's many more parameters for the derivative space to play around with, or just to monitor. But yeah, it doesn't.
Awesome. And that's probably how it should be, right? So you don't get those calls.
100%.
Exactly. All right. Well, thank you, sir. I really appreciate it. And I hope we can do this again in 6 months to a year's time.
Pleasure. Thank you.
Thank you very much.
Sure.
All right. Up next, we have my co-host, Graham Stone. He will be going solo, talking to the co-founder and CBO of Threshold Labs, Ken Sar. Stay tuned. That'll be coming up soon. Free self-custody Bitcoin. scan this QR code right here from within the Bitcoin.com wallet app. You better hurry up. Anyone can get it. Oh, is it still there? Is it gone? I don't know.
When crypto leaders want reach and results, they choose Bitcoin.com. A global audience, massive reach across social, web, and mobile, engaged users who trust our brand, and campaigns that move at the speed of crypto. From press to podcasts, X to SEO, display ads to rewards integrations in the app, Bitcoin.com delivers exposure across every channel that matters. Our clients include the world's leading exchanges, wallets, and gaming platforms. When they need impact, they trust Bitcoin.com. Get your brand where it belongs, in front of millions. Partner with Bitcoin.com Media today.
I got into crypto last year when I joined Bitcoin.com. It seems like it was the right time because when I joined the company, everyone is into crypto, and I guess it influenced on me. And then I started to get into crypto, and then I started to buy, and then now I'm like a little bit of a DJ now.
So I got into crypto sometime in 2014 or 2016, I can't remember. But I was farming Ethereum. I had like 2,000 plus Ethereum at one point. But it was when it was worth nothing. It's like 1 to 2 USD each. So I sold it off. I made a good profit. But 7 years later, I could have become like retired. So the only reason we're having this conversation right now is because I should have held.
No, when I first heard about crypto, it was from my ex-colleague. And it was about year 2017. I was totally new and I don't know what about this. And then come to year 2019, at end of 2019, I was invited by a friend for a seminar. And that was the first time I know what is cryptocurrency and what is Bitcoin. I thought that it's very interesting into the technology and the blockchain kind of technology. Then I tried to, firstly into future trading and spot trading, and more into knowing about different exchanges, the wallets, and then into meme coins. So I then become so degen into playing or trading memes.
I went into crypto space at about year 2019, where I was working for an angel investor that is having a portfolio company in crypto space, which interests me quite a bit. So I decided to venture into this field.
I got into crypto while I was working with agencies on finance-related clients. And I always felt like crypto was this interest that I could never really speak to my colleagues about. So it's really interesting entering a crypto company where my interests in crypto become part and parcel of daily life.
So at Bitcoin.com, I'm the FP&A manager. I translate accounting data for the management because, it's just complicated. So the management wants to get insights, right? So I provide the insights from the data. So I'm kind of like a translator, so to speak. A financial translator, if you will. Yeah.
I'm the growth lead. And what that means is leading initiatives that lead to growth, whether on partnerships fronts or within our internal departments.
I'm the compliance officer for Bitcoin.com. Basically, I make sure that, we stay regulated in certain countries and then we follow the rules and regulations that's being set off.
I'm finance director of Bitcoin.com, so oversee the accounting tax function as well as treasury.
I'm actually working in the finance department, oversees a 2 cost center, plus in charge of the revenue-related data transaction. Basically for me, I have been in Singapore for more than 30 years. So I like the cleanness and the safety in Singapore. The environment are good. You have to mix around with positive people, and it's a hub for most of the Southeast Asia countries, most of the people internationally. Yeah.
I like living in Singapore because it is safe, it's clean, and there's lots of food because I'm a foodie.
I would say because it's my home, I'm obliged to like it. Like you can't really beat the safety and the cleanliness we have here with some of the things we take for granted, like the MRT system. I think the weather is very predictable, which is good. So a lot of people complain that, oh, Singapore is only rain or shine. But that's good, right? Because if you go to other countries, hey, suddenly you have a typhoon, a super typhoon at your doorstep. You want that? And also Singapore is also free from natural disasters. So yeah, that's something we take for granted. I'm sure a lot of Singaporeans have never been in a situation when the ground was quaking below you and you're just fearing for your life.
It's really nice to live in a kind of a hub where you have easy access to different neighboring countries. And in that sense, Singapore is situated similarly to a city in Europe, I would dare say, where if you wanted to access Malaysia, Vietnam, Bangkok, you're less than 2 hours flight away. My colleagues often say things like they like the food and they like that it's safe. I have no quarrels there. I've lived abroad. I've realized that, like safety is something that you can't really take for granted. Efficiency is also another thing that I will rate quite highly on that list because when you live in Singapore, things just work.
If you're considering to live in Singapore, the advice is go explore the whole city. Avoid all the fancy restaurants that you see in the malls. Visit the local coffee shops. Visit the local hawkers.
I think if you want to live in Singapore, you have to be earning quite a bit of money. Unless you taper your expectations and live like a local, you can get a flat in HDB. I feel like a lot of foreigners, they tend to pigeonhole their choices into like, oh, I have to live in this area because it's the cool place for foreigners to live in. Oh, I have to spend this amount at like this upmarket supermarket when they can be actually spending their money more wisely. So I've actually talked to some ex-colleagues. I've reduced their expenses easily by 60-70% by just making them think about whether this is a smart choice or not. So I think instead of phrasing it as earning more money, I'd be like, spend my money more wisely and don't be like compelled to think that you have to spend this amount of money just because, yeah.
The train will be crowded, so try to avoid those like the timing that at least like working hours time period, so that you won't be stuck in the crowd. Yeah.
The first thing to consider is to find a suitable accommodation because the rental expense is quite high. The rest of the stuff are relatively cheap and manageable. Probably they can also take a chance to travel around because Singapore is quite near to all the neighboring countries very convenient.
On a hot day, go try a sugarcane juice. Make sure there's a lot of ice in it. On a rainy day, maybe go for a bak kut teh. That's like a pork rib soup. It's really tasty. But TLDR, food in Singapore is really good. Please feel free to explore. There's no limits to the next frontier. Like there's new tech being shipped out. There's new projects being built every day and everyone just wants to do something better. I work with great people and I dare say so because it's a very collaborative environment. It's very different from the types of traditional finance marketing roles that I've had in the past. Of course, things can get quite rough and it's always very fast paced. It's an industry that doesn't sleep.
Like even people don't really know the industry, it's quite easy to go into this space. So you get to know different kinds of people from different fields. So it's quite interesting to know different people.
Because I love crypto, so I was trying to look for an opportunity into crypto industry. In my previous job, I will not allow or so kind of a bit sensitive to talk about crypto in such a topics. So, but in the crypto related company, when I start to join the company, I feel like everybody is talking about crypto. Once I step into crypto, I would like to have like environment that people is talking about the same topic. Yeah.
I guess it's the people. Because in crypto, it's all about all these, I guess we're all younger and it's just more energetic.
I feel like because I'm a crypto native, it feels very second nature to me. So it's something I do on a daily basis. So I also have the knowledge to help people who want to get into crypto. In fact, Humphrey got into crypto through my recommendation because I was insisting, no, you should onboard STAX. It's like, no, it's so troublesome. I'm like, no, it's not troublesome. So one good thing about working in crypto is, you can expose your friends to crypto, but of course what they do is their own choice. So that's another thing. But empowering is better than being ignorant, right? So that's my point of view.
We are giving away free self-custody Bitcoin during our live conference coverage. First, download the Bitcoin.com wallet app. During our conference coverage, we're going to show you these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner to scan these golden ticket QR codes. Swipe to automatically send the Bitcoin to your self-custody wallet. But be ready, be fast, because anyone watching can get the Bitcoin.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always reclaim your Bitcoin or swap
And we're back, and I'm here with Ken Sar, who is the co-founder and chief product officer at Threshold Labs. Ken, thanks for joining. We interviewed Ken last week at Korea Blockchain Week, and in that interview, we covered all the basics of Threshold Network, the wrapped TBTC, the wrapped Bitcoin it enables, TBTC, where that TBTC lives, and what people are doing with it. I'd encourage everyone to go back and watch that full interview to get the full picture. But for the benefit of our audience, Ken, could you get us caught up? Just give us the high-level overview of Threshold Network and TBTC.
Yeah, absolutely.
Thanks.
So thanks for having me on again. It's great to see you. So Threshold is a network of nodes that basically allows us to mint this decentralized wrapped Bitcoin asset called TBTC onto Ethereum, Sui, Starknet, Solana, any destination that you'd want to use your Bitcoin, basically. And we differentiate ourselves from other wrapped Bitcoin products by the fact that we're a fully permissionless product, and our custody is custodied in a decentralized way via these nodes. And what that enables is really low friction entry and exiting between Bitcoin and DeFi, without needing to go through a centralized entity, through a KYC custodian or anything like that. You can simply bring your Bitcoin, deposit it via Threshold, and take your TBTC and go and use that in DeFi. So we've been around since 2020. The V1 went live in 2020, V2 in 2023. And since then, we've grown to about 700 million TBL, steadily growing as the DeFi space for Bitcoin continues to grow. And we're focused primarily on building the real Bitcoin economy and what that looks like and how we create a legacy of Bitcoin use and utility in global finance.
All right, great. Thanks for that. So in our interview last week, you mentioned about Threshold's integration with Mezzo Chain, which is a Bitcoin lending app chain. Could you go into that? Like, is that different from the wrapped Bitcoin TBTC that's put on Ethereum? What's the difference?
It's actually the same asset, which I think is quite interesting. Because being a wrapped Bitcoin, like we have the Bitcoin kind of staking side down in the fact that you have your Bitcoin, it's locked and it's redeemable for TBTC. So then you can use the programmable logic of programmable chains like Ethereum or different virtual machines and impose the staking logic in smart contracts on that chain. So there's this approach of doing like native Bitcoin staking, which we've seen other projects do, like your Babylons and things like that, where they have like a Bitcoin locking mechanism on Bitcoin mainnet. And what we've done is solve for the Bitcoin custody side via Threshold Network, and then enable these staking products on mainnet, on these other chains. So what Mezzo has done is taking the TBTC asset in the programmable sense and relying on the trust guarantees that Threshold is providing on the Bitcoin custody side, and then they're doing their own staking mechanism on their own chain using TBTC, which is effectively the same as staking Bitcoin, using Bitcoin as the security asset for consensus on that chain. And instead of it being on Bitcoin mainnet where it's locked, it's being locked at the TBTC level, at the smart contract level of the system. And then Mezzo has used TBTC as a staking asset in their protocol to secure it with Bitcoin, and then enabled an entire Bitcoin ecosystem on top of their chain with TBTC as a native gas asset like you're using Bitcoin.
Okay, very interesting. So the way I'm understanding this is you've got, on the one hand, wrapped Bitcoin that lives on Ethereum or EVM chains or other chains, and then on the other hand, Bitcoin side chains. Is that a decent way to separate between these two ecosystems?
Yeah. I think that's a good distinction to make. It's subtle, and if people aren't intimately familiar with this ecosystem, maybe it's not obvious. But you might have like a Bitcoin L2, which has its own Bitcoin connectivity. They have some kind of blocking mechanism or some kind of relationship with Bitcoin mainnet. And all of these chains are kind of just that in name only at this point, because we don't have functionality to verify these proofs on Bitcoin. So that's why people are talking about BitVM as a way of proving proofs on Bitcoin of chain states. And when that comes online, then you have these L2s that can prove their state to Bitcoin, and they kind of roll up to Bitcoin in that sense. And each of these L2s, they want to do their own wrapped Bitcoin asset. So they want to do what Threshold is doing, but for one particular ecosystem. And I think this is a real issue in terms of liquidity fragmentation and inefficiency in the market, that even if all of these chains do well independently and they grow and scale their TVL and create meaningful Bitcoin value and volume on their chain, then it's still going to be fragmented from these other ecosystems that want to do exactly the same thing. So instead of threshold being pinned to one particular chain, we're actually going across the whole board, and we're providing that Bitcoin connectivity layer to all of the destination chains, places that don't want to be a Bitcoin L2, like Ethereum or Solana or these other chains. And we get a much more efficient liquidity landscape as a result of that, because instead of having these fragmented assets per chain, where if you want to interchange between them, then you're getting slippage or transaction fees or whatever it might be, you can actually go directly if you're going to use TBTC. So we're trying to unify the liquidity landscape between these different destination chains and encourage them to use TBTC as their gas asset or as their collateral asset, because we'll be able to scale the economy, Bitcoin economy, much further in that way, in our perspective, rather than seeing this fragmented landscape.
Okay, so Bitcoin native DeFi, you're saying it's only that these Bitcoin L2 sidechains, whatever, they're only that in name right now because something is needed in order to actually make that possible. So do you think that when that is actually possible, that the Bitcoin native side of things will actually start to replace the drafted versions of Bitcoin?
Well, I think it comes down to terminology to some extent. Like the term like Bitcoin native, to me, that would mean everything is executed on Bitcoin mainnet. And what that would say is that Bitcoin has changed its architecture sufficiently that you can actually do financial transactions on it. So right now, by design, it's impossible, effectively. Like a 10-minute block time and finality being longer than that means that you'll never be able to do like high-frequency trading on Bitcoin unless that block time and the entire architecture changes. You probably will never see that with a blockchain like Bitcoin, at least in the short term. So anything that's like Bitcoin native or being marketed as Bitcoin native right now, a lot of the logic and execution, that will all happen off Bitcoin chain. So it might be native in the sense that it interoperates natively at the L2 layer with the protocol or with Bitcoin, like if they have a side chain or they're proving their state back to Bitcoin mainnet via BitVM or one of these upgrades. But without that, the term Bitcoin native is really just referring to these chains that have close proximity to Bitcoin or a deep integration, but they're not actually on Bitcoin mainnet per se. There's still off-chain trust, off-chain execution that takes place at some level of the execution process. So there might be a moment where your Bitcoin is not purely under your control in the sense that you're authorizing somebody else to perform transactions on this side chain, which then settles to Bitcoin mainnet. Much in the same way that we're all doing it now, using TBTC or other wrapped assets on Ethereum. Because these are interchangeable with Bitcoin mainnet, it all matters when settlement actually occurs, like when you're actually taking a Bitcoin and settling it back to Bitcoin mainnet. And I think these L2s and these native Bitcoin experiences want to bring that settlement time much lower and bring it closer to Bitcoin mainnet, which is also something that Threshold will do as well. In the fact that these technology upgrades are things that we're exploring and will probably integrate at some point. We don't necessarily want to be forced to do that, given we have a large capital base already allocating to Threshold. But these are things that we can integrate at a protocol level. As it stands, based on the technology that's built, we have the best solution for Bitcoin custody and Bitcoin interoperability with DeFi. And while these things develop and they get finalized, BitVM2 or Opcat upgrades on Bitcoin mainnet will enable a new ecosystem. And we'll explore that technology when the time is right.
Okay. So last week during our interview, we had quite a few good comments from in the posts on X. One of them was from X user TruthSeeker28, and his question was: TBTC bridges Bitcoin into Ethereum DeFi ecosystem without centralized custody. As Bitcoin L2s mature and native smart contract layers emerge, how will Threshold ensure it remains the preferred cross-chain liquidity solution rather than being displaced by native Bitcoin DeFi protocols?
Yeah, I think this marries really well with the conversation we were just having. And I think the short answer to that is by being agnostic as to the execution environment. So whichever chain, like be it Ethereum or Solana or Sui or Starknet or Meso, whether these chains, they want to do the execution, they're building their liquidity pools, they're building vertical integrations to do integrations for user experience via apps or whatever it is. And beneath the hood, Threshold is doing the Bitcoin settlement effectively. So we're providing the guarantees that Bitcoin is underpinning this financial system that is being built in these execution environments. And any L2 or other chain that wants to do the same, they're effectively trying to build their own economy, their own liquidity, all these things. And I think that's great generally for the space. Like, let's all build Bitcoin use cases. But when it comes to meeting the need and the scalability of global finance and Bitcoin at scale, I think we need something that interoperates between them to make things more efficient. And Threshold is positioning ourselves for that, where we can be agnostic of the chain beneath it, but make sure that we're providing strong finality guarantees for Bitcoin finance.
Okay. So you said that the TVL of Threshold Bitcoin, TBTC, is around 6,000 BTC. Is that correct?
Yeah, it's 6.3 since we last spoke.
Okay, so it's a steady organic growth, I think is what you said. And what are the strongest drivers of that growth today? And is it like integrations? Are there incentives? Institutional adoption? Where's the growth coming from?
Yeah. I mean, I think it's a really interesting point to contextualize ourselves in like Threshold's growth and the industry's growth generally. In that when Threshold was starting, we did a lot of liquidity bootstrapping. We took TBTC from 0 to 700 mil TVL as it is now. And that took us incentivizing on-chain markets, like distributing T-token. And that's still an ongoing program. But our strategy has shifted away from token incentives, which I think is an amazing innovation that DeFi has created, but it's just a short-term solution to an ongoing problem of how do you establish a new market? How do you, it's like creating a global stock exchange on these decentralized protocols. And how do you ensure there's liquidity and management and sufficient depth and low slippage and all of these things on that market? So bootstrapping is a great way to kind of get your retail people in or people that are kind of more hobbyists. But then when concentrated liquidity management has come out, you start to see these sophisticated shops with real strategies and real management history and practice executing their strategies in these decentralized markets. So managing the on-chain liquidity and making money for themselves. So I think taking it from an emissions type model and putting it into the reality of like, we need sustainability. We need to have an ecosystem that thrives on its own merits, not based on token speculation. And that's what Threshold is primarily focused on now. And what we're building is sustainable pockets of the Bitcoin economy. And that means bringing these sophisticated market makers, these capital allocators, these people that want to use Bitcoin and generate Bitcoin yield and connect the different dots of the Bitcoin economy, like whether it's a C5 product that's using TBTC under the hood, or if it's a purely DeFi strategy trading on a particular market. All of these use cases can be enabled and connected via Threshold, which are basically just rails to connect those pieces together. And so we enable all of these different user types to come on board. So whether it's somebody, an institution that wants to do active liquidity management on a decentralized exchange, or it's more on the kind of yield strategy side, where people are using their Bitcoin to borrow stablecoins and then executing some kind of basis trade strategy or some other kind of stablecoin-based yield strategy, then converting that back into Bitcoin. So we really enable all of the use cases out there. And I think that the institutional adoption curve is going to start to see more of these different liquidity use cases taking place.
Okay, so let's move on to the governance and execution. So you described Threshold DAO streamlining the governance and moving product execution to Threshold Labs. So now that this transition has had some months to play out, what's working well?
I don't want to get too ahead of myself and say all of it, but compared to running a product execution strategy via a DAO versus having a centralized entity that has some ownership over the decision making in terms of like day-to-day management or product strategy. And the DAO serves its purpose by kind of ensuring all of the checks and balances are made. The security is up to scratch. There's this governance process that ensure all of the checks and balances are taking place. throughout that process. So it's not just like Threshold Labs, our execution entity, just pushing updates onto Threshold Network. It still goes through this decentralized governance system. And I'm personally really thankful to have that. So as a labs company, we go through all of the due diligence that we need to do. We go through the audit process, do our security checks and all of our QA testing and these things for new features. But then we also have the DAO that has its own objective of securing the protocol that is actually independent of Threshold Labs in itself. So it needs to check against us as well. So we have these layers of security that guarantee that things are that are being upgraded from the protocol have gone through this rigorous process to ensure that. So I think having the separation of like risk management, protocol or liquidity management and these things independent of the labs entity, and then having the labs entity strongly aligned to the best outcomes for the network and the token holders by creating the products that people want to use. I think this dual model is how we're going to see most decentralized products come into life, with centralized execution but then decentralized management to ensure that we don't have these honeypots and central points of failure that old products have had.
Have you noticed any trade-offs in terms of this model?
Yeah, I mean, I think the biggest trade-off has been like the community itself, which has taken a hit. It's when you have like a more open DAO structure, it's just more kind of like jobs that people can do or committees and things that people can join. And while these committees, were operating in the best interest of the DAO and perhaps weren't as efficient as the old structure, as the new structure, I should say, it did create a really strong sense of community, a lot of people involved and a lot of decision-making and kind of open governance that takes place.
Perhaps more advocates organically growing.
Exactly, like more ways to get involved in a practical sense. Whereas now it's more limited to the governance side of things, and there's the threshold committee and people can still participate and be elected into that process. But there are less seats available. So the community, in terms of like those that are actively day-to-day working on Threshold, has shrunk somewhat, despite us still having like the strong brand presence and awareness. I think like the kind of social fabric has changed to some extent. But that has also created more abstraction between execution and management, which I think is healthy from a security perspective.
Okay. All right. As we move towards wrapping up, let's talk about the roadmap and competitive landscape. So you said Threshold's revenue model today is bridge fees, but we'll shift towards structured products and yield strategies. Would you be able to share any examples of products that you have in mind or that are in development?
Yeah, certainly. I think most of what we have is still like before the official announcement, so I won't get into the specifics. But a good example is something like a vault strategy, like I was talking about, some kind of liquidity management strategy that to a user is a yield product effectively that says this is the amount of Bitcoin return that you could expect. Here's some of the long tail history. This is the APY over time. Here's the strategist that's managing this, and here are the venues that it's deployed on. And then simply from a user perspective, it's just a Bitcoin deposit in and a Bitcoin withdrawal when you want to take your Bitcoin back out again. And on the back end, you have some kind of manager that is executing a strategy that might be managing liquidity on chain or doing some kind of a borrowing strategy.
So it sounds a little bit like something like a Morpho, where you've got a pretty simple front end. You're just like, okay, I want to lock this up. And you in the back end, there's these strategies being deployed. And from the user's perspective, all you have to do is say when you want to deposit and withdraw.
Yeah, it's effectively that. Although I would say it's not. It's more like using Morpho or using Uniswap or using Aave as opposed to creating a parallel protocol. So a manager might have a strategy that they're deploying using Morpho or a vault they're managing there. And at the user level, it's just abstracted into a nice, like, simple onboarding process. But beneath the hood is sophisticated management happening.
See. And so I may have missed it. How do you, what's the revenue model there for Threshold as opposed to bridge fees?
Yeah, it's basically like setting up the vault and supporting the capital onboarding process and then doing some kind of fee split based
I see.
on what we're doing.
So like a management fee for managing the capital.
Yes, see, something along those lines.
Okay. All right. So how do you view competition from centralized custodians, the big ones like BitGo with WBTC on one side, and then these experimental Bitcoin L2s on the other. Are you stuck in between those? You've talked about like Threshold trying to provide this liquidity layer, so to work with all protocols. Is that really it, or is there anything deeper?
Yeah, I think this is a big piece that we're working on at the moment. Is how do we bring these two sides of Bitcoin economy together, where we have this kind of more centralized custodial model, and we have the decentralized version as well. And really, we're in a position where we can bridge both sides, which we're very excited about. We have this potential custodial integration that supports qualified custodians and using TBTC from that venue. And then rather than a BitGo or a Coinbase or something like this, that they have their one custody provider and their one onboarding flow or whatever it might be, we can unify the ecosystem of custodians and create this liquidity layer across that custodial landscape as well. So I think there's an opportunity to tie all of these pieces together and create more interoperability. And then ultimately, we want Threshold to be the settlement layer back to Bitcoin native, where all of the transactions, all of the high frequency trading or the business logic can be encoded on chain using TBTC, using this programmable Bitcoin, and then settlement always having the capacity to exit that TBTC back to Bitcoin mainnet with strong finality and strong security guarantees, such that the whole Bitcoin economy can be built on these rails and also be able to get back to Bitcoin mainnet. Because I think that's the main thing here is if you want Bitcoiners or people to trust the program generally, then they need to be able to get their assets back to a secure venue in crypto, which is Bitcoin.
Okay. All right. Kyle Sar, thank you so much. Very insightful. Up next, we've got Uma Roy, who is CEO at Succinct Labs. So stay tuned for that. We'll be right back.
Free self-custody Bitcoin. Scan this QR code right here from within the Bitcoin.com wallet app. You better hurry up. Anyone can get it. Oh, is it still there? Is it gone? I don't know.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, gift, voice, country, engine, complex, new, fate, purpose.
Okay, we are back with our Bitcoin.com live news coverage of Token2049 in Singapore. We are here at the Bitcoin.com news desk powered by Threshold Networks. I am with our new guest. We have Uma Roy. She is the CEO of Succinct, an infrastructure project focused on the modern technology wizardry surrounding zero-knowledge proofs. Is that relatively accurate, would you say? A little hyperbolic, maybe?
No, it's moon math. I would agree with that.
I love it, moon math. Okay, let's start with a brief history about yourself, if you don't mind. What was the path that you took to where you are today?
Yeah, I would say the biggest influence on my journey into CK, which is what brought me into crypto, is I always used to do a lot of math. So I love math. I love, doing math research, writing math papers. And then when I first heard about ZK, it was just so fascinating to me. This concept that you could prove something without, kind of revealing all the inputs that went into that computation.
Magic.
Yeah. And so I kind of just went down the rabbit hole, learned a lot about it, and yeah, here I am.
All right. So when you say that you liked math, could you kind of embellish a little bit? What do you mean by that? Like you liked algebra, you like trigonometry? I mean, what are we talking about here?
No, I mean, I just did like a lot of math problems, like math contests and like math research in high school.
Oh, nice.
And college. Yeah.
Were you a math major?
Yes.
Okay. And what area of math were you into before ZK?
I would say I really liked number theory.
Okay.
Yeah. And actually some of the concepts today are still like translate to ZK. I don't do much math or coding anymore. Now I have to like do other stuff for the company, but that's always been my passion.
Very, very cool. And from the crypto angle, had you already heard about crypto before this? Or was that all kind of happening at the same time? ZK and crypto kind of were introduced to you simultaneously.
No, I heard about crypto like a long time ago in 2015 because some of my friends were
2015?
Well, I wish I'd taken different actions back then. But yeah, some of my friends were running like Bitcoin miners in our dorm room and stuff. And I think he spent like that one Bitcoin on some like electronic parts at the time or something like that. But I heard about crypto for a long time. But then I only really got into it and started building Succinct, my company, 3 years ago.
Very, very good. And so when you heard about ZK Knowledge Proofs, did you immediately see, like it was introduced as like a crypto technology, basically?
Yeah, just like a very fundamental piece of like crypto technology that has applications in many, many different places.
Okay, gotcha. All right, so let's get into the company you founded. You're the founder?
Yeah.
Okay, great. Company you founded, Succinct. What is it?
Yeah, so Succinct, we're an infrastructure company. Our mission's to prove the world software, which means it's, kind of like layman's terms is to take ZK and cryptography mainstream. And what that means is, ZK is this very magical technology where it can be used for so many different things, like blockchain scaling, but also even use cases outside of blockchain, like proving images are real, for example. And we make ZK very, very easy to use and accessible to average developers. So ZK as a technology has actually been around for like 30 years, but it hasn't been very usable at all for a very long time. And the core technology we built, a zero-knowledge virtual machine, makes it so that you can just write normal code and use ZK. So it makes using ZK as simple as coding. And in a similar way to how, large language models made using AI as easy as like typing in a chat box a bunch of English and then you get, AGI out on the other side. But our technology makes it similar. Like you can just type normal code, you get out ZK and verifiability, and that has all the code.
Right. So I didn't know the history about ZK, 30 years old. Is that from like a proof of concept, like a mathematical proof of concept, or was there an actual product or something usable 30 years ago?
No, it was just very in research land, math concept, math papers, like seen as very impractical. And then over time, the theory has gotten better and better, and also the engineering has gotten better and better. And, we use a lot of GPUs, and it's the same underlying technology that kind of accelerated the AI revolution. And so GPUs have also really accelerated the ZK revolution and made it very, very practical today.
So basically, the theory and like the underlying math is old, but it really needed like modern compute to make an actual product. Okay. So you gave this example, proving images are real.
Mm-hmm.
Can you walk me through how that would work, this use case?
Yeah, so to start with the problem, like I think OpenAI even had an announcement today where they have this new model that can generate videos that look extremely realistic. And obviously that's a huge problem because if you're scrolling your Twitter feed, you don't know what's real or what's fake. And how ZK can help with that is basically you can imagine that cameras, at the time they capture a photo, they kind of issue some sort of certificate or signature that this picture was taken from a real camera. And then you do ZK and cryptography on top of that to kind of prove that, your image you're seeing, which might be a crop or an edited version or a JPEG or compressed, is derived from like a real image taken from a real physical camera instead of from something else.
Then when you say you do this, you mean something like Succinct would do this?
It's more like a developer can use Succinct and build something that.
So the camera's not actually doing the processing of this, right? It's being offloaded to.
Yeah, so the camera is kind of like signing the original content. So it's providing some sort of signature that it came from a legitimate physical source. And then you would use Succinct's technology to kind of prove transformations on top of that signature. And then in the end, you can imagine that someone builds like a, maybe even Twitter integrates this into their core product where whenever you see a real image, you see like a little check mark with a ZK proof attached saying, hey, this image came from like a real source and it's, compressed or cropped or, not. We did some legitimate set of transformations on it to make sure that it's like true to the original.
Right. All right. So I'm going to show how ignorant I am on this subject in the hopes that it'll help other people who are ignorant on the subject too. But basically, I think in this example, you have the camera, it signs the image.
Yep.
And then the heavy lifting is done by someone like by a company like Succinct, right?
Yes. Yeah.
They go through like some difficult proving thing,
exactly.
right?
Yeah.
And then Twitter on the other end, they can do some very light computation to verify
exactly
that this proof actually worked, right?
Yeah.
And that's kind of where the magic is that you can separate out who's doing the hard work.
Yeah.
But still retain like mathematically. What's it called?
Like guaranteed. Yeah, cryptographic guarantee. And also what's cool is like you don't have to have the entirety of the original image and stuff like that. So you can still keep like some data private if you don't want to like share all of it. So that's also like very magical. I think another really interesting use case is like identity as well.
Okay.
Like today, if you want to sign up for an exchange or, sign up for anything on the internet, you have to provide, your whole driver's license or your passport. And that really sucks.
Yeah. Especially when it gets leaked.
Exactly. Yeah. Like the recent Coinbase, I think, had an incident.
Yes.
So ZK can help with that, where basically you can provide some proof against some like database of identities saying, hey, I have an identity. It's signed by, the government and I'm over 18. I live in this state, whatever other facts, and then provide Coinbase that proof without kind of revealing that, every last detail about your identity to them.
Yeah. So then Coinbase would just store that proof.
Yeah.
And then if they get hacked or the thing gets leaked.
Yeah, it's just like a proof of the facts you wanted to.
Yeah. It's just not nearly as sensitive.
Yeah.
If sensitive at all. Okay. Right. All right. So those are two awesome use cases not to do with crypto.
Yeah.
So let's talk about some crypto use cases, like some basic crypto use cases. Why would like a blockchain use Succinct?
Yeah, so blockchains obviously, scaling is the biggest blockchain problem. And the reason there's such a problem with scaling, why is Bitcoin, why is Ethereum so slow and expensive? It's because there's a bunch of nodes all around the world that have to redo the computations of like processing every single block and then, validating it. And so the way ZK can help with that is you have one person generate a big proof. So you have one sophisticated prover generate a proof, and then everyone else in the world verifies that proof. And so now you can make blocks have as many transactions as you want because everyone in the world doesn't have to re-execute these transactions. They can just verify proof. And so I think that's why Ethereum and, even Bitcoin there's some Bitcoin layer 2s and things like this have really latched onto ZK as the solution to scaling. And so you have the Ethereum layer 2s, some Bitcoin layer 2s, even these verifiable purpose exchanges that are kind of like application-specific rollouts, I would say, that use ZK. And it's all just a solution to scaling while keeping the verifiability that makes crypto what it is.
Right. And again, so again, I correct me when I'm wrong, but the other beautiful thing is, so you have this efficiency gain, right? Because everyone's not doing these difficult proofs.
Yeah.
You can allow one party to do that difficult proof, and then the verification is much much faster, much cleaner. But also, the magic of it is you can have like a centralized party do the difficult what's called proving, and then decentralized nodes can do the light work. And still retain that decentralization aspect. Isn't that correct?
Yeah, exactly. So I think the reason you want everyone in the world to kind of be checking these proofs is that crypto's core ethos is it's don't trust, verify, right? And so today what you have to do to verify is you have to like redo all the computations and all the work
yourself.
In this world, you just verify your proof, and then you're like, okay, cool, I know exactly what the state of the chain is.
So even if it's a compromised CIA node plant who's doing the verification, doesn't matter, right? If the proof is legit.
Yeah, a proof is a proof. You can't fake it.
Yeah. So you can't fake it. You can't doctor it. Quite magical in that respect. Right. Okay. So I guess then, how would you like visually or for me like structurally, where does Succinct kind of fall in like the blockchain stack? That would be my first question. Like, so for example, you have like the blockchain level, you have validators, nodes, miners, things like that, and then you kind of work your way up to like application layer. Basically, where's Succinct?
Yeah, so there's app layer, then there's actual blockchains like Ethereum L1, all the L2, and I think Succinct is a layer even below that.
Okay.
So L1s, L2s are our customer, and they use our technology to make it scalable. Even Ethereum L1 is actually kind of one of our customers today.
Oh, really?
Yeah, so they recently announced that they want to scale the L1. That's kind of like one of their core focuses. They think they want to use ZK to do that. They're actually all in ZKVM, which is the core technology we're using. And so we're working very closely with them to envision a future where Ethereum can be at 10K TPS, but still be verifiable. So not like the Solana data center model, while using ZK and ZKVMs.
Right. So you would be a layer lower, and basically you would be part of this effort to tease apart like the I guess the execution layer of a blockchain, like of an L1 or L2.
Yeah, so they have like an execution layer, but it's more like verifying what's going on in that execution.
So within the execution layer, you would be a piece there.
Yeah, I think that's like accurate. Basically, we are a service that these chains use, or we're a protocol these chains use to get ZK and then use ZK in whatever their protocol requires it.
And because you're an infrastructure project, the benefit would be all of these projects don't have to kind of keep reinventing this ZK technological stack. Instead, they can use you. Your sole focus is on this. You have the expertise. So that's a lot more efficient because people can just kind of plug into your infrastructure, and you don't have to have like every single team, Optimism and Arbitrum.
Yeah, so I mean, it used to be the case that if you wanted to do ZK, you had to raise like $100 billion, you had to have a team of 40 cryptographers, and you had to have very, very deep specialized expertise to build ZK for your use case. That's obviously completely impractical. And so with what we provide, our technology makes it so that all that stuff becomes a weekend project. And even for really big teams like Optimism, like Arbitrum, and maybe we'll talk about that partnership, like even though they have the resources, they still use our technology and stack because it's just a lot more efficient for them as a company.
Okay, yeah, we're definitely going to talk about that later. All right, so I guess then, why soft pitch for you? Why should companies use Succinct? Like, what's the bonus for you? Give me.
I think if you want to use ZK in your protocol, this is just by far the easiest, cheapest, fastest thing you can do. It's truly as simple as writing normal code, and like it's just the best way to use ZK. And so a lot of developers have told that to me, and yeah, I think it's a big value.
But what expertise does Succinct bring to the table that makes this possible?
Yeah, I would say like our differentiators are basically that if you want to use ZK right now, your one option is you can try to do it in-house. That's very impractical for a lot of the reasons I described.
Yeah.
And then if you want to use, kind of a ZK VM, there's actually many that have popped up over the years.
Yeah.
So now there's like 20 or 30 of them.
I know.
And so with Succinct, I think we have been around for a very long time. We secure, 3 billion in TVL. So we secured the most TVL out of any of the other ZK VM. So security is obviously very important. We're the fastest by all the benchmarks. So that's important, being fast and cheap. And then we have a really great developer experience that just makes it super easy to use. And then, I think like all those reasons why customers pick us over like the 30 other ZK VMs.
Right. Yeah. Okay. And the so let's talk about this partnership you had. Right. So can you set up what this partnership is, and then I have a question for you about it.
Yeah, so one of the biggest use cases of ZK is taking layer 2s on Ethereum and making them ZK layer 2s so they can have much faster settlement to the L1. So instead of taking your money and like sticking in a bridge and having it stuck for 7 days, you can have it removed in 1 hour. So that's a core problem ZK solves. Arbitrum is a team that has been around for a long time and built this layer 2 stack. And also they have their own blockchain, Arb1. And they are partnering with us to ZKify their whole stack and hopefully bring it to their own chain as well. And also all the other partner chains in their ecosystem, like the Robinhood chain, the Pool chain, and a bunch of others.
And it's great because, again, this modularity, you get to see why it's so awesome. Is once they partner with you, like you said, it can just be applied magically to all these other things.
Yeah, to all their chains. And it's nice because like we get to do the ZK stuff, which is what we're good at. Arb gets to keep their stack, which is what they're good at. And then you just have these things work together really well.
Okay, good. All right, so you said on X about this this partnership. This isn't just another logo times logo partnership. This is a big fucking deal. Drop the F-bomb. Hope YouTube doesn't demonetize us. Okay, why is it a big deal?
Well, it's a really big deal because Arbitrum 1 is the top rollup by TVL. They're a very, very strong team that has an amazing rollup stack. It's all these benefits. It's being used by Robinhood. And so, the fact that they are, first of all, committed to ZKifying their stack, like they want to use ZK technology. They've kind of been holdouts for a long time, but they came around and realized all the benefits of using ZK. And then they chose to work with Succinct, which is a really, really big decision for them because it's ZK's core to the integrity of their entire protocol. So when they're making that decision on which ZK VM to work with, I think requires a lot of thought and care. And so the fact that they chose Succinct, I think, speaks a lot to kind of like what we're able to offer. And so, it's like really exciting, I think, just to see like, okay, ZK is going to be in every rollup. Like every rollup is going to be a ZK rollup. And then all that ZK is going to be going through Succinct in our network and protocol. So I think that's very exciting.
Yeah, definitely. Just as a tangent to this is all like, so far we talk just about like EVM land, basically, Ethereum ecosystem. Does this have any applicability to like what Solana's doing over there or some of these other kind of high performance chains, maybe like Hyperliquid or something like that?
It's a good question. So Solana obviously takes a different approach in scaling where they don't have as many roll-ups like that. But I think even with Solana, there's actually a few teams that are building these network extensions, which are kind of like their roll-up answer, and those use ZK. So even today on Solana mainnet, you can't trade perps with a similar experience as Hyperliquid. And so that's kind of a sign that they haven't scaled enough. And so some teams on Solana are building, these verifiable perps exchanges, which are basically like roll-ups for perps and perps only, secured by ZK on Solana. So I think there still is like a role for ZK on Solana.
But Succinct's, at least currently, Succinct is very focused on the EVM ecosystem.
No, we work with all ecosystems. There are teams on Solana that use it. There's teams on like new chains like Mana that use it for some like private stablecoin use cases. No, we work with everything. I think obviously Ethereum has always been a really big champion of ZK cryptography, so that's kind of why we have like very strong alignment with them. But yeah, ZK is not just a technology that's limited to Ethereum. It's like Ethereum, Solana, Bitcoin, and then like also even beyond blockchains too.
Yeah, and we'll get to that now. Great setup. What are kind of the big use cases outside of blockchain, right? Like, I mean, obviously, we're at a crypto conference. Anyone who's watching this, I guarantee you they've heard ZK for years, so
yeah,
nothing new to them. But yeah, what about outside of blockchain, and what is Succinct doing outside of blockchain, or looking to do?
Yeah. I think the two biggest use cases outside of blockchain that I'm excited about are the ones I already highlighted to you. So this notion of ZK identity or ZK KYC, where you can prove facts about your identity without revealing your whole identity to someone. I think that has a lot of interesting implications on like so being able to be compliant but still keep privacy. So it's important for consumers. And then I really think this verifiable images, audio, general video is going to become even more important with like all the AI advances we're seeing.
Yeah.
It's going to need to be some way that you can tell whether this image came from like a real physical device or whether that podcast was actually recorded or whether someone actually said something. And I think ZK's role in that is going to be like probably one of the most important and maybe even high volume use cases over the next few years.
And for these use cases, is there any need for it to be on blockchain?
No.
Yeah, that's what I think.
Yeah. Like ZK is just a broad technology and platform that can be used in blockchains and beyond. And even for Succinct, like we don't even view ourselves as just a blockchain or just a crypto company.
Yeah.
We're also a cryptography company.
Right.
And our tech can be applied to Web3, Web2, anywhere.
Yeah. Okay. So for identity, I talked with somebody at KBW, and they're using ZK for just this. They had an interesting wrinkle to it though, which is so they were like verifying identities of Lyft drivers actually, right? I asked, does it have to be on blockchain? And so they're more on the consumer-facing side, so not infrastructure. But they said something interesting, which is for them, yes, it has to be on blockchain because of the data protection laws, at least in the U.S. And so having it on a blockchain, being like credibly decentralized and everything, it means that they're able to say to like regulators and stuff like, this is a decentralized blockchain, right? We don't have to. All of these like data protection laws don't apply to us in the same way. And so,
interesting.
Yeah. So I mean, maybe there is a case, I guess, for blockchain being used in that respect.
Yeah, that's possible. I also think a lot of the barriers to doing ZK KYC these days are not really like technical barriers, because the truth is with our ZKVM and the technology we built, you can just code up like prove I'm over 18, prove I live in this state in the afternoon. Like that's really how easy we make it. And now it's a matter of like convincing regulators, hey, these exchanges don't have to keep your identity. They can just verify proofs. And so I think there's actually been some good progress on this. Like in the White House crypto report, they did mention ZK as a potential technology that could help with comply. Yeah.
It was weird. It was a weird moment for me to see that.
Yeah, it's crazy, right? Like they're just becoming, they're understanding this technology. They seem really interested in learning more. And so that's really exciting. And I think especially with a lot of the regulation we've seen on the stablecoin stuff, I hope that like there's some follow-up regulation on, how a lot of this cryptographic technology can be used to actually help like other parts of society as well.
Yeah. All right. Just a random left ball question. Does quantum computing like throw a wrench in any of this?
Actually, our technology is quantum resistant.
Okay.
Which means that it's kind of if there's quantum, then we're actually a solution to it.
Okay.
So the technology we use is post-quantum cryptography. So yeah, we're fine.
Nice. Awesome. All right. So where do you see like ZK in general, like going in the next couple of years in crypto? I'm going to set you up for this to give you an example just from talking to you. It sounds like ZK will be everywhere in everything. Is that roughly where you think it's going to be?
Yeah. I mean, that's why our motto is prove the world software.
Okay. And you think it's going to be happening sooner rather than later?
Yeah.
Yeah. So like every crypto project will just be ZKified and it'll be in everything.
Yeah.
And I'll be hearing that word everywhere.
Yeah. I mean, that's like definitely our goal is, ZK, I think with what we built, it's a platform shift in ZK in terms of how easy it is to use and how accessible it can be, which means it can be used in everything. And so I think every roll-up's going to use ZK. I think the EL1's going to scale with ZK. I think all these like exchanges, like these decentralized verifiable exchanges are all going to use ZK. And so ZK is going to be everywhere. And then even outside of crypto, you can imagine, every time you start taking photos and you want to post them, you are also generating proofs. And I mean, that's the reason I'm like super excited about ZK generally is kind of this very broad platform applicability.
Okay, here, let me ask you a question. Do you think, because I agree with you. I think it's going to be everywhere. It's going to be everything. Is the name ZK going to be, is that going to be the name that the retail is going to associate it with? Is it going to be ZK or is it going to be something else? What do you think?
Yeah, ZK, I do think ZK has pretty good brand awareness. Like if you're like, oh, we're a ZK company, people are like, oh, I know what that is. At least within crypto.
Yeah, that's
in our industry.
Caveat, yeah.
I think verifiability is kind of what ZK provides. And then the reason you want verifiability is you want to prove something's authentic or real. So I think maybe one of those other words could also make a lot more sense in kind of letting people understand why we might want this technology. Like people, when they talk about like AI, people don't talk about, the transformer, right? They're just like, I use this chat app and it's awesome.
They don't even say LLMs really. Like,
yeah.
I talk to my mom, I'm like, oh, what LLM do you use? Like, huh?
Yeah. So I think ZK in some ways can be invisible behind this infrastructure that powers all this stuff.
I do think though that there will be, I just personally think that there will be some other brand name that'll be used to represent, but I don't know. For me, just from crypto land, which I'm like deeply kind of ensconced in, Web3 didn't really work for me. Really, we have crypto, Web3, so neither is there yet. Anyway, that's a story for later. One last question for you. Do you think that any particular ecosystem within crypto is better suited for ZK?
Yeah, I think Ethereum is probably best suited for ZK because Ethereum values really care about verifiability. So it's kind of like, that's why ZK is the most PMF with Ethereum and its ecosystem projects like Layer 2 and things like this today. So yeah, I would say they're kind of like the people who crave this technology the most. And I've also really done a lot to push it forward.
Yeah, definitely. All right. Well, thank you, Leroy. I really appreciate this. Infrastructure projects are awesome. The retail doesn't really kind of see, get to see projects like you, but they definitely kind of feel them when they're there and when they're not there. So best of luck in Succinct, and thanks for being like a backbone of the ecosystem.
Thank you.
All right. Stay tuned. Next up, we have Marielle. She's an MIT professor and co-founder and CEO of Optimum. Also doing work on blockchain, I would say, at the low level. So stay tuned for that. That'll be me, solo again. Free self-custody Bitcoin. Scan this QR code right here from within the Bitcoin.com wallet app. You better hurry up. Anyone can get it. Oh, is it still there? Is it gone? I don't know.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, gift, voice, country, engine, complex, new, fate, purpose.
When crypto leaders want reach and results, they choose Bitcoin.com. A global audience, massive reach across social, web, and mobile, engaged users who trust our brand, and campaigns that move at the speed of crypto. From press to podcasts, X to SEO, display ads to rewards integrations in the app, Bitcoin.com delivers exposure across every channel that matters. Our clients include the world's leading exchanges, wallets, and gaming platforms. When they need impact, they trust Bitcoin.com. Get your brand where it belongs, in front of millions. Partner with Bitcoin.com Media today.
We are giving away free self-custody Bitcoin during our live conference coverage. First, download the Bitcoin.com wallet app. During our conference coverage, we're going to show you these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner to scan these golden ticket QR codes. Swipe to automatically send the Bitcoin to your self-custody wallet. But be ready, be fast, because anyone watching can get the Bitcoin.
I got into crypto last year when I joined Bitcoin.com. It seems like it was the right time because when I joined the company, everyone is into crypto. And I guess it influenced on me. And then I started to get into crypto, and then I started to buy, and then now I'm like a little bit of a DJ now.
So I got into crypto sometime in 2014 or 2016, I can't remember. But I was farming Ethereum. I had like 2,000 plus Ethereum at one point. But it was when it was worth nothing. It's like 1 to 2 USD each. So I sold it off. I made a good profit, but 7 years later, I could have become like retired. So the only reason we're having this conversation right now is because I should have held.
No, when I first heard about crypto, it was from my ex-colleague. And it was about year 2017. I was totally new and I don't know what about this. And then come to year 2019, at end of 2019, I was invited by a friend for a seminar. And that was the first time I know what is cryptocurrency and what is Bitcoin. I thought that it's very interesting into the technology and the blockchain kind of technology. Then I tried to, firstly into future trading and spot trading, and more into knowing about different exchanges, the wallets, and then into meme coins. So I then become so degen into playing or trading memes.
I went into crypto space at about year 2019, where I was working for an angel investor that is having a portfolio company in crypto space, which interests me quite a bit. So I decided to venture into this field.
I got into crypto while I was working with agencies on finance related clients. And I always felt like crypto was this interest that I could never really speak to my colleagues about. So it's really interesting entering a crypto company where my interests in crypto become part and parcel of daily life.
So at Bitcoin.com, I'm the FP&A manager. I translate accounting data for the management because, I mean, it's just complicated. So the management wants to get insights, right? So I provide the insights from the data. So I'm kind of like a translator, so to speak. A financial translator, if you will. Yeah.
I'm the growth lead. And what that means is leading initiatives that lead to growth, whether on partnerships fronts or within our internal departments.
I'm the compliance officer for Bitcoin.com. Basically, I make sure that, we stay regulated in certain countries and then we follow the rules and regulations that's being set off.
I'm finance director of Bitcoin.com, so oversee the accounting tax function as well as treasury.
I'm actually working in the finance department, oversees a 2 cost center, plus in charge of the revenue-related data transaction. Okay, basically for me, I have been in Singapore for more than 30 years. So I like the cleanness and the safety in Singapore. The environment are good. You have to mix around with positive people, and it's a hub for most of the Southeast Asia countries, most of the people internationally, yeah.
I like living in Singapore because it is safe, it's clean, and there's lots of food because I'm a foodie.
I would say because it's my home, I'm obliged to like it. Like, you can't really beat the safety and the cleanliness we have here with some of the things we take for granted, like the MRT system. I think the weather is very predictable, which is good. So a lot of people complain that, Singapore is only rain or shine. But that's good, right? Because if you go to other countries, hey, suddenly you have a typhoon, a super typhoon at your doorstep. You want that? And also Singapore is also free from natural disasters. So yeah, that's something we take for granted. I'm sure a lot of Singaporeans have never been in a situation when the ground was quaking below you and you're just fearing for your life.
It's really nice to live in a kind of a hub where you have easy access to different neighboring countries. And in that sense, Singapore is situated similarly to a city in Europe, I would dare say, where if you wanted to access Malaysia, Vietnam, Bangkok, you're less than 2 hours flight away. My colleagues often say things like they like the food and they like that it's safe. I have no quarrels there. I've lived abroad. I've realized that, safety is something that you can't really take for granted. Efficiency is also another thing that I will rate quite highly on that list because when you live in Singapore, things just work.
If you're considering to live in Singapore, the advice is to go explore the whole city. Avoid all the fancy restaurants that you see in the malls. Visit the local coffee shops. Visit the local hawkers.
I think if you want to live in Singapore, you have to be earning quite a bit of money. Unless you taper your expectations and live like a local, you can get a flat in a HDB. I feel like a lot of foreigners, they tend to pigeonhole their choices into like, I have to live in this area because it's the cool place for foreigners to live in. I have to spend this amount at like this upmarket supermarket when they can be actually spending their money more wisely. So I've actually talked to some ex-colleagues. I've reduced their expenses easily by 60-70% by just making them think about whether this is a smart choice or not. So I think instead of phrasing it as earning more money, I'd be like, spend my money more wisely and don't be like compelled to think that you have to spend this amount of money just because, yeah.
The train will be crowded, so try to avoid those like the timing that at least like working hours time period, so that you won't be stuck in the crowd. Yeah.
The first thing to consider is to find a suitable accommodation because the rental expense is quite high. The rest of the stuff are relatively cheap and manageable. Probably they can also take a chance to travel around because Singapore is quite near to all the neighboring countries where you come in.
On a hot day, go try a sugarcane juice. Make sure there's a lot of ice in it. On a rainy day, maybe go for a bak kut teh. That's like a pork rib soup. It's really tasty. But TLDR, food in Singapore is really good. Please feel free to explore. there's no limits to the next frontier. Like there's new tech being shipped out, there's new projects being built every day, and everyone just wants to do something better. I work with great people, and I dare say so because it's a very collaborative environment. It's very different from the types of traditional finance marketing roles that I've had in the past. Of course, things can get quite rough, and it's always very fast-paced. It's an industry that doesn't sleep.
Like even people don't really know the industry, it's quite easy to go into this space. So you get to know different kinds of people from different fields. So it's quite interesting to know different people.
Because I love crypto, so I was trying to look for an opportunity into crypto industry. In my previous job, I will not allow or so kind of a bit sensitive to talk about crypto in such a topics. So, but in the crypto related company, when I start to join the company, I feel like everybody is talking about crypto. Once I step into crypto, I would like to have like environment that people is talking about the same topic. Yeah.
I guess it's the people, because in crypto, it's all about all these, I guess we're all younger and it's just more energetic.
I feel like because I'm a crypto native, it feels very second nature to me. So it's something I do on a daily basis. So I also have the knowledge to help people who want to get into crypto. In fact, Humphrey got into crypto through my recommendation because I was insisting, no, you should onboard STAX. It's like, no, it's not troublesome. I'm like, no, it's not troublesome. So one good thing about working in crypto is, you can expose your friends to crypto, but of course what they do is their own choice. So that's another thing. But empowering is better than being ignorant, right? So that's my point of view.
Are you a Bitcoin holder ready to explore the world of decentralized finance? With TBTC, you can lend, borrow, provide liquidity, and engage in a wide range of DeFi activities, all securely and free from centralized control. Unlike options like WBTC, where Bitcoin is held by centralized custodians, TBTC is secured by a network of independent nodes, ensuring that no single entity ever has control over your assets. TBTC empowers you to seamlessly integrate your Bitcoin into the DeFi ecosystem, unlocking the vast potential of smart contracts and dApps while maintaining the security of your Bitcoin. Fully backed one-to-one with Bitcoin reserves and protected by a decentralized network of nodes, TBTC ensures that you can always reclaim your Bitcoin or swap your TBTC without relying on intermediaries. As the blockchain space continues to evolve, TBTC on the Threshold network offers you the confidence to put your Bitcoin to work, knowing your assets are secured by a decentralized network, not by a central authority.
In this video, we'll show you how to earn Bitcoin, currently at over 30% APY.
Go. Okay, we are back with our live coverage of Token2049 in Singapore. This is the Bitcoin.com news live desk powered by Threshold Networks. I am your host, David, and I am with Marielle Medard. She is a professor in the EECS department of MIT. EECS, I'm guessing, is Electrical Engineering Computer Science.
Yes,
is that right?
you guessed correctly.
Yeah. And holding the NEC chair in Software Science and Engineering. NEC, what does that mean, ma'am?
It's actually a Japanese company that very they very generously donated a chair. It's actually a School of Engineering wide chair.
Very, very cool. Marielle's interests include network coding, reliable communications, information theory, security, and reliability in networks. That should give you a hint why she's on the stream at a blockchain conference. She's involved in Optimum, a project incubated at MIT that aims to build a decentralized high-performance memory layer for blockchains. Welcome to the live stream.
Thank you, David. Thanks for having me.
Yes. I can't wait to get into this conversation and look like a fool. Here we go. Before we get to that, can you please tell me a little bit about your background? What path took you to what you're doing today?
Yeah. So as you mentioned, I have been on the faculty at MIT for a long time, over 20 years. I did all my degrees there. They had a lot of trouble getting rid of me, or I had a lot of trouble, finding the door. And I've been working in the area of decentralized coding, where coding is creating equations from data and using those equations to make data more efficient in terms of representation, more reliable to attacks, errors, delays. And so I've been working decentralized coding now for really 2 decades. And I've had incredibly good luck and good, career path in academia. So there you go. Usually you get to be a chair. You get to have a really prestigious chair at MIT, and it's kind of time to kick back and maybe not take it easy, but feel smug. I didn't do that. I realized that the time right now in Web3 for the kinds of solutions we have been working on in the lab now for years and years was now. And so I took the jump, and here I am.
Approximately when did you take the jump?
It's been a little over a year now.
2024.
Yeah.
Okay.
That's right. Yeah.
Right.
So, end of 23, I think at the end of 23 is when I was, decided, along with one of my co-founders, Kishore Conwar, who had been my postdoc, and who had worked with me in Skunkworks for a dozen years on this, even after not being my postdoc anymore. I realized this was the time. So
very, very nice. I'm curious, at what point did you become aware of crypto? I'm assuming it was well before you got into the industry. So
I did. So I was aware of it. I think being at MIT to a large extent, you hear a lot of stuff going on. I remember probably one of the first times when I was really enthusiastic was, when people stopped doing, Bitcoin mining in sort of just their homes. I got to just buy so many GPUs for the lab really cheaply to do some of the computation. So I was like, great, I can use the lightly used. This is great.
That sounds like it was probably one of the bear cycles that happened, like maybe 2018 or 2022.
It was great for research, though. I got some great deals.
Yeah. I'm glad our pain was your was your profit.
Good use for research and
Thanks.
general knowledge. Yeah.
Okay, so I'm gonna take a step back. I just wanted to ask you about this decentralized coding a little more.
Yeah. Yeah.
And maybe can you give me like an example use case of what this means? You said you worked on this for a couple of decades.
Yeah. So different stages of the technology. That's correct.
Right. And what can this be used for?
Yeah, that's a really good question. So suppose that, here we are, there's people all around, and we wanted to communicate in a decentralized way. It's a pretty daunting affair, right? And so maybe I start to tell you something, which is actually very similar to, for instance, what happens in Ethereum with block propagation. Maybe I'm a node and I start telling other nodes, and eventually you want like 2/3 of the people in here to know. Question, how long is it going to take, right?
Yes.
And you can only talk to one person at a time. You can't just stand up there and yell and have everybody listen and hear you at once.
Especially if everyone's doing that. Right?
Especially if not everyone's doing that, especially with this music going on.
With this lovely electronic music.
That's right. So basically what would happen is you would have to have kind of a balance between, you need to talk to enough people that, the message that propagates. But if too many people talk to too many people, you get a lot of repeats. And the reason repeats are a problem is, you have bandwidth. Imagine that bandwidth is basically, you can only talk to one person at a time. And it turns out if you're, talking to one person at a time and too many people talking to too many people, you're going to end up with a lot of repeats.
Yeah.
And those repeats are really, really bad as time goes on. Very quickly they sort of swamp the network. So that your
it's kind of
network,
exponential, I guess. Or...
yes, very good. It's actually even worse than exponential.
Okay.
So if you're mathematically minded, it's not even e to the x.
Yeah.
It's the axis between 0 and 1, and it's x over 1 minus x.
Okay.
Plot that at home. But you will see it actually goes to infinity like that.
Wow.
Exactly. Very good. So now, if instead you start sending equations around. So imagine I have 5 unknowns. Let's call them x1 through x5.
Okay.
And I need to figure it out. I just need 5 unknowns. I need 5 equations. So now everybody's getting equations, and they're making equations out of the equations that you get.
Okay.
And then mixing them together. It turns out, hence the name, it's Optimum to do that. Like, it's as good as if you had like a controller that was scheduling everybody, directing everybody, seeing everybody that goes on. So that's what we do.
And so these equations that get exchanged, the information that can be embedded in the equation, is it arbitrary or is it?
Absolutely. Because you're just solving equations. As you just need as many equations as you have unknowns, right? I can tell you x, I can tell you y, or I can tell you x plus y and x minus y, and you can figure it out.
Oh my God, it's way above my pay grade. Okay, so you started working on this a couple decades ago.
Yeah.
Now, I imagine at some point you became aware of Bitcoin and other crypto projects. Did you look at that, these consensus mechanisms, and be like, oh, that's cute?
So, interestingly enough, I became interested in consensus mechanisms at the start of the 2010s.
Okay.
About 14, 15 years ago.
Yeah.
And one of my colleagues at MIT, who actually held the chair that I was given later, the MSc Chair of Software Science and Engineering, is Nancy Lynch. Now, many of our viewers right now may know things like the FLP theorem or the CAP theorem, which was then sort of recast as the trilemma. So the L is Nancy Lynch. So she and I, have been co-teaching, sharing bars of very dark chocolate, doing very boring, very boring meetings of the faculty. And we said, if you really understood consensus the way, her work is really some of the foundational work. Again, you can go look at the original Tendermint paper, and it basically says,
so cool.
Yeah, it is actually implementing her algorithm.
That is awesome.
So if you really understood consensus and you really understood coding, what would you have done?
Yeah.
And that's really what got us excited. And that's how we actually hired Kishori, my co-founder. Now, just to give you an idea, Kishori was on Wall Street making a lot of money. And she goes, oh, let's hire him. like, there's no way. You know, so the guy's gonna like tinker what, like a, 30x, right? You know, and then he came. So I didn't want to point out to him, I was like, maybe he misread it. He thinks it's an extra zero or something. And I didn't ask him at the time because I wanted him to change his mind. But, later I was like, sure, with like serious significance. And he said I was only going to get one chance in a lifetime to work with, he said 2 walking encyclopedias. So I'm not sure everybody wants to work with even one walking encyclopedia, but, that's a separate matter.
What's an encyclopedia? The Zoomer said.
Exactly. It's like Wikipedia.
No, okay. Very, very cool. Okay. All right, so let's get into Optimum. What is Optimum?
Yeah.
In 5-year-old language, or maybe dog-like language. And then why did you decide to spin it out of the academic work that you were doing?
So let's look at your computer right now.
Okay.
So your computer has things on it. So you have an application open, web browser and so on. You have a CPU in there. You have an operating system. You have a bus that's actually carrying the data around, and you have memory.
Yep.
So if you look at Web3 blockchain today, you have apps, dApps.
Yeah,
right?
That would be the applications on my screen.
Exactly. You have an operating system, maybe EVM, SVM, whatever you want VM.
Yep.
And then you have some amorphous gelatinous, thing.
Innards, yeah.
Which, you have things like a mempool. Do you have a mempool in your computer?
I have sticks of RAM, I guess, but...
Yeah, you have RAM. You don't have, the mempool's a bit like, it's like the equivalent of your laundry basket.
Yeah, but also then you have, private pools as well, next to mempools and things.
Yeah, so anyway, it's really messy, right? And you have the bus. Remember that I was talking about gossiping here? The bus is this really complicated system where you're trying not to repeat too much and so on. So our point was that part, the memory, and the memory includes the ephemeral memory, which is the bus, just like I need to transport this now, and the long-term memory and the random access memory. All of that, to make it decentralized, you need coding. You could do it without coding, but the cost and the delay would be, phenomenal. So to the point that you would never do it, which is why people are not doing it now. So that's what we do. And that relies, again, I encourage people to go to getoptimum.xyz, look at our research papers. You will find them illuminating, or at the very least, great for sleepless nights. And you can see a lot of the research we did that. So we really have been working on this for years. And without coding, without an efficient representation of the data, you're really just shooting yourself in the foot.
So would you say, though, that all blockchains right now are basically kind of primitive? Because, as I understand...
perspective, yes. Not from other perspective.
Okay.
Look at EVMs, for instance, they're amazing things. They're amazing. But, the idea that you have something like your operating system, say an EVM, having to worry about the bus. Imagine if you were like, no, I can't have Linux because my bus or my memory is X, Y, or Z. You'd be like, no, that's ridiculous. What you really need is a modular system where you have specs, requirements, and then you just have an API. So that's what we're doing. The memory, which includes, again, propagation, which is ephemeral memory, all the way to RAM, which is read-write, and read-only memory, which is basically the ledger, where you just add but never retrieve, never remove.
Right.
Yeah.
Right. So Optimum is basically almost like an infrastructure project.
It is an infrastructure project, but it's a decentralized infrastructure project.
Decentralized in what way?
We're completely decentralized. There's no centralized controller. It's the decentralized coding that I mentioned before, which is actually powering the entire thing.
And so So Optimum is a network then?
Optimum is a network, and the network is formed out of what we call flex nodes. And flex nodes are doing this coding that I talked about, this random coding, and each node is acting individually. And this is the really weird thing, that an individual, decentralized, state-free operation is provably as good as a completely centralized system. And that's hard to get your head around.
Very hard.
But it's true. And again, you can see actually one of my former students, PhD students, Florian Kohler, who then went to become a CS professor at Carnegie Mellon.
Yeah.
You know, he showed this. He showed what's called the optimum pipelining approach. The results. And it shows that basically, even though it's completely decentralized and it's totally clueless, it's as good as if you had full information.
Really?
Yeah, mind blown.
Yeah. I'm gonna have to. Are there any like YouTube videos on this that I could?
So yes, I do post on X every so often, little YouTube videos, and again, you know, it starts all the way from the very basics of coding to all of the different things we do. So I post at my board. I have a really messy whiteboard, like actually a huge wall, and
MIT professors.
no kidding, right? So I take a little corner of my board, I clean a little corner, and I go to the board. So please, if you want to watch them, love to get feedback from folks.
So I'm definitely gonna do some more research after get off this live stream. But let's just say for the time being, I understand kind of under the hood stuff, which is what I'm really interested in. I love this kind of stuff. How does this plug in or work with blockchain?
Yeah,
as we know.
Yeah, that's a really good question. So what we do is we take a permissionless sidecar approach. So people don't have to change anything around their EVM or so on. So our first go-to-market has been with validators.
Okay.
And the reason why we go into validators is, you know, they see the gain in APY. They're like the front line of performance.
Right.
They, if you give them better performance, they can translate it into profit. So at this point, we started with just Ethereum validators, and we have onboarded about 20% of this. The TVL is about 20% of the Ethereum stake. And
why do the validators? So what's the pitch that you say to the validators?
the pitch is really short. I remember my first pitch. It took about 5 minutes because we explained to them that it goes faster. Like, I can make money with that. Just give it to me. I remember the person I got a whole no, just Marielle joke.
So the pitch is it goes faster and you make more money.
Yeah.
That's basically it.
Yeah, that pitch.
Okay.
Even I can give that pitch.
I mean, it's an easy pitch, but obviously backing it up and making sure that actually.
So we're on we're on Hoodie testnet, which is the Ethereum testnet. Again, please go to our website, look at some of our recent results. What we're seeing, and you can see live, actually our testnet results. It's about 6x faster than the current state of the art. 6.
That's wild.
Yes. That's what a little math will do for you.
A little crazy math that doesn't make any sense. Yeah, no, I'm sure. Okay, so you're going after the validators first because I'm guessing the pitch is quite simple and they're like discrete like businesses, so you can go after them very.
That's right. That's right. Yeah. And so as I said, at this point we have about a fifth of the stake, and but if you're validator, please sign up. We actually have thousands of people have already signed up who want. When we go wider, we started with the larger ones. But I'll give you a little vignette.
Yeah.
I was at East Boston. I'm in the bathroom washing my hands. Somebody comes up to me and goes, "Your mirror." I'm like, "Yes." Like, "We've been trying to get onto your testnet." I'm like, "Okay, you got it. Let me just wash your hands." So
That's awesome.
yeah, it is. Yeah.
After validators, what else? What else would you be?
Yeah, so we have also signed up now with block builders because that's another entity that can actually use, the speed and translate it into profits. So we have signed up with a Titan, which makes builds about half the blocks of Ethereum. And for BNB chain, we have signed up with Blockraiser.
Okay. Wow. All right. So, tell me how this is connected to the random linear network coding, this RLNC. Exactly. I still don't quite understand how this is used in Optimum.
So our first product is called Optimum P2P or Mom P2P. Actually, we were talking about kids before, right before starting this. I'm Optimum. I'm sure my kids would disagree, but they're not here, so I'm just gonna.
That's a mom joke for those.
It's a mom joke. Yeah, worse than dad jokes.
Yeah.
And basically that does the propagation.
Okay.
The propagation, whether it be a blocks for validators, or if you're a block builder, you're getting basically all the information that you need to build the most valuable blocks possible. And that's where we come in. And that's where the under the hood powering comes from the math in RLNC.
Okay. So I still don't understand. This is basically like, is it just EVM, or could it be applied to any operating system?
But completely, yeah. Which is why, as I mentioned, we started with Ethereum, but actually we're going to other chains, including, Blockraiser does BNB.
Yeah. And so basically, all they have to do is they put in like an API call, or how does that? How do they integrate?
So that's what the block builders or validators, the nodes do. And we're permissionless, so we don't have to integrate with the L1.
Wow.
Well, in the same way that, say you have Linux, you don't integrate your Linux with your bus and RAM.
No, absolutely not.
Why should you?
Yeah.
I mean, it makes no sense. It should be modular.
Yeah. What's the business model? How do you guys make money?
Yeah. So, first of all, the good news is there's money to be made because there's profit. So let's start with that. Otherwise,
Nice.
We share the profits with the whatever we give people as a benefit. We share, but our value longer term is actually going to be in Mom token.
Okay.
And I remember I was talking about these Flex nodes. By the way, a Flex node is not like a validator.
Okay.
Flex node is just like a computer.
Okay.
And you need half a CPU to run this.
Okay.
Half a CPU, that's it.
Anyone can run this?
Anyone can run this. And actually, we've been doing a first set of hackathons so that people learn how to set up a Flex node.
Yeah.
So anybody can do this. And now, remember, all we're doing is in a decentralized way, sending equations around. So now what we've created is a latency marketplace where nodes are sending equations to each other.
Gossiping
equations, and basically I'm a validator. I go, hey guys, hit me with equations. I'm willing to pay this much. Nodes give each other equations, pay each other in Mom. And basically they're paying each other because, you give me an equation which I need or I can sell to somebody else.
My God. Yeah.
Yeah. So, and then, you're just sending equations around. It's like an actual marketplace.
Yeah. Between nodes.
Among nodes, exactly. Exactly.
So for example, these validators or block builders, are they also running nodes as well? Or?
So they're also Flex nodes,
yeah.
But most Flex nodes are not going to be validators,
right.
block builders, which need to be really potent machines, right?
Yeah.
So the idea is anybody can run its Flex because it can be small, it can be large.
Yeah.
It's powerful.
Yeah.
It's strong. Yeah.
Yeah. I cannot wait to report us. So how many rounds of gossip are done?
So basically, it's you can tune it depending on whether you worry about when everybody got it.
Yeah.
Or where some fraction got it, right? It's a pool basis. So you basically, I get, give me equations, and then at some point I go, I've got enough, or I'm not interested in that anymore because I, down to other things.
Too much time has passed. Okay, all right. And so is Is this RL and C stuff, is this synonymous with kind of blockchain memory, or are there other implementations of this? Is this just you and your company's implementation of this?
So, if you don't use what we do, you have, Lit P2B, which has been in the news recently because the issues around funding it and so on. A lot of projects rely on that. So what we've done is we've taken Lit P2P and we've modified it with coding. I don't know of any real DRAM. It's just so hard to do without coding. It's so hard.
Really?
Why? Yeah.
Why? Is this going to be too complicated of an answer?
No, it's just because we're managing, who said what to whom. And, I'm going to get a little historical. So in the 80s, there was an algorithm called Atiabar and Barnoy and Dalla, the ABD algorithm, that showed that you could do decentralized read-write, but with like one writer or whatever, and it was considered to be mind-blowing, which it is mind-blowing. It's an amazing feat. But it took so freaking long, that literally...
The computation took so long?
The exchanges.
Okay.
The number of exchanges, the number of rounds.
So the number of rounds of DOS. Okay.
Basically, yeah. Then it was improved later, actually, by Nancy, who we just mentioned. She's actually also an advisor to our project. And it was called the Rambo algorithm. Rambo 1 and Rambo 2, I kid you not.
Rambo, First Blood.
Rambo, First Blood. Rambo, first algorithm. But even that, so there's some really, really recondite, not very well-known systems out there that implement something like that. But
practically speaking,
no, with very few nodes and a huge overhead. So the idea here is, and I remember that was when we started working with Nancy about a dozen years ago. It's like, okay, if you actually did coding, you should not have to, do this crazy high overhead checking. So that's why.
I see.
So it's not that you couldn't do it, but you just wouldn't want to do it.
Yeah. All right. So, just in like broad terms, kind of what are like performance metrics that you're targeting?
So I mentioned what we're already doing on Hoodie, which is 6x. And what happens is you go higher and higher TPS, right? And then so at this point, basically the bottleneck is no longer the compute.
Okay.
At this point, the bottleneck is really
the bus, the bandwidth,
the bandwidth. Exactly. So basically, what we can do there is we see even bigger gaps. Because remember, as you were saying, exponential, and it's at x.
Yeah.
Right. So basically, you start going down that really dangerous slope, and we stay flat.
Really?
Yeah.
Wow.
Because you can go up a dangerous slope, but like somewhere, outside the building.
So how many TPS are we talking about?
So what we do is we basically. We haven't pushed it all the way to the limit, so I don't know, but it's about, we were able to manage about 10 to 20x more than what people do currently.
On Ethereum?
On something that mimics Ethereum, because remember, I can't get on Hoodie and do this. Yeah. People will come to my house and beat me up.
So this would be something like Ethereum mainnet? Or like an
exactly.
L2.
Yeah, it would be like what people would do in Ethereum mainnet. So
20x that.
Yeah.
Just by kind of slotting in.
Exactly. Just on the you should, just in terms of throughput, you should be able to get about that much. So that's on our own testnet, which is not a Hoodie, which is completely private, so that we can, as I said, do things that you can't do in a shared space.
That's awesome. Does this technology introduce new attack vectors, weak points?
That's a great question. So we actually have a very paranoid Byzantine approach. I would say even more paranoid than what's out there right now in gossip stuff. Again, for people who are interested, you can see all of our papers on Byzantine gossip.
I love all this stuff. It's so cool.
Yeah.
You're giving me homework. Oh, I love it. I love
There's
this
no
stuff.
test, though. There's no test. Yeah.
I'm going to test myself.
That's right, but you can go and actually have a whole section on just that.
Okay, cool.
Yeah.
Yeah.
So the same coding that allows you to be more efficient is actually an amazing hash. So basically, that's the underlying approach.
Okay.
You're using the coding also as a verification hash,
I see.
just at a high level.
Right. I was thinking though, like the fact that these validators, for example, are block builders, it feels like that they maybe exist in two different worlds, right? So they're building blocks or validating the chain, then they're also participating as like a flex node. Is there any issue around that? No.
No, because anybody can run, compared to everything they're doing, running have a CPU on. I mean, they have to get data,
Okay.
and they have in and out, right? So you can't make money just by talking to yourself.
Tell that to some of the streamers, some of the Zoomer streamers I've seen. I don't know how they make money, but they're making a lot more than me. All right, good. Thank you, Sorry. You've been very, very kind. I have one more question for you on this incredibly difficult thing. Do you have like a long-term plan in terms of an ecosystem you're focusing on, or is it just you'll come and be a part of any ecosystem that is kind of willing and able? Put another way is, like, are you more aligned with like Ethereum or Solana, or is it more like just everybody coming?
Everybody,
Yep.
we're completely neutral, and one of our buy phrases is scale any chain. In the same way that if people are building buses in memory, they build it for everybody.
Yeah.
You need specs. You need to be good enough to run, whatever a system needs. But you're just trying to make the best one, and that's it.
Absolutely. Well, I would I would love to speak with you again.
I love that.
And this would be my test. Honestly, I'm serious.
Oh wow!
I would look through some of the stuff that you've mentioned, and then I would try to articulate it in my own way, and then have you be like, "No, C-. Come again."
I would never do that. Thank you. I would love that. Yeah.
All right,
love that.
but thank you so much, and I appreciate the time. Thank you very, very much.
Thank you so much. Yeah, we really enjoyed the conversation.
Yeah. All right, so thank you guys, everybody. I hope you enjoyed that. I hope your brain hurts like mine does after listening to that, but very, very cool stuff. Next up, Graham Stone. We'll be interviewing the co-founder of OneInch, Sergey. Oh gosh, butcher her name, Sergey Kuntz. So please stay tuned for that. Free self-custody Bitcoin. Scan this QR code right here from within the Bitcoin.com wallet app. You better hurry up. Anyone can get it. Oh, is it still there? Is it gone? I don't know.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, gift, voice, country, engine, complex, new, fate, purpose.
When crypto leaders want reach and results, they choose Bitcoin.com. A global audience, massive reach across social, web, and mobile, engaged users who trust our brand, and campaigns that move at the speed of crypto. From press to podcasts, X to SEO, display ads to rewards integrations in the app, Bitcoin.com delivers exposure across every channel that matters. Our clients include the world's leading exchanges, wallets, and gaming platforms. When they need impact, they trust Bitcoin.com. Get your brand where it belongs, in front of millions. Partner with Bitcoin.com Media today.
We are giving away free self-custody Bitcoin during our live conference coverage. First, download the Bitcoin.com wallet app. During our conference coverage, we're going to show you these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner to scan these golden ticket QR codes. Swipe to auto-magically send the Bitcoin to your self-custody wallet. But be ready, be fast, because anyone watching can get the Bitcoin.
I got into crypto last year when I joined Bitcoin.com. It seems like it was the right time because when I joined the company, everyone is into crypto. And I guess it influenced on me. And then I started to get into crypto, and then I started to buy, and then now I'm like a little bit of a DJ now.
So I got into crypto sometime in 2014 or 2016, I can't remember. But I was farming Ethereum. I had like 2,000 plus Ethereum at one point. But it was when it was worth nothing. It's like 1 to 2 USD each. So I sold it off. I made a good profit, but 7 years later, I could have become like retired. So the only reason we're having this conversation right now is because I should have held.
No, when I first heard about crypto, it was from my ex-colleague. And it was about year 2017. I was totally new and I don't know what about this. And then come to year 2019, at end of 2019, I was invited by a friend for a seminar. And that was the first time I know what is cryptocurrency and what is Bitcoin. I thought that it's very interesting into the technology and the blockchain kind of technology. Then I tried to, firstly into future trading and spot trading, and more into knowing about different exchanges, the wallets, and then into meme coins. So I then become so degen into playing or trading memes.
I went into crypto space at about year 2019, where I was working for an angel investor that is having a portfolio company in crypto space, which interests me quite a bit. So I decided to venture into this field.
I got into crypto while I was working with agencies on finance-related clients. And I always felt like crypto was this interest that I could never really speak to my colleagues about. So it's really interesting entering a crypto company where my interests in crypto become part and parcel of daily life.
So at Bitcoin.com, I'm the FP&A manager. I translate accounting data for the management because, it's just complicated. So the management wants to get insights, right? So I provide the insights from the data. So I'm kind of like a translator, so to speak. A financial translator, if you will. Yeah.
I'm the growth lead. And what that means is leading initiatives that lead to growth, whether on partnerships fronts or within our internal departments.
I'm the compliance officer for Bitcoin.com. Basically, I make sure that, we stay regulated in certain countries and then we follow the rules and regulations that's being set off.
I'm finance director of Bitcoin.com, so oversee the accounting tax function as well as treasury.
I'm actually working in the finance department, oversees a 2 cost center, plus in charge of the revenue-related data transaction. Okay, basically for me, I have been in Singapore for more than 30 years. So I like the cleanness and the safety in Singapore. The environment are good. You have to mix around with positive people, and it's a hub for most of the Southeast Asia countries, most of the people internationally, yeah.
I like living in Singapore because it is safe, it's clean, and there's lots of food because I'm a foodie.
I would say because it's my home, I'm obliged to like it. Like, you can't really beat the safety and the cleanliness we have here with some of the things we take for granted, like the MRT system. I think the weather is very predictable, which is good. So a lot of people complain that, oh, Singapore is only rain or shine. But that's good, right? Because if you go to other countries, hey, suddenly you have a typhoon, a super typhoon at your doorstep. You want that? And also Singapore is also free from natural disasters. So yeah, that's something we take for granted. I'm sure a lot of Singaporeans have never been in a situation when the ground was quaking below you and you're just fearing for your life.
It's really nice to live in a kind of a hub where you have easy access to different neighboring countries. And in that sense, Singapore is situated similarly to a city in Europe, I would dare say, where if you wanted to access Malaysia, Vietnam, Bangkok, you're less than 2 hours flight away. My colleagues often say things like they like the food and they like that it's safe. I have no quarrels there. I've lived abroad. I've realized that, like safety is something that you can't really take for granted. Efficiency is also another thing that I will rate quite highly on that list because when you live in Singapore, things just work.
If you're considering to live in Singapore, the advice is go explore the whole city. Avoid all the fancy restaurants that you see in the malls. Visit the local coffee shops. Visit the local hawkers.
I think if you want to live in Singapore, you have to be earning quite a bit of money. Unless you taper your expectations and live like a local, you can get a flat in HDB. I feel like a lot of foreigners, they tend to pigeonhole their choices into like, oh, I have to live in this area because this is the cool place for foreigners to live in. Oh, I have to spend this amount at like this upmarket supermarket when they can be actually spending their money more wisely. So I've actually talked to some ex-colleagues. I've reduced their expenses easily by 60-70% by just making them think about whether this is a smart choice or not. So I think instead of phrasing it as earning more money, I'd be like, spend my money more wisely and don't be like compelled to think that you have to spend this amount of money just because, yeah.
The train will be crowded, so try to avoid those like the timing that at least like working hours time period, so that you won't be stuck in the crowd. Yeah.
The first thing to consider is to find a suitable accommodation because the rental expense is quite high. The rest of the stuff are relatively cheap and manageable. Probably, they can also take a chance to travel around because Singapore is quite near to all the neighboring countries very convenient.
On a hot day, go try a sugarcane juice. Make sure there's a lot of ice in it. On a rainy day, maybe go for a bak kut teh. That's like a pork rib soup. It's really tasty. But TLDR, food in Singapore is really good. Please feel free to explore. There's no limits to the next frontier. Like, there's new tech being shipped out. There's new projects being built every day, and everyone just wants to do something better. I work with great people, and I dare say so because it's a very collaborative environment. It's very different from the types of traditional finance marketing roles that I've had in the past. Of course, things can get quite rough, and it's always very fast-paced. It's an industry that doesn't sleep.
Like, even people don't really know the industry, it's quite easy to go into this space. So you get to know different kinds of people from different fields. So it's quite interesting to know different people.
Because I love crypto, so I was trying to look for an opportunity into crypto industry. In my previous job, I will not allow or so kind of a bit sensitive to talk about crypto in such a topics. So, but in the crypto related company, when I start to join the company, I feel like everybody is talking about crypto. Once I step into crypto, I would like to have like environment that people is talking about the same topic. Yeah.
I guess it's the people. Because in crypto, it's all about all these, I guess we're all younger and it's just more energetic.
I feel like because I'm a crypto native, it feels very second nature to me. So it's something I do on a daily basis. So I also have the knowledge to help people who want to get into crypto. In fact, Humphrey got into crypto through my recommendation because I was insisting, no, you should onboard STAX. It's like, no, it's so troublesome. I'm like, no, it's not troublesome. So one good thing about working in crypto is, yeah, you can expose your friends to crypto, but of course what they do is their own choice. So that's another thing. But empowering is better than being ignorant, right? So that's my point of view.
In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract, and that's it. You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back, plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now. In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract, and that's it. You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back, plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
In the last 7 years, the price of Bitcoin has grown by 50.6% per year on average, far outpacing stocks, commodities, gold, real estate, emerging markets, and bonds. At a $2.2 trillion market cap and growing, Bitcoin is now comparable to currencies like the Australian dollar, commodities like silver, and companies like Google. Bitcoin is here to stay, but as governments around the world print money and Bitcoin vacuums up global liquidity, it is poised to grow much larger. Here's how much one Bitcoin would be worth if it grew as big as a company like Nvidia. Then gold, or the US dollar, global M2 money supply, global equities, global bonds, and global real estate. Nothing can stop this train.
Do you think your crypto is private? Think again. On Bitcoin, Ethereum, and most major blockchains, every transaction you make is public, traceable by anyone, anywhere. What you send, who you send it to, when you send it, how much you hold. All visible, forever. That's not just transparency. It's surveillance. Confidential assets on the Zano blockchain changed the game. Built for privacy from the ground up, Zano's system extends its powerful protections like untraceability, unlinkability, and amount concealment to any token. This opens the door to fully private
All right, we are here with Sergey Kuntz, who is the co-founder of 1inch. Thanks for doing this, Sergey. How are you doing today?
Great. It's a pleasure to be here. Hi, everyone.
All right. So, Sergey, you've been around crypto since the early days. What has convinced you to stick with it through multiple cycles?
I would say the tech. So for me, it was always about the technology itself. It was highly motivating for me as a software engineer, software architect to discover new fields. So I actually did everything in my career, like I did front-end engineering, back-end engineering, even designs. And when I discovered, we can write smart contracts and they're run on decentralized computer, no one can shut down. Sounds great, we can do a lot of things. Then I met my co-founder, Anton Bukov, and he somehow started to travel around the globe, participating on hackathons, and building over 2 nights small prototypes. So actually 1inch was born in one of the hackathons, just as a fun idea.
Yeah, so at the ETH Global 2019, if I'm not mistaken.
In New York City, yeah.
Yeah, could you take us back to that moment? Like, what made you come up with the idea, or how did it evolve?
So we were just traveling from one hackathon to another, built a lot of different things. We even built a decentralized video streaming platform where you paid for each kilobyte with crypto by using payment channels. I think in New York, I met Vitalik Buterin, spoke with them a little bit, Hayden Adams from Uniswap. And then we spoke with Anton about, okay, what should we build? And we got the feeling, okay, maybe something what unites all the liquidity what we have out there into a single one. And the theory was the rate could be better than just on a single Uniswap exchange, for example, because you have better access to more liquidity. And it was just a theory, and we were able to build over 2 nights. So my personal sleepless record is 56 hours on the hackathon.
Okay, wow.
I don't think so that I will try it again.
Yeah, but so were you hallucinating by the end of that, or?
Yes. At the end of the it was in the morning of Sunday. The room behind me started to change. I lost the understanding where I am.
Yeah.
I had just my notebook and focus, and I had to finish this the app so we can really showcase that we do real transaction. And I was pitching a little bit around, and only 2 people said it's the next big thing, and I didn't believe them. And if you ask me, like I need to come back to 2019, it was actually a hard time for myself. It was like I was in a live situation where I had to live in the office on the airbed with no shower for 1 year. But it was fun to travel around the globe, so actually it was a good experience.
Okay. Would it be fair to describe 1inch as a DEX aggregator?
Not anymore. We came to the idea with DEX aggregation in 2019, and we improved over the years the algorithm itself. We came to the Pathfinder, what use multiple markets in between. Looks like a highly complex graph algorithm from one asset to another asset. And nowadays, this tool became just a tool and service for infrastructure. The main product is a protocol that offers seamless experience for swaps in general. So user just create an intent, they want to exchange one asset against another. Even they can say, I want to sell a meme coin on Base and would like to buy on Solana Trump coin. They can do it with one single intent without even any transaction. Yeah, so everything is included in the transaction, all the transaction costs, everything. And it's still non-custody, it's permissionless and trustless, so it can be integrated everywhere as well. So this is the thing what we have built, and today we announced our united platform. We call it oneinch.com. We have reunited our business products, our APIs for the business, for institutionals, for banks as well, and the customer-facing product, the simple swap, where you can swap across different networks even. And a pro interface for professional traders where you can set limit orders, you can do market orders as well, but really slice, so you can do scalping if you want. So, and you have really nice monitoring tools, nice charts, trading view where you can really properly navigate in the DeFi space.
Okay, so it sounds like maybe there's 3 tracks. One is the pro track with all the bells and whistles. One is maybe a simplified version for
everyone,
just not the pros. And then the third one, maybe you're talking about institutions. Could you go into like what does that mean? What institutions?
Yeah, I wanted to add that this product, the simple one, is for everyone, but it empowers people to act like a pro.
Okay,
because our protocol ensures that you get the best execution under the hood. So back to the business product, we call it One Inch Business. It's an API portal where developers, institutions, just business companies can create accounts, create application and API key, and then can use this API key to use our APIs to get the balances of the wallets, to get the portfolio, to get the panel of the wallet, to get the swap routes, to set a limit order, to perform a market trade, and also even to access Web3 nodes. It's also RPC endpoint. Under the hood, we aggregate multiple providers and run also our own infrastructure. So, and we see also huge adoption already. We have more than 2,500 active users, business users. MetaMask is using us, Trust Wallet is using us, Ledger. Even today, we have a huge announcement also with Coinbase. Coinbase offer DAX swaps on Coinbase for users by using our 1inch API.
Okay, so institutions are plugging into the infrastructure 1inch has built to provide a better user experience for their users. Is that basically the idea?
Yes. The thing is, we have built it for ourselves. We invested a lot of time into it, a lot of resources, and you need also maintain it. And if you, as a business, want to have the same, you need to build it by yourself or you use us. So if you build it by yourself, you need to spend a lot of time, a lot of resources. You need to build knowledge inside of your company and people as well, and build the infrastructure and maintain it. Or you just spend 5 minutes to integrate 1inch API.
Okay. And what's your business model there with the institutions we're plugging in?
Yeah, we have subscription packages. So we have different rates, limits for accessing our APIs. Every call on every API costs something. We just make a margin on top of it and earn on that. Yeah, this is actually the main business model right now for our holding structure, labs holding structure, what we have now. So we have a sustainable presence and grow as well right now.
Just going back to the rebrand, why rebrand now?
So the project started on the hackathons. It was just a fun idea. So we never thought that we will build something out of it. We didn't plan, and we didn't do it at the beginning as well until we recognized people start using it. Some of the people on the hackathons started to share the link with someone else, with the friends and users for themselves. And we have seen volumes, and we started to work at as a project, pet project. Yeah, just free time for free, and it became something what is huge, I would say. And the brand was just our nice unicorn, like this focused unicorn. It's not this nice unicorn from Uniswap. It's a unicorn what is highly focused. It represents our style. We are always highly focused and committed. We always try to deliver to more than 100%. At the end, we found out actually it's not a business fit. So it's not institutional grade and enterprise grade branding. And we thought, okay, we need to also reduce this noise what we have with these colors, with rainbows, with these elements what we use with the unicorn. And that's why we did a workshop with our team. And in 2 weeks, we worked out a nice brand, kind of simple one, without noise. And this is how it should be. If you think back to this iPhone presentation of Steve Jobs presented at the beginning, like all the nice smartphones what were out there, BlackBerry with the keyboard and the functionality that they offer, they were not really smart. And the same situation we have right now in DeFi, we have all the different protocols, they're not really smart for the end customer. And Steve Jobs introduced an iPhone where you don't need a pencil, what you had to use before, right? You use just your finger because it's much simpler. The same here, you don't need to choose all the protocols or bridges. You just choose what you want to get, what you want to sell, and then you just press the button.
Okay. So intent-based user experience, right? When I hear that word intent-based, I think of cow swap. Is 1inch similar to cow swap?
So we are different. Kyle Swap, I think, came as first project with the intent-based approach, where someone declares what they want and how it's going to be delivered. It's someone under the hood, and someone more professional do it.
Yeah.
I like this idea from the beginning very well, and as soon as I recognized that math bots started to extract value from 1inch users who use our Pathfinder algorithm and these complex transactions, we were looking for a solution, and we came to something what is decentralized solution. What we have right now on CowSwap is more or less constant. There's a penalty system for market makers who need to deliver rates and someone else settle. At the beginning, CowSwap team settled the trades, so it's centralized settlement. In our case, it's more different. We have Dutch auction. My co-founder came to this idea. We have Dutch auction, but actually also is used in Uniswap Max. They mentioned us in the white paper. So the invention was just to sell user order to market makers based on Dutch auction. And market makers are interested to settle as soon as it's profitable for them, so they compete between each other, and the settlement is decentralized. Any of these market makers who participate in the ecosystem can settle. And who settle first, they take first. And this gives better rates for the user. Even surplus as well. So user get a lot of surplus at 1inch by using our intent-based swap, the simple swap. We have cases where someone exchanged 10 million USDT to Ethereum and got 200K more in US dollars.
Okay.
This is new Porsche. It's 911 Turbo. Not Turbo S, but Turbo. For free.
Okay. So basically, you've got a mechanism that, in a decentralized way, enables the optimal routes without relying on a centralized counterparty.
The optimal settlement and execution. It's like you can think about that similar way as NASDAQ before. Like NASDAQ is a centralized thing, and you need to get access to it, and it's difficult, and you need to be market maker and whatever. At the end, at NASDAQ, someone created an order, and market makers, they try to execute it. So here the same. User create an order, and market makers, it's their bread, how to settle it at the end, how they hedge it. Some of them, what I have seen based on our analytics, they even borrow on Aave, settle the trade, do the reverse trade on centralized exchange, and withdraw from centralized exchange to pay the back from the lending protocol. This is one of the examples. Some of them are like buying on Solana some tokens and sell on Ethereum for the user if the user wants to get it on Ethereum. So there are a lot of different strategies, and users should not care about that. And also, we who build this, we should not care about that. It should be our approach is we build something what gives opportunity for both sides, for someone who wants to get the best execution, and the other side, market makers would like to make money out of it. So As soon as we make the opportunity, we create a market actually. So both sides use it because it's profitable for both sides. So this is the idea.
Okay. So, how do you compete against the Uniswap, perhaps the most well-known, brand recognized, decentralized exchange?
We don't compete. I don't see Uniswap as a competitor. I don't see a 0x competitor. The market is still small. We are very small compared to centralized exchanges, and we are very small to traditional finance. So Uniswap is for us a partner who provides liquidity. Uniswap is for us also a partner who onboard new users for own user interface. And as soon as these people start to use Uniswap, they recognize, oh, there's more out there. There's also Matcha. There's also maybe Oros, and also OneInch. And we do our best to be the best in the market for all the different offerings that we have, so they come to us. Yeah.
So, would it be fair to say that you see the competition more as between the decentralized exchange world and the centralized exchange world?
So with our OneInch.com release today, we address the market of crypto. Not decentralized finance, not Web3, but crypto. And crypto is the market what includes DeFi, Web3, and centralized exchanges. So I want these people who trade on centralized exchanges to feel comfortable to give on assets away to someone who can gamble with it, what you have seen in the last years, happening multiple times. They can just come to us and exchange in trustless manner. And also even get better execution, because like all these centralized exchanges are actually isolated markets. But we are not isolated. We have open market with open opportunity for all sides. So this is our strategy and goal right now, to get these crypto traders. We have around, I think, 700 million crypto traders right now out there. And only 2% of them are using decentralized finance, and we want to change this. As soon as we cover the crypto space with our products and have higher adoption, we will address traditional finance as well.
Do you think that decentralized finance will eventually replace traditional finance?
It will replace, like cloud computing replace the on-premise machines, local hosting machines. It's simpler, it's better architecture, it's more transparent, yeah, simple to integrate, simple to build on top of it, and it's similar also to early days of internet. No one used internet, yeah, at the beginning, and we had these talk shows where people said, "Oh, who needs internet?" And today you cannot even live without internet. So, and also the banks, they adapted, right? They used the internet for the transactions, and then they started to use also cloud computing for run all the things what they need to run on computers. So, and they will adopt, and they start already to adopt. My bank offering crypto. I can trade, buy, sell, whatever, like even stake Ethereum in my bank. They use it already. But there are still these traditional banks who are fighting crypto projects, crypto people. They close the bank accounts, for example. What we have seen recently in WIO Bank in Dubai, in UAE, they are closing bank accounts of crypto people.
So fair to say, perhaps, that you think it's just a matter of time until crypto rails replace TradFi rails. What would you say are the biggest barriers to that happening at the moment?
The user experience, what we are solving in OneInch.com. Also user experience in terms of like for the BTC customer, for the normal people who would like to just exchange small amount also, or big amounts of crypto in a simple way. And also a user experience for business customers. Yeah. So the integration should not take more than 5 minutes. It is our goal to provide this experience to all of them.
Do you have any thoughts on the issue of self-custody where, a lot of people run into problems with that where, okay, like if I lose my private key, it's game over.
So this situation became much better in the last years. If you use MetaMask, you can log in with your Google account and you will not lose your keys because you use your Google account to log in. Yeah, of course, someone can hack your Google account and get access to your crypto. So, but still non-custody. So no one has access except you to these assets. Actually, this kind of accounts we had already in 2020, but there was less adoption. And nowadays I see MetaMask and other to provide such options. If you look into Infinix, for example, you use passkey to log into your Infinix account, so you can also trade the non-custody Meta and hold your crypto without trusting anyone.
All right, so let's fast forward 5-10 years. Do you think TradFi Rails will be mostly replaced by then?
So 10 years is like 100 years in the traditional world, I would say. So I think...
What's the timeline we're looking at here?
I think like maximum 5 years we will have really good adoption. I have a bet like 2-3 years we'll see a lot of banks offering crypto, offering possibility to invest in or in stake. Yeah, so I already said my bank can already offer a stake to stake Solana, to stake Ethereum, and I do it. So I think like 2-3 years, it's accelerating very fast.
Okay. All right, let's talk for a minute about the 1-inch token, which launched when exactly?
It was December 2020.
2020. So how would you assess its performance?
I don't assess the performance of 1-inch token at all. I already said at the beginning, we are, with my co-founder, always about tech, building solutions, improve the space, and the token is something what we need for the ecosystem. Without it, it would be not trustless, it would be more centralized or very centralized. So we would need someone who would decide, okay, what protocol we need to add, what settings in the protocol we need to set. So what is allowed, what is not allowed, then we would be not different than a centralized exchange, That's why we need DAO who make the decisions. It's a community. And also keep an eye on that everything stays decentralized. All the protocols should not have admin keys. We don't have something like that. We don't have proxies where someone can exchange the implementation. So there's a community who takes care about that. That's why we need 1-inch token. Of course, we have some nice things like you can stake, you can delegate your unicorn power, we call it. It's like just voting power to market makers who can participate in an ecosystem. Without the unicorn power, they cannot settle trades. It's like a private book. So just one thing what like is a part of the tokenomic right now. There are some thoughts from different community members to improve it. So we will address this also in the next year, I think, to improve this as well.
Okay, I'd like to narrow in on that a little bit. So in the last few months, there's been a big narrative around value accrual to a token through like buyback with the buyback and burns, or buybacks with the Hyperliquid being perhaps the prime example. Does 1-inch token have anything like that?
So we don't have buyback and burn right now. So what we have is we have one of our labs companies is buying 1-inch token on the market, and it actually bought a lot of them. So we didn't announce it. We don't speak about that normally. It's just something what decision was made by the directors of the company. There are some assets, and there's no other options what to do with them. let's invest into the ecosystem to buy back the 1inch token. There were some ideas about to buy a public company, to make it 1inch branded and let the public company buy 1inch token, call it
like a DAT.
Yes, something like that. And I think it's a good thing to support the ecosystem, to maybe have a public company one day and to buy the 1inch token and maybe hold it in the treasury or even to burn it. So, and this decision can be done maybe by the DAO as well. So it can be a signal for this public company to what to do with these tokens, to call it or to burn it maybe.
Let's see. All right. Where do you think 1inch will be 5 years from now? What will its position be in the crypto ecosystem?
My bet is we are integrated in traditional finance almost everywhere.
Do you expand on that a little bit?
So we are working very hard to get institutionals and business integrating our APIs. So we have the feeling that everyone wants Web3 in our company. At least it's buzzword. And our mission is to make it possible. That's why we launched 1inch Business to offer these APIs for integrations. And my bet is that the financial industry will adopt crypto and will adopt by us, so we will empower them with our technology, with our services to use Web3 properly.
Okay, so is there anything else that people should know about 1inch or that we missed here in this discussion?
Yeah, just come to 1inch.com and try it out and give us feedback.
Okay, great. Thank you so much. So, Sergey Kunz, co-founder of 1inch. Thank you so much for your time. Up next, we've got Kyle Elicott of STAX Asia Foundation. So stay tuned for that. We'll be right back.
Stable, but exposed. If your dollar token can be tracked, frozen, or flagged, it's not freedom. Freedom Dollar is the first uncensorable stablecoin, private by design, built on Zano. Unlike Tether or USDC, Freedom Dollar hides your balance, your activity, and your identity. No tracking, no freezing, no middlemen. Hold, send, and swap Freedom Dollar privately, right inside the Bitcoin.com wallet. And now you can even spend it worldwide. Privacy isn't a luxury, it's a right. Freedom Dollar is your escape from surveillance finance.
Until now, fiat balances only lived on centralized exchanges and fintech apps. Not anymore. Bitcoin.com Balance brings fiat balances to the decentralized world. That means you can buy and sell with ease, but you always keep complete control of your crypto. Once you've funded your Bitcoin.com balance, you can buy Bitcoin and 50 plus cryptos in seconds. More failed transactions, lower fees, and you can sell back into your Bitcoin.com balance anytime. Need Bitcoin fast? Just tap, confirm, and boom, crypto in your wallet. No waiting, no friction. Bitcoin.com balance. The power and security of decentralization, the ease of a centralized exchange.
Did you make it, son?
Yes, I'm here.
They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, gift, void, country, engine, complex, new, fate, purpose.
When crypto leaders want reach and results, they choose Bitcoin.com. A global audience, massive reach across social, web, and mobile, engaged users who trust our brand, and campaigns that move at the speed of crypto. From press to podcasts, X to SEO, display ads to rewards integrations in the app, Bitcoin.com delivers exposure across every channel that matters. Our clients include the world's leading exchanges, wallets, and gaming platforms. When they need impact, they trust Bitcoin.com. Get your brand where it belongs, in front of millions. Partner with Bitcoin.com Media today.
We are giving away free self-custody Bitcoin during our live conference coverage. First, download the Bitcoin.com wallet app. During our conference coverage, we're going to show you these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner to scan these golden ticket QR codes. Swipe to auto-magically send the Bitcoin to your self-custody wallet. But be ready, be fast, because anyone watching can get the Bitcoin.
I got into crypto last year when I joined Bitcoin.com. It seems like it was the right time because when I joined the company, everyone is into crypto, and I guess it influenced on me. And then I started to get into crypto, and then I started to buy, and then now I'm like a little bit of a DJ now.
So I got into crypto sometime in 2014 or 2016, I can't remember. But I was farming Ethereum. I had like 2,000 plus Ethereum at one point. But it was when it was worth nothing. It's like 1 to 2 USD each. So I sold it off. I made a good profit. But 7 years later, I could have become like retired. So the only reason we're having this conversation right now is because I should have held.
No, when I first heard about crypto, it was from my ex-colleague. And it was about year 2017. I was totally new and I don't know what about this. And then come to year 2019, at end of 2019, I was invited by a friend for a seminar. And that was the first time I know what is cryptocurrency and what is Bitcoin. I found that it's very interesting into the technology and the blockchain kind of technology. Then I tried to, firstly into future trading and spot trading, and more into knowing about different exchanges, the wallets, and then into meme coins. So I then become so degen into playing or trading memes.
I went into crypto space at about year 2019, where I was working for an angel investor that is having a portfolio company in crypto space, which interests me quite a bit. So I decided to venture into this field.
I got into crypto while I was working with agencies on finance-related clients. And I always felt like crypto was this interest that I could never really speak to my colleagues about. So it's really interesting entering a crypto company where my interests in crypto become part and parcel of daily life.
So at Bitcoin.com, I'm the FP&A manager. I translate accounting data for the management because, it's just complicated. So the management wants to get insights, right? So I provide the insights from the data. So I'm kind of like a translator, so to speak. A financial translator, if you will. Yeah.
I'm the growth lead. And what that means is leading initiatives that lead to growth, whether on partnerships fronts or within our internal departments.
I'm the compliance officer for Bitcoin.com. Basically, I make sure that we stay regulated in certain countries, and then we follow the rules and regulations that's being set off.
I'm finance director of Bitcoin.com, so oversee the accounting tax function as well as treasury.
I'm actually working in the finance department, oversees a 2 cost center, plus in charge of the revenue-related data transaction. Okay, basically for me, I have been in Singapore for more than 30 years, so I like the cleanness and the safety in Singapore. The environment are good. You have to mix around with positive people, and it's a hub for most of the Southeast Asia countries, most of the people internationally. Yeah.
I like living in Singapore because it is safe, it's clean, and there's lots of food because I'm a foodie.
I would say because it's my home, I'm obliged to like it. Like, you can't really beat the safety and the cleanliness we have here with some of the things we take for granted, like the MRT system. I think the weather is very predictable, which is good. So a lot of people complain that, oh, Singapore is only rain or shine, but that's good, right? Because if you go to other countries, hey, suddenly you have a typhoon, a super typhoon at your doorstep. Do you want that? And also Singapore is also free from natural disasters. So yeah, that's something we take for granted. I'm sure a lot of Singaporeans have never been in a situation when the ground was quaking below you and you're just fearing for your life.
It's really nice to live in a kind of a hub where you have easy access to different neighboring countries. And in that sense, Singapore is situated similarly to a city in Europe, I would dare say, where if you wanted to access Malaysia, Vietnam, Bangkok, you're less than 2 hours flight away. My colleagues often say things like they like the food and they like that it's safe. I have no quarrels there. I've lived abroad. I've realized that, like safety is something that you can't really take for granted. Efficiency is also another thing that I will rate quite highly on that list, because when you live in Singapore, things just work.
If you're considering to live in Singapore, the advice is go explore the whole city. Avoid all the fancy restaurants that you see in the malls. Visit the local coffee shops. Visit the local hawkers.
I think if you want to live in Singapore, you have to be earning quite a bit of money. Unless you taper your expectations and live like a local, you can get a flat in HDB. I feel like a lot of foreigners, they tend to pigeonhole their choices into like, oh, I have to live in this area because this is the cool place for foreigners to live in. Oh, I have to spend this amount at like this upmarket supermarket, when they can be actually spending their money more wisely. So I've actually talked to some ex-colleagues. I've reduced their expenses easily by 60-70% by just making them think about whether this is a smart choice or not. So I think instead of phrasing it as earning more money, I'd be like, spend my money more wisely and don't be like compelled to think that you have to spend this amount of money just because, yeah.
The train will be crowded, so try to avoid those like the timing that at least like working hours time period, so that you won't be stuck in the crowd. Yeah.
The first thing to consider is to find a suitable accommodation, because the rental expense is quite high. The rest of the stuff are relatively cheap and manageable. Probably they can also take a chance to travel around, because Singapore is quite near to all the neighboring countries, very convenient.
On a hot day, go try a sugarcane juice. Make sure there's a lot of ice in it. On a rainy day, maybe go for a bak kut teh. That's like a pork rib soup. It's really tasty. But TLDR, food in Singapore is really good. Please feel free to explore. There's no limits to the next frontier. Like, there's new tech being shipped out, there's new projects being built every day, and everyone just wants to do something better. I work with great people, and I dare say so because it's a very collaborative environment. It's very different from the types of traditional finance marketing roles that I've had in the past. Of course, things can get quite rough, and it's always very fast-paced. It's an industry that doesn't sleep.
Like, even people don't really know the industry, it's quite easy to go into this space, so you get to know different kinds of people from different fields. So it's quite interesting to know different people.
Because I love crypto, so I was trying to look for an opportunity into crypto industry. In my previous job, I will not allow or say so kind of a bit sensitive to talk about crypto in such a topics. So, but in the crypto related company, when I start to join the company, I feel like everybody is talking about crypto. Once I step into crypto, I would like to have like environment that people is talking about the same topic. Yeah.
I guess it's the people, because in crypto it's all about all these, I guess we're all younger and it's just more energetic.
I feel like because I'm a crypto native, it feels very second nature to me. So it's something I do on a daily basis. So I also have the knowledge to help people who want to get into crypto. In fact, Humphrey got into crypto through my recommendation because I was insisting, no, you should onboard STAX. It's like, no, it's so troublesome. I'm like, no, it's not troublesome. So one good thing about working in crypto is, you can expose your friends to crypto, but of course what they do is their own choice. So that's another thing. But empowering is better than being ignorant, right? So that's my point of view. Yeah.
In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract. And that's it! You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back, plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now. In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract. And that's it. You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
In the last 7 years, the price of Bitcoin has grown by 50.6% per year on average, far outpacing stocks, commodities, gold, real estate, emerging markets, and bonds. At a $2.2 trillion market cap and growing, Bitcoin is now comparable to currencies like the Australian dollar, commodities like silver, and companies like Google. Bitcoin is here to stay, but as governments around the world print money and Bitcoin vacuums up global liquidity, it is poised to grow much larger. Here's how much one Bitcoin would be worth if it grew as big as a company like Nvidia, then gold, or the US dollar, global M2 money supply, global equities, global bonds, and global real estate. Nothing can stop this train.
Do you think your crypto is private? Think again. On Bitcoin, Ethereum, and most major blockchains, every transaction you make is public, traceable by anyone, anywhere. What you send, who you send it to, when you send it, how much you hold. All visible, forever. That's not just transparency, it's surveillance. Confidential assets on the Zano blockchain changed the game. Built for privacy from the ground up, Zano's system extends its powerful protections like untraceability, unlinkability, and amount concealment to any token. This opens the door to fully private financial tools. Imagine a USD stablecoin, but shielded. Imagine Bitcoin wrapped and transacted anonymously. Imagine enterprise tokens that move without exposing sensitive details. Confidential assets make all of this possible. And now, with the Bitcoin.com wallet, you can hold, send, receive, and swap Zano's confidential assets, all inside a single, easy-to-use, self-custodial app. Privacy isn't just an add-on, it's the future. Update your Bitcoin.com wallet today and step into the next era of private crypto.
free self-custody Bitcoin. Scan this QR code right here from within the Bitcoin.com wallet app. You better hurry up. Anyone can get it. Oh, is it still there? Is it gone? I don't know.
In this video, you're going to learn how to mint TBTC on the Ethereum network using the Bitcoin.com wallet. So first, you'll need to make sure that you have at least 0.01 Bitcoin in your wallet and some Ethereum to cover the gas fee. Once you meet the requirements, you're going to head over to the Web3 Explorer on the wallet. On the search bar, you're going to type in dashboard.threshold.network. Next, you're going to scroll down and hit Mint TBTC and connect your Ethereum wallet. Find the Bitcoin.com wallet and then press connect. And once again, make sure the connected wallet has some Ethereum to cover gas fees. Under the BTC return address, you're going to remove the Bitcoin : and this address will be the same address that is funded with at least 0.01 BTC. Once you've done that, you're going to tap Generate Deposit Address. Now, this will create a receipt, and you can save that receipt somewhere and then press back, and you'll see that the deposit address has been generated. So this is where you're going to send your Bitcoin. After copying the deposit address, go back to your Bitcoin wallet and enter it into the address bar. Let's switch to base currency Bitcoin, and then we're going to send 0.01 BTC to that address and press continue and slide to send. Next, we're going to go back to the dashboard of the Threshold Network site and connect the same Ethereum wallet that we used initially. And after an hour or so, you should see that your deposit was confirmed, and you're going to tap on Bridge. Now, you can see here that you have to pay a network fee for this, so make sure that your wallet is funded with Ethereum. After a few seconds, you should see your mint initiate. After a few hours, you should see the TBTC show up in your Ethereum wallet. That's how you mint TBTC using the Bitcoin.com wallet.
Stable, but exposed. If your dollar token can be tracked, frozen, or flagged, it's not freedom. Freedom Dollar is the first uncensorable stablecoin, private by design, built on Zano. Unlike Tether or USDC, Freedom Dollar hides your balance, your activity, and your identity. No tracking, no freezing, no middlemen. Hold, send, and swap Freedom Dollar privately, right inside the Bitcoin.com wallet. And now you can even spend it worldwide. Privacy isn't a luxury, it's a right. Freedom Dollar is your escape from surveillance finance.
Sorry, that's all good. Okay, we are back live from Token2049, Singapore. Not to be confused with Dubai. Token2049 Singapore. We are at the Bitcoin.com live news desk on the conference floor. This desk is powered by Threshold Network. And we are here with Kyle Elicott. He is the executive director of the STAX Asia Foundation. Hello, sir.
Hi, how you doing?
I'm pretty good. How are you enjoying yourself so far?
So far, so good. Day one of Token 2049 Singapore again. But first day of Token, the conference, first few days of the Token week. So far, it's been pretty exciting to see on the heels of KBW or Korea Blockchain Week last week, and just recently as well, BTC Asia and WebEx, to see how the entire digital asset community is starting to come together here at the epicenter of Singapore. Has been pretty foundational. And day one so far of Token has been pretty phenomenal, and haven't yet gotten to a panel, but maybe later after this or tomorrow.
Yeah. You made me almost start crying when you said day one of Token week. Oh, God, gut punch. Jokes aside, I guess I just want to get a little history. Sure. But immediately after that, we'll return to what you were just talking about, because I was at KBW, I was at WebEx in Tokyo, so I can't wait to hear your thoughts on that. But before that, little history on yourself. What path took you to what you're doing today?
Oh, wow. Okay, so a little history on myself. I'm lucky enough to be the executive director of the STAX Asia Foundation, where I am responsible for looking after not just STAX, but everything when it comes to the Bitcoin economy or building on Bitcoin, whether that's in DeFi, whether that's in other categories that are being built around Bitcoin. I'm lucky enough to help champion that message and also provide a lot of education to investors, whether institutional or retail, and work with some outstanding partners here to bring them into the Bitcoin side of the industry. And what brought me here, I've been lucky enough to be in this part of the industry from Web3 and digital assets for about 6, almost 7 years now.
Okay.
I kicked off my journey on the venture and research analysis side, studying these entire markets as to all of the noise that you and I were talking about just before we started. There's so much happening so quickly. And I was lucky enough to work with a lot of investors at the time, trying to figure out, how does this picture all look? So started researching, started diving in, started categorizing.
Is this mostly Bitcoin, or did it include
the whole industry? Trying to figure out what the industry was going to look like from a landscape perspective. And I later then turned that into an investment thesis to then later getting into the investment side of the industry. And full circle, I joined the STAX ecosystem back in 2021, right after mainnet, and ran today Bitcoin Frontier Fund, then called STAX Ventures. We were both an accelerator and a venture fund for the STAX ecosystem. And very shortly after we started investing into STAX projects, back to that research, we started to look at what was to come for Bitcoin. So for Bitcoin to be more than a store of value, what else needed to be there? And we started to expand the thesis and invest across the entire Bitcoin industry. And then I was also COO at Fundamental Labs and got a chance to, again, get further and deeper into the venture side. And here we are now in Asia, running Asia, and also investor relations across the board.
Fascinating. So you joined that organization in 21. 2022 must have been a fun time for you.
It was a very unique perspective. It's funny, when I joined in the ecosystem, again, coming from that venture background, seeing all the great founders, the teams, the projects, the possibility, again, of what could be built on Bitcoin, I had a very loud voice and championing as much as I could to bring more capital to the ecosystem, whether that was new venture funds, it was investing into new projects, or is helping founders and investors match each other with education of why Bitcoin was important to start investing into from an infrastructure standpoint. And then 2022 happened, and a lot of things, if anything, we were all too early to the game at that time. And thankfully that spark in 2023 with ordinals and inscriptions started to revigorate the idea of culture and community around Bitcoin, not just as BTC an asset, but Bitcoin as a technical stack and what was possible for Bitcoin to enter its next phase. And once 2023 hit, things got a little smoother from there out.
I'm sure. Yeah. Okay, so 2025, here we are. You just referred to 3 conferences, and before we went live, we talked about another one as well. So let me hear your thoughts on, I guess we'll go in sequential order, like WebEx, Japan, KBW, Korea, and now we're in Singapore. I'd like to hear your thoughts on all 3.
I mean, so far, so good. All of them, again, because we're here at Token. So far, everything's been great at Token. Taking a look back at Hong Kong and Japan. So for a long while, Singapore was such a pivotal spot in the world and in Asia for everything digital assets. And over the last year and a half, 2 years, we started to see that spread out across Southeast Asia, across greater APAC, and then all the way into the UAE. Some of that was, again, early policy and regulation not yet changing in the US. And a lot of the projects, a lot of the capital was still on this side of the world. And when it comes to Japan and Hong Kong, Japan started to see a rise of conferences. Last year, we started to see Teams, WebEx, and IVS in Kyoto pop up to bring that education, bring that community together. And Japan's very important for a lot of reasons. WebEx was a great showcase of that this year in August. Was Japan has a history long in Bitcoin, long in crypto. It also is home to some of the most Bitcoin in the entire industry.
Oh, really?
Yeah. There's over 20 different centralized exchanges that are based in the country. There is a strong demand for not just purchasing, but also holding and then gaining Bitcoin in some possible world. And with that, we've had the rise of MetaPlanet just recently and its success. There's a big policy shift in Japan around tax reform, around potential ETFs in the future, also the introduction of staking and Bitcoin DeFi. All of this is going on along with the new stablecoin, the JPCY, all got introduced in this last year. So WebEx was a culmination of a showcase of all of that. And then lastly, it brought together people from the US, from other regions in Asia and the UAE to showcase how things have progressed and moved forward. So it was a very good, and I'll say also to see the openness of corporations like an SBI, for instance,
that's right,
investing, doubling, tripling down across the board. A lot of the exchanges opening up for the first time, showing the world that they are there and that they are open for business more. And then going back to MetaPlanet, you got a lot of questions and a lot of conversations around treasury companies like MetaPlanet or ETFs possible for the country. So a lot happened in Japan. Then we went right to Hong Kong.
That's right.
We don't get a break apparently.
No. I went the next morning.
Yeah, same. It was a great half week in Tokyo and another half week in Hong Kong. And Hong Kong, very similar to Singapore, has a storied history as a pivotal spot for this industry. And this year we saw again a rise, if anything, a reemergence of that. The industry came back. The industry was there in waves. Bitcoin was everything. You had people from the US visiting Asia for the first time, being in Hong Kong for the first time, talking about treasury companies, talking about stablecoins, talking about hyperliquid, talking about all of this industry and what it has meant in the past for Hong Kong to what it is now. And this year, again, we had the stablecoin bill that was just passed. We had new regulations proposed. We had the beginnings of treasury companies in Hong Kong with 1723 or Moon Inc. There as well. So a lot of activity, but most importantly, it was this build-up all the way to Token. And we had some other ones before WebEx, as you and I were talking about, Vietnam. Vietnam saw its first institutional event with Conviction put on by Coin98 in the week of GM Vietnam and ETH Vietnam. Yeah. So you're starting to see these markets that were once emerging now coming to the surface saying, hey, we're open for business. We're looking at crypto not just as a policy standpoint, but also how do we place Bitcoin into this and how does this play for the individuals within?
Yeah. The only thing I would add to that, I mean, I agree with everything you said, is for me, one of the bigger takeaways, I'd be curious to see if you agree or disagree, was the amount of retail to WebEx in Hong Kong surprised me.
Very.
Right? Like I was at WebEx and so much retail. And then I was like, oh, okay, Tokyo, bigger city. Okay, I can see that. And then we went to Hong Kong and there was also tons and tons of just like normal people there. So far, I have to say though, at Token2049, less retail than I expected so far.
I agree. I think Token does an amazing job of being a full, well-rounded conference for everybody. Institution, retail, partners or service providers, to investors, to founders, to teams, to all pieces of this puzzle, all come here to Token, either in Singapore or Dubai.
Yeah.
But you're right, in Hong Kong and Japan, you do see a stronger retail community at the moment. One of it is just, again, their history, but then two, with Japan, again, you have this very exciting shift happening around digital assets. Bitcoin leading it right now, soon others to follow. But you have the local community, the retail traders, now getting excited and warmed up to the possibility that they're going to be able to buy, sell, hold, and trade other assets in a wider fashion than they have. One big reason for that is the policy that has been put forth and now approved is tax change, tax reform. Yes. For those that are listening, if you're not aware, in Japan right now, if you buy any digital asset and you sell it, you are taxed.
And you make a gain.
And you make a gain, thank you. You are taxed at 55%. There's
a limit, but the highest limit is 55%.
Correct, at 55. And now they've lowered that down to the mid-20s. And that's also what showcased a lot of public markets in Japan is the tax structure is very different. So you were able to get that digital asset exposure with a definite lesser tax burden and maybe a diversified risk profile as well.
Meanwhile, at KBW, that was my first time in Korea. And, everybody just couldn't stop talking about how crypto gains are tax-free.
Yes. Yes.
And so that kind of really, really shows why I think Steve of Four Pillars, Korean analytics, crypto analytics, said something, I think it was upwards of 20% of young adults trade crypto, which is insane.
It's incredible. There is a report out there that was released maybe about a month and a half ago, showing the numbers for the first time of all the exchanges and the amount of crypto. I think we'll call it August, just for reference, a data point. The amount of capital that was sitting on exchanges at the time was somewhere around 112 trillion won.
What's that in real money? No.
Yeah,
what's that in dollars?
I think I might be off on that. I think that's 800 billion.
Okay.
Yes, I could be wrong.
Yeah.
Again, someone can fact check me and I won't take offense to it. But you had 120, you've got 20 to 25% of the entire populace trading crypto. So from a retail market perspective, it's one of the best, one of the greatest communities that supports this entire industry.
Yeah.
But something changed at KBW this year.
Okay.
And that was the welcoming of institutions, because the local policy and regulation change from the beginning of the year actually opened up for the very first time institutions, whether you're a nonprofit, a foundation, a corporation, or a publicly traded entity, venture fund and the like, you could now buy, sell, and hold digital assets.
Oh, wow. Okay.
So that became known in Q1, and then it was rolled out as a phased approach. So foundations and nonprofits first. Fast forward, the last unlock was major corporations. And so you saw this embracement of asset managers, banks, financial institutions, and publicly traded companies, and even some private, coming out for KBW for the first time saying, we're not only here, but we want to learn, we want to prepare so that we can start to invest in this industry in a way that we have as retail, now opening up institution, which could take that 20, 25% and very quickly move the ball forward. And lastly, we saw right at the end of KBW, I don't know if you caught this news.
No, please.
Okay, so right at the end of KBW, to that point, Naver, the more or less Google of Korea, actually announced their acquisition of Upbit, Upbit's parent company. So Upbit is one of the largest exchanges. I think it holds about 70% of the market share in Korea.
Yeah.
Naver acquired their parent company at the end of KBW.
I didn't know that, yeah.
That was a huge signal of excitement, and also showing that from an institution and a full societal level, crypto will be embraced throughout Korea, as they had also just passed the latest stablecoin bill for the future stable won that they're going to introduce.
Yeah. I spoke with people in Japan and in Korea, and now they're biased, obviously, because they were Korean and Japanese, but they seem to think that Japan and Korea were on this massive rise, and that this would come at the cost of Hong Kong and Singapore, as in, they would be stealing in some sense some market share or some investments. Do you think that's probably true?
I think that's very true. But I also see it as a diversification. Now projects and teams, if you're building, you've got more markets to go to. You also have more customers than ever to begin to sell to or to use your product in some capacity. From the digital asset, I mean, we're 4 trillion plus or minus total market cap right now across peanuts. Tiny. We're almost there. We're almost to 5. But there's plenty of the pie to go around. And as Japan and Korea start to open up more retail and institution respectfully, that is just going to bring more people on chain. That is going to bring more people on chain and into applications. That's also going to bring new capital into this industry, which we want to see, right? We want to go from 4 trillion to 5 to 10, 10 to 20. And to do that, we need to begin to ease or shift policy and regulation. And to the point of at the cost of Hong Kong and Singapore, I think Hong Kong and Singapore are also evolving as well. You're starting to see across Southeast Asia the rise of some of these emerging markets. So you've got Thailand that's shifting policy and becoming more open, supporting Bitcoin, stable coins, and also payments. You've got Vietnam that's also doing a big push around crypto right now. Stables, new infrastructure and rails. Back to Upbit, actually announced a partnership to launch one of the first exchanges in the company between the military state bank and Upbit as well, which is to me a big signal that, again, as we noted, Upbit owns about 70% of the market share in Korea. To then open up their next market in Vietnam sends a very big signal of where things are shifting around and expanding in Asia.
Very, very cool. Okay, that's enough Asia talk. Let's move on to STAX.
Yeah.
What is STAX? And give me the pitch on STAX. Why STAX over other Bitcoin L2s or sidechains or various accoutrements of Bitcoin?
I love the description. We're just going to start using that going forward. Yes, STAX is one of the original Bitcoin layers that came to rise in the early 2015 to 2018, 2017 era, we saw the beginnings of Lightning, Rootstock, Liquid, and STAX. Each brought something unique to the beginning of Bitcoin's technical architecture or infrastructure, whether that be EVM, so Ethereum virtual machines or Ethereum compatibility with Rootstock, whether that be Liquid or Lightning with payments, and then STAX came in around programmability and smart contracts. Knowing that if we wanted to do something more with the Bitcoin L1, leverage its stability and security, we wanted and needed a layer that could help people to do that and build applications as such. And so we were one of those original layers. We came to market in mainnet in 2021 as one of the early Bitcoin L2s or networks across, or as we call them, Bitcoin layers. And in that time frame, we were very lucky to support a lot of the rise of the ecosystem in terms of investing in R&D, seeing a lot of the early once Bitcoin first that went to Ethereum and Solana come back to Bitcoin. So whether that was DeFi, NFTs, real world assets, or in some cases, even things like DNS or BNS, Bitcoin Name Services, all come back to Bitcoin. And for us, we've continued to stay that smart contract, that programmable layer. We've worked to improve that and continue to set a bar for the industry as a whole. Because when we started, we were paired one-to-one with Bitcoin. So every STAX block equal the Bitcoin block or vice versa. That means
10 minutes.
Generously 10 to 60 minutes for every transaction. And last year we introduced the Nakamoto upgrade, a very big upgrade, substantial for STAX and for Bitcoin, in my opinion, across, because it helped to reduce those block times down to sub-second transactions so they could settle on the Bitcoin layer and the STAX layer and then drop down into the Bitcoin L1 to create Bitcoin true finality as well. So TLDR, Bitcoin layer, brought programmability and smart contracts to Bitcoin and continue to do that. And also now focus on the Bitcoin finance era of Bitcoin's awakening as well with SBTC and some things we'll talk about.
Absolutely. So you mentioned this programmability component. Right now, I would say the meme that is supported Bitcoin is digital gold.
Yes.
Right.
Yes.
Back in 2017, there was also this kind of this idea of digital cash, but it's no longer here. Digital gold. Why does Bitcoin need programmability?
So I'm going to give you one more to add to that roster of names. Sleepy asset. So this actually came last time I was in Japan, pre-WebEx. We were talking about what more Bitcoin could be.
Okay.
And again, store of value, pet rock, digital gold, whatever someone wants to call it. But with respect, it is a very valuable asset that has entered into all of our lives and changed so much for us foundationally. But it has sat idle, as we all know so well. And so sleepy asset is that new term for you.
Was that in Japanese or is that?
It was given to me both in Japanese and then translated in English. So now there's the English version for everybody.
Nice. Okay. Right. So yeah. It's sleepy asset. There's a lot of liquidity there.
Yeah.
But the arguments I hear coming back this way is why not just use wrapped Bitcoin and then bridge it to a chain that doesn't have any constraints whatsoever and is completely performance. Why do we need these?
I think there's a reason to have a little bit of everything in that, and not to be too diversified, but there is a place for everything. I mean, we talk about Bitcoin again. It's something incredible. The entire digital asset industry, as we noted, is $4 trillion. We've got somewhere between, we'll say, with the amount of users of stablecoin, we'll pretend that no overlap. We've got about 50 to 200 plus, maybe 250 million users across this industry, whether they hold stablecoins or they hold digital assets in some capacity. We want to move that into billions. We are going to need a lot of pieces to this architecture. We're going to need some programmability that leverages stability and security, the Bitcoin L1. It's a chain that is very slow, it is very boring, it is very durable, and it is not the most friendly to use. Those are all good things. That's what kept it as good as it has been for 16 years. We don't need to change that. But to leverage that great piece of infrastructure that we have been given by Satoshi and others and continue to be maintained, we do need additional layers, all the way up to the application layer, to take advantage of that technology, to then empower the asset that dominates about 58 to 60% of this entire industry today, and that is Bitcoin. For Bitcoin to really move the way that people are starting to want to or getting interested in, it needs to have these technical pieces. And so that's why STAX has a programmability layer. That's why many others have entered into this industry, whether that's someone like Bob, BitLayer, Babylon, Core, etc. We all have had a place in supporting Bitcoin's greater growth as a technical architecture. But back to BTC. Again, I think there's very much two worlds. Some people never want to spend their Bitcoin. They never want to move it. They don't want to do anything, whether it's a tax situation, it's a regulatory, or it's just their own choice as an investment thesis. And being able to use a tokenized asset like SBTC or others on and leveraging Bitcoin's L1, that is for them. When it comes to wrapped assets, I think there's many use cases we've started to see previously and now are changing where those can be very useful because you have something like a W or a TBTC that leverages EVM and Ethereum. So it brings in those Ethereum users, allows them to engage in applications. And in some cases, it does create a taxable event as well because you're changing assets. So you're kind of giving up one to get the other. And then you're starting to see the rise of these on Solana as well.
Right.
You're seeing ZBTC developed by the Zeus team.
That's right.
You've got also some that are going to be coming on other networks as well. So again, in my opinion, I think there's a place for everything right now. And just to reset the stage for a second, we were talking about this offline. A lot of what we're mentioning today, specifically wrapped and tokenized assets, has really come to market in the last year.
Yeah.
To give everyone perspective, WBTC was the leader. They dominated about 80 to 90% of the industry.
And they were the oldest.
They were the oldest until August of last year, when some changes happened and that entered in the world of, we saw, I think, 20 different assets come to market, wrapped, tokenized, Ethereum, Solana, STAX, all these different networks started to introduce tokenized assets or wrapped to allow for the movement in a new way, whether it's decentralized, permissionless, centralized, to give and even new trust principles of trust minimized, trustless, all came. And what's very important of why that, we went from respectfully about a couple thousand, maybe I'll be generous and easy numbers, 1,000 Bitcoin at the time in August on Babylon, to today, seeing over almost 70,000 Bitcoin that has moved into protocols, has moved into applications, and started to become productive because of that beginning in 12 months.
Yeah.
On STAX with SBTC, we've got right around 5,000 Bitcoin. We brought it in earlier this year, $600 million conversion. That's a lot of movement in a very short amount of time. So back to the question, I think there's a place for everything right now. I think we are going to start to see some settling around those that want wrapped assets on specific networks. We are going to see, and we are already beginning to see the early days of bridging, whether that's with someone like Wormhole, who we've been lucky to partner with, or others, where your assets are going to be able to go cross-chain, interoperable. So you can take an asset, say from Sui to STAX, or from Ethereum to Ava, and now be able to move your assets from one wallet or application to another. And then again, the other side of that is the wrapped assets. For some, those have made perfect sense for, and I think we've probably got another year or two to shake all that out as to see what's going to stay and what might change.
It's a very gracious, friendly way of putting it. There's a place for everything. I like it. Does that graciousness extend to DATs? How do you feel about their place in all of this?
It's a great question.
Because I would just posit this. Some would say that there are some concerns that they, like these soup coiners, as they call them, are going to eat all the Bitcoin, and most of it's going to be kept in these kind of custodians, basically.
Okay, so let's go to that point first. Right now, I didn't check the numbers today. I did yesterday, so maybe I'm a little off. Apologies, but we have about 2.5 plus or minus million Bitcoin currently in treasury companies of all sorts and ETFs. That represents right around 12% of the total Bitcoin supply. Go back a year ago, that did not exist.
Yeah,
that is a huge, gigantic. Now, what I see is that is a lot of movement. That is a lot of capital. Some of that's also new capital that came in to purchase that Bitcoin as well. which means we welcome in new institutions, we welcomed in new users, and we welcomed in new capital. This is phase one. Getting these started, they're starting to welcome in, again, new users and capital. Next is going to be phase two. Okay. These are not the exact terms, but we're just calling that for today. We're great at the verbiage today. So phase two, I think, is going to begin to open up the on-chain movement of those assets, whether that's in staking protocols, whether that's in tokenized or wrapped assets, or again, it is just sitting there and holding. I think we had to prove this out and see if capital markets really demanded Bitcoin in the way that we had seen with the ETFs. We went in 2024 into that year with 0 ETFs.
Right.
The first 2 weeks of that year, we saw the launch of 12 US spot ETFs, and then suddenly more around the world. $0 to, I think, 41 billion of inflows in the first year trading. And now this year, we have almost surpassed that number collectively. That's a lot of demand. And lastly, I'll just say there's a lot of institutions out there or individuals, respectfully, that may not have the technical knowledge or education to get into digital assets the way we all have been lucky enough to. ETFs and treasury companies have given them a new opportunity to either diversify or get that exposure. And so all the way back to the original question, I think DATCOs, treasury companies, whatever we are going to call them going forward, treasury cos, I think those have a very substantial place in this industry because they are the only connection we're going to have right now that brings in the trillions of dollars. We go from 4 to 10 to 20 trillion as market cap. It's going to come from institutions. And again, some will unlock and move into on-chain activity, as we've already saw with Ethereum and the Solana treasury companies that have come to rise. So with Bitcoin, let's take a minute. There's more limitations when it comes to moving BTC, as there may or not be in Ethereum and Solana. But I can tell you right now, I've been lucky enough to talk to some of those here in Singapore, along with in Korea. And there is an appetite for those treasury companies to start moving into staking or yielding protocols, whether that be SBTC or Babylon or Core and many others out there that are doing great work. There is that desire. Now that we've gotten through phase one, we've launched, we've got investments, we've got billions of dollars that fresh capital come in, we're now going to start to see that unlock.
So you are optimistic that our new suit coin overlords are not gonna. They're gonna be more. They're gonna be more working with ecosystems within like Bitcoin DeFi. This sort of thing.
Eventually, yes. I think right now, again, we just saw the launch of all of this. This industry moves in microseconds, not in days, right? So we've just seen the beginning of this. And from there, we are going to start to see some move. We are going to also see some M&A across those treasury companies. We already have. Last week, I think we saw a few different acquisitions across Bitcoin, and we may see a few more. But when we go into the next unlock of the phase of treasury companies, we're going to see more getting into the infrastructure, running miners, running infrastructure, making investments back into the companies or the protocols that are then powering their next unlock of entering into yield generation.
So basically taking a more active role.
Yeah. I think because we see a lot of this in a lot of the analysis around treasury companies is that they're not just a treasury company, they're also asset managers. Their job is to make additional capital gains on the assets that they hold, maintain and grow.
Right.
So right now, phase one, accumulate. Phase two, start to actually be active and productive with those assets to grow the assets that you're managing in a very responsible and risk-averse or risk-tolerant way. Because lastly, I'll just say, as on the DeFi side, we've got low, medium, and high. When it comes to capital markets, there's still a lot of education we as an industry need to do, not just institutions, but to retail. Everyday traders that enter into traditional markets are looking for that education on not just buying an asset, but what does it mean to stake an asset? What does it mean to yield an asset? What does it mean to enter into a protocol or an application? That's a lot of education we still need to do. And together, we're all working on it, but it's going to take a bit of time.
Okay, we're basically out of time, but I'll give you one last question. Sure. This is a softball. What is SBTC? You've mentioned it a bunch of times. Tell me about it.
Yes. So SBTC is our minted or tokenized Bitcoin asset. So S is in STAX, SBTC.
I gathered that much. There you go. What is it?
Exactly. So it's a tokenized version of Bitcoin. It allows anybody to mint a representation of their Bitcoin on the L1 into the STAX layer, which means your Bitcoin stays and you are able to take this representation into the application layer, whether that's in DeFi, that's in staking, that's holding it and actually yielding off of it, or that's entering into collateral, loans, and other future markets as well. And what's very unique about SBTC from the design perspective, just like our consensus at STAX, you stake STX, you yield BTC in return, not our native asset. With SBTC, we took a similar approach. We set up an incentive program that allows for anyone who holds and mints SBTC, sits in your wallet, you're able to earn an APY on that Bitcoin back in SBTC, which is one-to-one redeemable at any time for Bitcoin. And we just announced a big partnership coming into KBW, and we'll have a few more this week here at Token, of the first exchange to list that asset. So we launched it last year, you held it, you minted with it, you earned APY back in Bitcoin, the free cash flow model for more Bitcoin. You entered into the DeFi application layer with so many different protocols, Zest, Stacking DAO for Medica on the stablecoin side, Valor on the perps, BitFlow on the DEX, and many others. Now, we've unlocked it. It was a capped program at 5,000. We've now unlocked it. Anybody can participate. You can bring Bitcoin. You can mint SBTC, one click. You then do another click, opt into rewards, and you start earning more Bitcoin for your Bitcoin. And then you can go into the application layer as well.
Very cool. Well, thank you very much, Kyle. I appreciate it. And have a good conference.
Thank you. You as well. Thank you, everybody.
All right, guys. That was Kyle Elicott. Up next, we have, I think it's Graham with a fascinating interview, Florian Kohler. Please stay tuned for that. I'm personally going to watch that coming up soon.
Stable, but exposed. If your dollar token can be tracked, frozen, or flagged, it's not freedom. Freedom Dollar is the first uncensorable stablecoin, private by design, built on Zanu. Unlike Tether or USDC, Freedom Dollar hides your balance, your activity, and your identity. No tracking, no freezing, no middlemen. Hold, send, and swapped Freedom Dollar privately, right inside the Bitcoin.com wallet. And now you can even spend it worldwide. Privacy isn't a luxury, it's a right. Freedom Dollar is your escape from surveillance finance.
All right. Thank you very much for doing this again, sir.
Yeah, thank you for having me.
Armani Ferrante. Is that right? Ferrante?
Perfect.
Okay, sorry about that.
You give it a little Italian flair if you want to roll the tongue a bit.
That's nice. And you are the co-founder and CEO of Backpack. Am I still on good? Okay.
That's accurate.
That's accurate. So we had an interview earlier this year. I really enjoyed it. And yeah, it was great hearing about your history and everything like that. Those of you who haven't seen it, please watch it. We went into a lot of details about how you got started, what you were doing with Ethereum, and then moving into Solana. So we don't want to retread any of that. However, I do want to start with a kind of a more, philosophical question, which is, while preparing for this interview, I was thinking a lot about what a backpack means. It doesn't, it helps that I was traveling as well and how like important it is. I think that's probably true for most people in the modern world. Like the backpack is kind of this singular item that does so much. And I was just wondering, obviously your company's name Backpack, and I think it's a marvelous name. You must have been thinking about this intentionality well before for this, but what does like a backpack mean to you? Why did you choose that name?
So the first product that we built was a self-custodial wallet. The wallet is a simple metaphor, an accurate metaphor for a lot of what the first generation of key management software did in crypto. You can self-custody Bitcoin. You had the introduction of hardware wallets. But slowly over time, crypto became much more rich. New protocols were introduced, whether they were new L1s like Ethereum, new asset classes like NFTs, or burgeoning on-chain, economies in the whole rich world of decentralized finance. And very quickly, the wallet became much more than just a place to hold tokens. It became a place to access new worlds, whether it's Bitcoin, Ethereum, Solana, or one of the many new next generation blockchain ecosystems that are emerging all around the world. And so when we started the company and we decided to build what became the Backpack wallet, we felt that the concept of a wallet was too restrictive. It was too limiting. And, the backpack is such a elegant metaphor to describe something that's much more versatile, something that's much more adventurous, something that you can take, whether it's, a business trip to Korea, or whether you're climbing Mount Fuji here in Tokyo, or whether you're just going to school or going to university and studying to get a degree. No matter what it is, no matter where you're going, no matter who you are, the backpack is this, fundamental tool to take with you to achieve whatever it is that you want to achieve. And it just felt like an appropriate evolution from not just a wallet, but something that became so much more. And if you layer on top of this one's perpetual love for MMORPGs and things like World of Warcraft and RuneScape.
Of course.
You very quickly end up at inventory views, and the name Backpack very quickly becomes more and more appropriate for one's, I guess, view of the world. So in any case, there's a bunch of ways that you can slice it, but I do think it is a beautiful metaphor that articulates a lot of what the product is trying to achieve.
And it seems to me like you basically had in your mind at least a kind of roadmap of where you wanted the product to go, starting with something I would say kind of simple, like a crypto wallet, traditional crypto wallet, but knowing that it was going to go to encompass a lot more. Is that right?
It's certainly right. I mean, I think we started with this ambition to reimagine what the next evolution of wallets will look like. Obviously, fast forwarding from, early 22 when we started the wallet to, the end of 22 when FTX collapsed, the world changed pretty significantly. The industry changed, our personal lives changed quite significantly. The business changed. We're kind of, I guess, notorious for having lost the majority of our working capital on that exchange. And although we knew it would be, much more than just a wallet, we never anticipated from the beginning that we would venture into the exchange landscape.
Oh, really? that was going to be my next question.
And that really was a matter of circumstance. With the collapse of FTX, it really felt at the time that it was really an indictment of not necessarily the perils of crypto, but it was an example of everything that is wrong with traditional financial systems, everything that crypto is originally meant to address. whether it's the 2008 financial crisis, the 1930s, or anything in between. There's numerous examples of this.
Yeah.
And so we felt like, when TX collapsed, there was really just a duty for somebody to come in and reimagine how these systems are built, to take everything that makes crypto and DeFi and public blockchains so special, right? Things like, computational integrity, things like verifiability, things like being able to prove or attest to truth in a way where you don't have to trust, the operators or the management team. You can simply, utilize the mathematics to prove whatever it is that you want to prove, and to apply those concepts to the context of a traditional financial institution.
Yeah.
And I think this concept, is something that crypto native people have understood for, I guess, the past, decade. But it's something that I think we've yet to really see in traditional finance. And, especially as we've seen this cycle, as, more and more of the traditional institutions get kind of attracted and interested in crypto, I think what we'll see is not only crypto assets become ubiquitous and permeate finance and we'll see market expansion on that dimension, but I also think that we'll see the technology permeate kind of traditional finance as well, so that we can solve a lot of these issues to not only make a new asset class, but to also make more robust, financial primitives, to just genuinely improve on these problems that have plagued finance more broadly for, over 100 years.
Yeah, I agree with that, but I guess I'm slightly more inclined to pessimism, because I think there's a push and pull where crypto people, they start with that ethos of decentralization, and then they just get pulled over a little bit more because of the attractiveness of maybe the traditional system. And then there's reminders like the FTX collapse, and perhaps this cycle there will be a reminder further down the road. Hopefully not. But speaking of kind of the perils of traditional finance and how crypto can potentially improve upon them, you guys on your centralized product recently rolled out, or since we last talked, you rolled out proof of reserves, right?
That's correct.
Can you please describe what this is and how you've implemented it? Maybe how it's different than other so-called proof of reserves?
Yeah, that's a great question. So traditionally, companies or financial institutions would attest to things like financial statements, once a year, once a quarter. Maybe have some crypto companies doing it, maybe as good as once a month. We felt like one of the really valuable aspects of crypto systems, or blockchains in particular, is, the concept of computational integrity, right? You can attest to a ledger and you can prove that that ledger is correct. And so, when we set out to build the exchange, what we did was we looked at kind of, how do we actually rebuild one of these exchanges from scratch with this kind of real-time state integrity guarantee in mind.
Oh, really? From the beginning?
From the beginning.
Cool.
And so the way the exchange is built looks a lot like a blockchain. It kind of looks like a blockchain. It quacks like a blockchain. For all intents and purposes, it's a blockchain. Every order placement, every order cancel, every liquidation, every deposit, every withdrawal, it's signed with an ED25519 key pair. It's ordered in a global linear log of authenticated transactions, and it's deterministically replayed from the beginning of time up until today through a distributed set of validator clients.
Very cool.
To deterministically give you the state of the ledger at any given point in time. So for any kind of computer scientist out there, it kind of looks and feels a lot like a blockchain. It is a blockchain for all intents and purposes. And this was extremely important so that we could have really strong guarantees over every aspect of the system at any given time, so that we can not only have, privacy preserving, computational integrity guarantees amongst a permission validator set, but to also be able to publicly attest to the ledger and anchor it by, a public blockchain. And so at the end of each day, what we do is we package up the ledger, we create a zero knowledge proof, we make it public for the world to see, and we have namely an external kind of auditor, which everybody kind of knows and respects in the name of AudiSec, that takes that zero knowledge proof, checks it, and kind of verifies it for the entire world. Now, all the code's open source, it's public, you can verify it yourself. People just tend to not want to go run a bunch of cryptography on their own machine. But nevertheless, we do this not once a year, not once a quarter, not once a month. We do it every single day. And we have this state integrity guarantee all day, every day in real time with every single transaction. So from the beginning of time up until the present, the state of the ledger is, proven. And every single day that ledger is anchored to every public blockchain that we support on the exchange. And so not only do you have this really powerful proof over the state of the world, but you also have distributed control over the system itself, where namely every deposit, every withdrawal goes through not only a validator client, which is distributed across multiple machines, but also a multi-party computation for all assets that are being moved in and out of the system. And so today we run all of those validators ourselves. It's a private permission blockchain, but it's a very small step to take this architecture and give you a node, me a node, and somebody else another node, and that starts looking like a permissioned blockchain or a decentralized exchange by some definition of the word decentralized. So, I think I would like to say we're not a centralized exchange. A centralized exchange does, I think, a disservice to all the hard work that we put in to genuinely build trust minimization into, a regulated exchange product. But it's also not appropriate to call us a decentralized exchange either, because it also does a disservice for the folks that are genuinely censorship resistant, have global distribution, and are not simply co-located in a single data center. We are somewhere in the middle where the whole system is verifiable. It is indeed trust minimized, but it lacks, I would say censorship resistance, because that's not a design constraint that we're, opting to solve for. And so it's an interesting point in the design space with an interesting set of trade-offs, but I think that's what makes the product unique.
Yeah, I love that. And I mean, I think as things like Hyperliquid have shown, this kind of, what's it called? It's this spectrum from centralized to decentralized is probably going to get filled up with products depending on where you want them along the way. And you can move up and down depending where you are in that space. I just have a couple questions about this. So it's open source means someone could take the kind of the setup that you've made and adopt it to their own?
The zero knowledge proofs are open source. So you can take the proof that we publish every day,
right,
and you can verify it yourself in a way that's uncorruptible.
Awesome. And I was just wondering, so like, for example, how would it, I'm not technically minded, but like, if let's say, God forbid, someone within your organization were to like embezzle money, something like that, how would that show up as like an invalid transaction? It just wouldn't, the balances wouldn't match, basically?
Yeah, it's a great question. So basically there's really three things that are proven with the zero knowledge proof. The first is simply that all of the balances that are sitting in all the wallets on every chain. So we have a page, backpack.exchange/reserves that you can go to, and you can see every single wallet and the actual breakdown of what assets are in each wallet.
Cool.
And so the first proof is that all of the cumulative sum of all of the tokens and all the wallets match the ledger that we publish. But that alone is not enough. There's a second proof that proves non-negativity, that there is no negative balances as part of that ledger. Because if there was negative balances, then you would be able to have
that's where it would show up.
And then there's a third proof, which is an account-specific inclusion proof, where you yourself can go in, you have private access to your own account, like your own bank account or your own exchange account, and you can prove via, a Merkle inclusion proof that your kind of account balances are indeed included in the attestation. And so what this like distributed proof kind of relies on is, everybody in the world does their own proof, checks their own branch, and if they detect any malfeasance, then they raise their hand and scream from the rooftops and say, hey, there's an issue here. And so all of those things come together to basically tell you that my balances are indeed here in these wallets as of this snapshot in time. And I can guarantee this by virtue of the zero knowledge proof. And so to the extent that there's any type of embezzlement or malfeasance of any sort, you would detect it by virtue of your money not being there.
Right. Yeah. And then you would have the proof to show that it indeed isn't there and that something's going wrong.
That's right. Yeah. And you combine this with, so there's two types of proofs. There's the proof that here's the ledger does match the wallets on chain. That's an extremely important proof. But there's a second proof that's extremely important, which is the state integrity proof, where one ought to also verify with source code that they can see, whether you have access to the source code or some, trusted third party, like a security auditor has access to the source code, that the source code doesn't have any mischief in it,
right,
like a backdoor, and that code indeed results in this ledger. And so you kind of need to do kind of both steps from the beginning of time up until today, matching kind of the chain. And so it's an end-to-end check in order to really thoroughly, verify what you want to, achieve.
Very, very cool. And basically, going back, I'm going to try to answer the second part of the question I asked, which is how is this different from a lot of the other proof systems I find? I feel like the biggest difference from what you've just told me is that most of the other proof systems that I know about, you still kind of have to take it on faith that their proof of reserves is real. This seems a little more rigorous, a little more deterministic, I would say.
I mean, it's hard to, I guess, answer that without knowing what specific proof systems you're referring to.
Other exchanges,
I see.
They say we have proof of reserves, and I haven't looked at all of them, but the ones that I've looked at, there still seems to be like you have to trust that.
I see.
A third party is saying we know we have these reserves.
I see.
But
I can't speak for kind of.
I'm not asking you to.
The other exchanges. I do think that we are probably the only, I guess, traditionally centralized exchange that has this state integrity kind of guarantee.
Yeah.
As far as I know. Like, a blockchain type platform that the exchange is built on.
Yeah, as far as I know too. But I don't want you to get into any fights with anybody. So the other big thing that has changed since we last talked was perpetuals. Most recently, you launched perpetuals in Europe. That was a recent thing. Pretty recent, right?
That's right.
So I'm assuming that this has to be MiCA compliant to some degree.
Yeah. So MiCA is a different kind of regulatory regime to MiFID, which is what we serve derivatives under. It's all kind of, I guess, tangentially related, but they are different regimes.
Okay. Could you educate me on what the difference is?
Yes.
MiCA is more on what, like stable coins or just what a digital asset is?
Yeah, exactly.
Okay.
Maybe more traditionally like spot markets. And,
I see.
And crypto more tangibly versus derivatives are contracts, things like perpetual futures that are synthetic representations of the underlying assets that they're trading. So it is a different product.
Are they sister organizations, or are they all under one roof, MiCA and BIFA?
Yeah, I mean, I don't know if sister is the right metaphor, but it's directionally correct. Yes.
Okay.
Yeah.
But what I was trying to ask is like, was it about the same level of complexity, difficulty, easiness to get perpetuals working as compliant spot?
I don't know if I would say anything is necessarily more difficult than the other. It's certainly more rare.
Okay.
So currently there's basically 2 exchanges in the world, as far as I'm aware, that have the ability to offer compliant, regulated perpetual futures in the EU. One is Kraken and 2 is Backpack. I think a lot of exchanges have been looking at this and are probably going through the process. But as far as I'm aware, we're the only 2 exchanges currently live right now.
And to me, that would indicate that it's probably not very easy or somewhat difficult.
There's certainly nothing easy about building a regulated financial product. That's certainly true.
Does this mean that there are kind of like gray, unregulated perpetual offerings in Europe? Or basically like, oh, if you use this, it's your own kind of thing?
I mean, yes and no. I mean, I think there's certainly just generally a lot of gray stuff in the world.
Yeah.
It would be kind of preposterous to think that there wasn't.
Yeah.
There's nothing like in particular that comes to my mind.
Okay.
But I think the world's kind of wrapping its head around an ever kind of evolving regulatory regime in all the various parts of the world, which are all quite different and heterogeneous.
I mean, the U.S. has done a pretty good job of twisting arms all around the world to get pretty much every major exchange to not let U.S. users use them unless they're regulated. But so I was just wondering if Europe is also like going after like international exchanges and telling them to not allow European people onto their exchange if they don't, if they're unregulated. But yeah, I'm not sure. So you have perpetuals in Europe. Do you also have them in Japan?
Currently, no, we don't. Yeah.
So in Europe and anywhere else?
Europe is our main kind of regulated derivatives product. I think Japan, we moved here over 2 years ago.
Yeah.
It's not a very common thing for a kid that's born and raised in California to pick up their kind of company and family and move over to this part of the world. But nevertheless, it's a pretty kind of, I mean, other than Tokyo just being a beautiful place and a super incredible place to live, as you know.
18 years.
Yeah, it's also just a really kind of exciting place to be for crypto, I think, over the next couple of years. We're seeing certainly a resurgence of just interest and activity, and it really feels like the country is about to go through a very U.S. Type moment with respect to crypto, where you have like the prime minister now going to crypto conferences and articulating a lot of positive things about crypto. You have maybe this anticipation of taxes going down from 55 to 20% as crypto gets reclassified from a currency into a new regime. And so I think Japan will be an exciting place. And so it's certainly something that we've been working on for the past 2 years at this point. And so we're not there yet, but it's really after Europe, the place that we have our sights on with respect to getting a regulated product up and running.
Yeah, I mean, I spoke with Haseeb Quresh at WebEx and then at Korea, and he had this amazing post after WebEx saying that he thought Japan was a quote unquote sleeping giant for crypto.
I mean, a lot of people forget that Japan was responsible for maybe on the order of over 50% of Bitcoin trading volume going back to 2017. Binance famously was, I guess, somewhat originated in Tokyo, right? There is a very large crypto native population here in one of the largest, economies in the world. And I mean, going back to like the Mt. Gox days, right?
Yeah.
When, the hacks happened and kind of regulation clamped down and folks left, and I'm quite optimistic that we'll see that return.
Yeah.
And so it's definitely a great place to be. And I think the post you're referring to really hit the nail on the head.
Yeah. I'm very excited for Japan to kind of take its place. And I mean, I think Hong Kong is kind of done, having been folded back into China. And so we've seen like an exodus out of there. So I think Japan can kind of make up a lot of lost ground. And I remember when all those crypto companies started to leave
en masse when the tax laws became so onerous. So hopefully we'll see big changes. Right. So we are in this beautiful location here before a dinner or an event that you are co-hosting with 00. What's this event about? Why are you doing it?
I mean, I think generally it's fair to describe our role as ultimately support for great crypto projects, whether it's the wallets or the exchange. Our business ultimately relies on finding, supporting, and elevating the best projects that we can work with, built by the best people with the highest integrity, and that we think our users will love to support themselves. And I think 00 certainly is one of the projects that exemplifies that, where they are going after, I would argue, one of the hardest and most ambitious technical challenges in the crypto space today.
It's a physical world.
There's a lot of different folks that work at very different levels of the stack. And going down to the lowest level, down to the network infrastructure, is as ambitious, as challenging, and as exciting as it gets. To take the position that the internet is not enough and that the internet is too slow, and to reimagine how you can build crypto networks on a new network layer is, in my view, as exciting as it gets as an engineer. And so really kind of this event is just about kind of doing our best to support 00 in the region of Japan, and whether it's the wallet, the exchange, or our community more broadly. And so we just love to kind of work with the best projects and to help in whatever small way we can. And this is just one kind of example of that support.
Very, very cool. I spoke with someone from 00. I'm blanking and terrible, but they were talking about some of the infrastructure kind of test nets they were doing in Europe. I don't think I asked at the time, but are there any lines in Japan at all?
Actually, that's a great question. I have no idea.
Okay, yeah, because I would love to know.
Yeah. It would make sense given, at least from the perspective of an exchange, how many, like Tokyo is really the epicenter of crypto exchanges. That's where in AWS Tokyo is kind of where everybody lives. So that's where all the infrastructure lives. So I would imagine so, but that's a question for their team.
Yeah. We could ask that after this. And I was just a few more questions. First, so 00 would broadly be considered kind of a Solana, connected to Solana in some ways, although they're not officially at all. And when I spoke with them, they were like, yeah, we're looking at AI companies in Europe, or even gaming companies. So, but it does seem like it's kind of comes out of Solana and this IDRL, I'm getting that right, kind of ethos. Is Backpack still mostly like kind of focused on Solana?
I mean, I think you could categorize it in a very similar way that you would 00, in the sense that there's certainly a lot of Solana heritage. Solana,
that's a better way of saying it.
Yeah, I mean, Solana is just one of the most exciting, continues to be one of the most exciting projects in all crypto, in my view. But Backpack is on every blockchain you can imagine, right? Bitcoin, Ethereum, Solana, Optimism, Arbitrum, Base, Plasma, you name it. We're supporting it. And that's part of what makes a great wallet and exchange product. But yeah, Solana is always kind of like a second home, and continues to be, I guess, one of the projects I'm consistently most excited about.
Cool. What about Solana DATs? How do you feel about those? Kind of capturing the imagination right now. Mr. Kyle Samani is kind of drawing a lot of attention after Tom Lee and Michael Saylor had their turn. I would love to hear your views on DATs in general, and maybe Solana DATs in particular.
I mean, Kyle kind of speaks for himself, right? He's a force of nature.
He is.
I think it's very clear that there's a huge amount of appetite from traditional kind of liquidity pools to to get more exposure to crypto. And to the extent that, digital asset treasuries are the optimal vehicle as it currently exists to express that desire for more crypto exposure, then so be it. I mean, I think what he's doing with, Forward Industries is quite compelling in the sense that they will probably be the first, as far as I'm aware, to actually not only take in the crypto, but also to actually go productively utilize it in, the burgeoning crypto economy or market structure that's growing on Solana. And so I think the hypothesis or the thesis there is that will have a large reflexive effect. And I don't think we fully appreciate or understand the second order effects that will have. When you get more, the largest pools of capital in the world into the DAT, and then you take the capital from the DAT and then you put it into DeFi, and what flywheel that creates is, I think, pretty interesting. And so I think the biggest thing that will do is, I think, not only have a lot of like second order effects on, I guess you could speculate on price and inflows, but also just like education from that part of the world. And I think that does a lot to legitimize everything that's happening in DeFi today. And that, I think, is the big step forward. So I'm obviously super excited about, everything that Kyle's doing with, his DAT. And I think we'll see more here in Japan, actually, as well.
I was going to ask that. I mean, we have Bitcoin DATs, but what about Ethereum, Solana, other digital assets? Is there...
I mean, the short answer is yes. It's not my place to discuss it. I'll let those folks kind of have their moment, but I think we'll see more of it for sure.
Oh, nice. All right, last question. You can choose to not answer or answer, but I would say last week, leading up about a month, but definitely last week, there was a kind of a crescendo of Ethereum Solana drama about the exit queue. The Ethereum exit queue, which is like 45 days right now. And Ethereum aligned people and Solana aligned people were kind of going at each other on crypto Twitter, which was great. I think everyone wins in that case because you get to hear amazing arguments and some quite funny quips and whatnot. I was wondering if you had any thoughts on this broadly, or I could poke you on some particulars.
I wouldn't say I have any particularly intelligent comments on the exit queue. I mean, everybody loves a good crypto Twitter fight. Solana and Ethereum are just, the best smart contract networks in the business. And so I agree. It's always good to see both ecosystems go at it, but it's always good to have a lively discourse, but I have nothing intelligent to say on the exit queue.
Okay. Well, thank you very much, sir. I really appreciate it. Thank you for the time.
Yeah, thank you very much.
All right. We're done.
And we're back. We're here with Florian Kohler, who is co-owner of ice hockey club Kur,
right?
Which is a Swiss ice hockey club. And you're also a serial entrepreneur, I would describe you, and a Bitcoiner.
I am a Bitcoiner, that's true. Not a die-hard Bitcoiner though. So I do research and work, let's say, in the whole crypto world, but Bitcoin first.
Okay,
that's basically my motto.
So tell us about ice hockey club Kur, and what it has to do with Bitcoin. I saw you showed me a picture earlier of a giant Bitcoin logo on the rink.
Yeah.
What's that all about?
Yeah, it's a good question, and it's basically a question that everyone asks when we tell them that our professional sports team is powered by Bitcoin. Everyone says, "Yeah, what does it have to do with Bitcoin?" You know, the point is that we were able to take over this sports club about 2 years ago. Well, they're a traditional team, has been there for many, many years. But they had an era where they went down, they went broke, 16 years of amateur sports. And then they suddenly were on the moment to become a professional team again. And that's where we had the ability, by the way, together with two of the best ice hockey players in the world, 2 Swiss players, one in the NHL and one plays in the Swiss League. Might have heard Nino Niederreiter, he's with the Winnipeg Jets.
Okay.
He's a co-owner. And the other guy is the goaltender of the Swiss national team, Leo Giannoni. He plays in Switzerland, but he was awarded best player at the World Championship just a couple of months ago. So they're co-owners as well. We were able to take over this club with a group of other people. And the problem that you have in team sports in Switzerland, in Europe in general, even the big soccer teams, basically you lose money with a sports club. Even if you have a large arena, players are expensive. Everything is expensive. If your team does not play good, which always happens in sport, even if you have the best team, you lose now and then. The audience gets smaller, you earn less money. So we were thinking of how can we solve that? Because we really want to demonstrate that professional team sport should be financeable and should even bring you some revenue. And since I have been in the crypto Bitcoin world for quite many years, it was clear to me that we had to say that we have to put Bitcoin at the center stage of the club in many ways. And that's why we call ourselves now Powered by Bitcoin. But of course, we then started out first with a message. That's why you see the huge Bitcoin logo that's the center stage of the arena under the ice. Because we had to tell people first, hey, what is Bitcoin? Still not that many people know about that. And we still have to do more education in the sports room. And then once we had spread the message or started to spread the message, we were able to tell everyone why Bitcoin. Well, because if we start to invest on the one hand into Bitcoin, even if it's just stacking sats now, it's going to help us in the future. So that's the first pillar of our belief. Just every dollar that we can spare, let's invest it into Bitcoin for the future.
In some ways, you're a Bitcoin treasury company.
We may get there later on. We're not there yet because we're still small. We're a startup, a sports startup, and we're growing. For now, it's spreading the message that Bitcoin can even help a sports team, can be useful for a sports team if you just start with stacking sats, stack Bitcoin. But then, of course, we're also trying to do a lot of easy topics around Bitcoin. So we established Bitcoin payments in the arena, in the restaurants. Sounds easy. It's then, once you do it, complicated because you have to convince people to start paying with Bitcoin. You have to do all the regulatory stuff in Switzerland, which is possible. But that's also something. So Bitcoin payments is the next step.
Can we just double click on that one? So, Bitcoin payments, peer-to-peer payments, they're slow. So are you using Lightning or something?
It's on the Lightning network and there's a third-party provider. And we're setting that up. Otherwise, it wouldn't work in a restaurant or in a bar. In the arenas, there's restaurants, but it has to go quick. Or in a merch shop, it needs to go quick. Yeah, it's of course not on Lightning.
Okay, so could you go into how much adoption are you seeing there with the fans?
Not yet much. That's why we started out with the message first. And this is our second season. We just started out with our second season in the professional league now. I guess it's going to take at least 2 more seasons until we have traction there. But we have to do all those things to get people to a point where they understand, oh, this is real. This is not just, they say they use Bitcoin, they have Bitcoin. We have to start doing things. So payment is one thing. And another thing is that we just set up Bitcoin ATMs in the arena. even though a lot of people may think, well, what does it help? It's the message again. And there are people amongst the fans, maybe elderly people also, they will not be able to use a wallet, cold or hot wallet. But with an ATM, at least they can put in 100 Swiss francs. So they get out this card and this paper, and they can try and find a way to own this Bitcoin. So stuff like that. It's a lot of, even if they may seem not stupid, but not the best real world adoptions, we try to do anything that we can around Bitcoin.
Okay, and what would you say is the reception of the fans so far? Like, have you gotten much feedback, positive or negative, about this initiative?
It's a good question. I have to be honest. When we made our first tweet, just right before we started into our first season of the professional league, we showed this picture of the huge Bitcoin sign under the ice. We had two kind of reactions. We immediately got adapted or retweeted in the Bitcoin community. So like platforms like yours and others, retweets, 100,000 of views and responses. Nice reception there. But now this is not our audience in the city. So the fans, let me take some water. Yeah. The fans, they had a lot of questions, and they obviously still have. In the beginning, they thought it was just a huge marketing gag. And many of them thought, so why are you jumping on a railroad, which is basically a scam railroad? We're still there. It's not that everyone believes in Bitcoin and crypto.
Yeah.
A lot of reactions as well. Now in the second season, it's much better. Now we're getting questions like, okay, can you show us what you do? Can you teach us on how we can buy Bitcoin? Are there easier ways of buying Bitcoins nowadays? Can I buy Bitcoin for $50? Topics like that. So it just needs time.
Okay. So you mentioned that when you first started this initiative, you got a lot of support from the Bitcoin community, people reposting about so basically marketing from the Bitcoin community, right?
Yeah.
Have you actually had any diehard Bitcoiners or Bitcoin enthusiasts then become fans and come to the games?
Well, there's certain areas in Switzerland where crypto has more adoption than in others. So, for example, in the bigger cities like Zurich, would have more people close to crypto and Bitcoin. And this club is in the heart of the Grisons Mountains, and Chur is basically the capital of the Grisons. What we found out, there are not so many Bitcoiners there. But I would say, sorry, I don't know why. Probably too dry.
No problem.
I'd say 10 to 15 people more attending regularly our games that contacted me, asked me, can we attend? Can we speak about Bitcoin? So slowly but steadily, it's going to grow. But it's not that people from abroad will come to our games.
Right.
Yeah. We're trying.
So you mentioned that you're finding ways to integrate Bitcoin into the games, right? Enabling people to pay for things with Bitcoin, having a Bitcoin ATM. How about player salaries?
Perfect question. In the first year to last season, we didn't want to do that, even though we had 2 out of the 27 players who asked for that. Can I get my salary or part of my salary in Bitcoin? We didn't want to do it because we thought we were just not there yet with the message. Now, for the next season, so not this second one, but the third one, I feel pretty positive that we're going to do it. Also, regulatory-wise, it's possible. Switzerland, and I believe that maybe 5 out of the whole team will accept part of their salary in Bitcoin, and then it will steadily grow. But we also have to educate them in the sense of that they have to be careful.
Yeah.
If they accept the Bitcoins
due to the volatility. Right. And I guess tax implications.
tax-wise, we're pretty safe in Switzerland as long as we declare everything in a proper way, which we will of course teach them how to do that. But this is going to be a thing. Well, I believe in the fact that once we get more acceptance of this topic, more and more people will want to have their salary or part of their salary. Why not?
Yeah. So you mentioned that there are two co-owners of the team, these professional hockey players. How do they feel about this? Are they Bitcoiners as well? Are they on board with this?
They're both not Bitcoiners, but both reacted in a very positive way to the topic. So Nino, for example, playing in the NHL, there's a couple of arenas sponsored by exchanges, Bitcoin topics. So he was well aware of the fact that this is a new industry coming into the sports world. Leo, so the goaltender playing in Switzerland, on the other hand. Thank you very much. That's nice. Even offering me coffee. I know he owns crypto himself, but I wouldn't call him Bitcoin. Right. So this initiative really, in the end, it came out of my world and out of my conviction that this is the way to build a sports club on the long term and to be able to manage it in a profitable way.
So I think you mentioned before that you always try to include Bitcoin. This isn't your only business. You have other businesses. You always try to find ways to include Bitcoin in your businesses and co-owned businesses. I do. Why is that?
Okay, on the one hand, basically for the same reason that I have just mentioned for this ice hockey club. Many businesses that you set up, just normal businesses out of the crypto world, they go through phases. You have good times, you have bad times. And I just believe in the fact that if you put part of your liquidity into Bitcoin, it will help you in bad times. So this is a thing that I try to integrate into basically any business where it's possible, where it's when it is in a jurisdiction like Switzerland and where it's allowed, and just to try to convince the ownership. That's the most important thing. And then, for example, if you accept Bitcoin payment, be it in this isolate clubs, in the restaurants of the clubs, we also do own a small hotel in Spain, for example. We accept Bitcoin payments we get on the Bitcoin map. This brings us more customers, step by step. So if you help yourselves for the future to get through bad times, but you also get a totally different audience. That's what you asked before, if there will Bitcoins come. If you go on the Bitcoin map, it helps. I am convinced of this fact.
Right. A lot of people around the world are big supporters of Bitcoin, so you tap into that community. I'm sure you've heard of Peter McCormack and his Bitcoin focus, his team in Bedford.
Bedford, yeah.
Yep. Is that part of the inspiration here, or do you have thoughts on that?
Yes, he indeed was. He was an inspiration, and I think that's great. They're doing different. First ones in soccer to do that. I believe we are the first ones in ice hockey. I have not seen a team so far around the world having a Bitcoin sign, a clean Bitcoin sign without sponsors on the ice. It's great what they do. I support that. It's really brilliant, but he also comes from a different standpoint. He can more or less power and finance that club on his own. We cannot, and we don't want to do that with our club. So we really try to put the message, the Bitcoin message, at the center stage. By this, try and attract more businesses out of the crypto world to support us with their tech also. Not only get sponsorships, but also try and bring products and projects to us, and they can test with us because we are open for that. They are very much sponsored now by the crypto and Bitcoin world, which is wonderful. We would love to have that too. But we also try to add the aspect of, hey, come to us, work with us, try your Bitcoin topics, Bitcoin projects, crypto projects with us, and maybe we find new angles to help the sports world and the crypto.
All right. So how's the team doing?
Last season, very well. We were the newcomers in this professional league, and they ended up fifth spots on the fifth spot, which is great. Now this season we have started slow. We had 4 losses in a row, and now they have 2 wins in a row, and I think they're going to be good. It's going to be good, but it takes time. It's a very young team. We try to focus on young players that we can educate, mainly players with a Swiss license, so we don't have to spend a whole lot of money on foreign players that cost us much more. We want to develop not only on the Bitcoin and crypto side, also on the players side. So we really want to develop growth phases and players that will help us grow to stay with the club as long as possible.
Let's look ahead, let's say 5 years in the future. What's your vision for the club? Where do you think it'll be?
So I am convinced that if we follow this path, even if there may be difficult times in crypto now and then, we just follow the path, stick to this message, keep the conviction, and convince more people to believe in what we do. So back the sports club, the professional sports club with Bitcoin and Bitcoin topics, and you will be at a very, very, very good point in Switzerland and also in Europe. Because, we really try to do everything that we can around Bitcoin. We, for example, we produce ice. This needs a lot of energy. The production of ice produces worms. We have also already a system where we can use these worms, turn it into new energy, and start mining Bitcoin. Since we have an arena where they play the games and a training arena where they just training arena is 365 days ice. Doesn't really make sense in summer, but we have to produce this ice. Uses a lot of energy, generates a lot of worms. And this we use again, turn into new energy. And there we want to start and do Bitcoin mining. Now, we have done a lot of research. We would have to go into mining pools, of course. And but we will do it. We will just try and see, okay, if we already have this energy basically for free, if we use it for Bitcoin mining, what can it bring us as one club? If we can prove that it helps us just a little bit, we can get the whole league to do the same thing. If we get the whole league in the same pool, why can we get all Europe? Can we not get all the European leagues to do the same thing with the worms that they produce? Turn it into energy, mine Bitcoin. Topics like that.
Okay, so mining Bitcoin with the excess heat created.
Excess heat created,
from making ice.
Yeah.
Wow.
And there's possibilities. We have done a lot of research. There's companies willing to do that. Now the question is going to be, how much do we have to invest? And is it going to cover the cost? Are we even going to win a little bit by that? This is still in process. But we'll do it. I'm convinced we're going to do that. And this will, if it works, I can almost guarantee you the next and the next and the next ISO pick are going to do this. Okay. Someone has to try it.
Yeah. Fascinating. All right, Florian. So any last thoughts? Actually, I'd love to get your let's just actually, before we close out, I'd love to get your thoughts on Bitcoin broadly. So why did you originally, what originally attracted you to Bitcoin?
So I come from a country, Switzerland, where banks used to play a very dominant role. I have, of course, used banks in my private life and in my business life always. But honestly, I've never really felt comfortable. And more in the last years, I felt less comfortable with the whole fiat and financial system, even though it's pretty stable in Switzerland still. We had big Swiss banks going bankrupt, people losing a lot of money. And then Bitcoin came around. And with me, it happened like with many other people. There was one person pretty close to me who told me, you should have a look at that. I found this somewhere in a game at that time, where Bitcoin was only traded. Look at it, research it. And it took me, unfortunately, a couple of years to understand and buy my first Bitcoins. But I just believe if there is a way to go through I'd call it financial crisis. We're pretty much all in right now with respect to the monetary system. There's only one way. And I'm convinced of that. Bitcoin, then Bitcoin can save this system or be the follower of this old system.
Okay, so Bitcoin as the life raft to help people out of the fiat debasement.
That's what I believe.
Good. And I'd love to hear your thoughts on how you see Bitcoin evolving. You know, there's people are concerned about the Bitcoin becoming too integrated into traditional finance. Do you think that's a risk, or do you think it's more like that is the pill that or like a Trojan horse into the financial system?
I do know what you mean. I'm actually interested to hear what you think, but I believe that the company Michael Saylor has built, I'm on the side of people who think this is not so much of a risk the way he has built it, and because he has been the first to do that. Now, what do I think of all the copycats coming now? This late in this cycle, if you believe in the cycle, so I still do, by the way. I see some risk with all the followers because they don't have the history that Michael Saylor, MicroStrategy had. I do see some risk there. I do not really feel comfortable with that. Do I think it's cool that you can that banks sell ETFs now to their customers? That's okay, because those are the customers who would not be able or would not be willing to go down the rabbit hole and find out how can I buy Bitcoin in another way. So let them just buy it via an ETF.
More options.
It's more options for that. So this, I do not see that as a risk. But I still believe in the fact that if you buy you buy Bitcoin via an ETF via your bank, it's because your bank advisor or your bank private banker tells you, add Bitcoin to your portfolio, 2%. Yeah. Now, what do the private bankers do? Once Bitcoin goes higher and it goes above the 2% of the portfolio, they rebalance. They rebalance and sell it. So this part is not really what I'm convinced of. Yeah. I think if you can, you should not sell your Bitcoin. This part I don't like, but that's of course what's going to happen.
Okay. All right. Last question as we close up. Care to predict what the price for this cycle will be? Where we'll top out, or maybe the timing?
The timing. I am a bit hesitant. The price. I have a conviction. I believe it's more around between 150 and 160, and not towards 500 and a million. This I do not see, based on the way I do my research. I would love it to go to 500K or a million this cycle. I do not see it. I'm a bit in a more conservative field, and I'd say between 150 and 160. Well, if it's going to be 170, it's okay. But that's where I see it for this cycle, and I believe in the fact that we do not have that many months left.
Okay, so we're late in the cycle.
I believe I'm in this on this side of the analysts. Well, no, not an analyst, but I do research.
Yeah, of course. All right. Any thing you'd like to plug here? Where should people go?
First of all, thank you very much for having me on this show. That's a huge honor, not only for me but also for the club, for this the Bitcoin-powered ice hockey club. And of course, what I would love to say here is that anyone having a project or any company working on Bitcoin with Bitcoin, they can just approach us. Come to us, text us on Twitter, either the core handle or my private handle, and let's see if we can cooperate and find new ways on how to integrate Bitcoin into the sports world and into businesses in general, apart from only doing payments and doing the stacking side. Yeah, let's find as many new ways as possible, and we need the industry to help us.
Okay, great. Florian Kohler, thank you so much for your time.
Thank you so much.
Next up, we've got our wrap-up for the day. A full day of coverage here at Singapore, Token2049. We'll be right back with our wrap-up.
We are giving away free self-custody Bitcoin during our live conference coverage. First, download the Bitcoin.com wallet app. During our conference coverage, we're going to show you these golden tickets. From within the Bitcoin.com wallet app, use the QR code scanner to scan these golden ticket QR codes. Swipe to auto-magically send the Bitcoin to your self-custody wallet. But be ready, be fast, because anyone watching can get the Bitcoin.
When crypto leaders want reach and results, they choose Bitcoin.com. A global audience, massive reach across social, web, and mobile, engaged users who trust our brand, and campaigns that move at the speed of crypto. From press to podcasts, X to SEO, display ads to rewards integrations in the app, Bitcoin.com delivers exposure across every channel that matters. Our clients include the world's leading exchanges, wallets, and gaming platforms. When they need impact, they trust Bitcoin.com. Get your brand where it belongs, in front of millions. Partner with Bitcoin.com Media today.
Stable, but exposed. If your dollar token can be tracked, frozen, or flagged, it's not freedom. Freedom Dollar is the first uncensorable stablecoin, private by design, built on Zano. Unlike Tether or USDC, Freedom Dollar hides your balance, your activity, and your identity. No tracking, no freezing, no middlemen. Hold, send, and swap Freedom Dollar privately, right inside the Bitcoin.com wallet. And now you can even spend it worldwide. Privacy isn't a luxury, it's a right. Freedom Dollar is your escape from surveillance finance.
Until now, fiat balances only lived on centralized exchanges and fintech apps. Not anymore. Bitcoin.com Balance brings fiat balances to the decentralized world. That means you can buy and sell with ease, but you always keep complete control of your crypto. Once you've funded your Bitcoin.com balance, you can buy Bitcoin and 50 plus cryptos in seconds. No more failed transactions, lower fees, and you can sell back into your Bitcoin.com balance anytime. Need Bitcoin fast? Just tap, confirm, and boom, crypto in your wallet. No waiting, no friction. Bitcoin.com balance. The power and security of decentralization, the ease of a centralized exchange.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, gift, void, country, engine, complex, new, fate, purpose.
In this video, we'll show you how to earn Bitcoin. currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract. And that's it! You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back, plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now. In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com.
And we're back here to wrap up day one of our coverage at Token2049 Singapore. David, how you doing?
I am doing considerably better now that we're wrapping the day up. No, it's been a fun day. Really, really nice.
Yeah.
It gets easier, right?
Yeah.
This whole thing gets easier. Well, I'm still wearing my lane. I love that. How are you doing?
Yeah, pretty good. The last conversation I just had with the Bitcoin ice hockey team, pretty interesting. You know, like he's got this vision where they're actually trying to mine Bitcoin using the excess heat from creating ice, and he thinks like if they can actually prove that and make that work, that other teams in the league will do it. It's pretty interesting.
That is wild. Oh, very, very wild.
All right, so let's talk about our giveaway. So as you know, we've got $2,000 of Bitcoin to give away during our live stream here today.
That's
and
right.
To qualify for that, you have to follow us on BTC, follow us on X, BTCTN, follow our sponsor Threshold Network at the T Network, repost our live stream post, and get in the comments with a question.
A good question.
Good question. So we got quite a few good comments and questions.
It's awesome.
Yeah. We're going to start off with one from Aya, whose Twitter handle is YaMoKing001. And the question is, how do you balance risk and potential returns in your BTC investment portfolio? I like this question.
Why?
Because it's something I think about all the time. And, it's relevant to people who dabble in Bitcoin and crypto investing. How do you balance your risk, David?
Well, it also, I think, is, I would say, if you survived the 2022 crash, it's definitely something that's going to be like front of mind scarring, right? Because even if you did all the right things and stayed in Bitcoin, but you just wanted a little yield on it, we could have gotten hosed. Pretty
Absolutely.
hard on that. So, I mean, the boring answer to this, the really super boring answer is just hold it in the self-custody wallet and don't do anything.
Dollar cost average your way in and dollar cost average your way out.
A hardware wallet, cold storage. The more complicated answer is then, do you want a little yield off of that? Do you want to maybe get involved in the ETF/DAT space? Maybe not ETF, but the DAT space, right? So I would say that really gets a lot more complicated, because then you have to actually think about how much risk you think you're taking by, like, I don't know, buying something like Strategy, or then going further out and buying something like that lingerie fighting league that bought some Bitcoin. It's probably pretty risky. So again, that's a lot more complicated. I don't mess with any of that complicated stuff. I don't have the financial acumen to like put out a risk profile for that. So I just have my Bitcoin. If I had Bitcoin, I don't have any Bitcoin.
I do.
But if I were to have some Bitcoin, I just have it in a cold wallet, and then I don't have to think about it at all.
Right. But
how about you?
I mean, the way I think about it is, look, investing in anything, it's a psychological game, right? So it's all your emotions take over, right? So that's why you need to have a plan, right? Here's where I'm going to start taking profits, and you stick to that plan, and you just have and then with crypto, since the potential gains are so great, I've spoken about this before, David. I really like the advice of Raoul Paul, which is just, if you're in profit, if you've been in the market for years, this thing is cyclical. Just take some lifestyle chips off the table. That's enough to make you to assuage some of those emotions a little bit, and make you feel like you've done well. And then that's just going to make it easier to not make bad decisions, like buy at the top, sell too low. Just like take some lifestyle chips off as it's going up.
I like that advice, but I don't like it for Bitcoin. And here's why. My Bitcoin holdings, if I were to have any, my Bitcoin holdings, that's more like insurance. Again, it's more like gold. And so that's where, if I mess up everything else that we usually talk about, like on token narratives, like, oh, I bought Pump, or I bought Hyperliquid, or whatever, and all that blows up, and everything I research to do everything, that all goes down the toilet. It's okay, because I still have Bitcoin. And so that part of my portfolio, I don't want to think about, right? I don't have to think about part of my portfolio, the Bitcoin stuff. The advice that you just said, I use that advice for when I buy WIF, or like Farcoin or whatever, Pump, Hyperliquid. And so that's where I spend most of my attention and brain power is on that really volatile stuff, and then I don't do anything with my Bitcoin.
So if you did have it,
If I did have any Bitcoin, which I don't,
so you're looking at your Bitcoin as a, or if you did have it as a long-term sort of retirement plan.
yeah, it's in that thing that you said, it's my insurance policy, right? And it allows me to not feel like I'm gonna miss out, or if I do like crash and burn, it doesn't make me want to like instantly get back in and like double down on my mistakes.
Right.
Yeah. So that's how I personally view it, and so I think that like Arthur Hayes, I spoke with him at WebEx, and he was talking about how like the DAT game, the whole DAT game is finding the DAT that's going to be big enough to be included in an index. I don't know if I can do that. It's not my area of expertise, and that's more akin to gambling for me, like throwing a dart.
You don't have any edge there.
Don't have edge. Don't know which DAT is going to achieve that mass. So. Yeah.
All right, let's move on to our next winner for today. We're going to pick 2 winners today, and then we're going to have 3 more winners tomorrow. So today's winners, you're each going to get $250 in TBTC. The second winner for today is at Cryptia Girl, and I assume her question is, ZK proofs are so powerful, but the tech is confusing AF. What's the simplest way you'd explain what this unlocks for everyday users?
So the thing I immediately thought of when I heard this question was an interview at KBW, the Zion, that guy.
Right.
And the whole point of, I spoke with Uma Roy, who I'm sure this question maybe came up from that conversation with Uma. The whole point of ZK, and I think to the, what was his name? It's something like that.
Can't remember.
It's a very nice gentleman. But the whole point is that for a normal retail user, everyday user, you don't care at all what ZK proofs are and the zero knowledge, how zero knowledge works. What it unlocks is things that were just not possible maybe at that price point or in that jurisdiction or something like that. So for example, Uma talked about being able to prove your identity without the exchange or the third party having to store your data that then gets leaked or hacked, right?
Yeah.
That's a big unlock for everybody. Everybody would want that, right? A normal retail user would want, like, oh, you mean when I sign up for, even like I buy a plane ticket, I don't have to like give the airline my passport info. I can just give them this thing they don't even have to know.
Yeah.
And then that's the only thing that I give them is not my passport.
Yeah. And the example that comes to mind for me is, let's say you're like trying to get into a club and you got to show your ID, right?
How old are you? Okay, sorry.
So with a zero knowledge proof version of this, right? You can show your ID without showing your ID to prove that you're old enough to get into the club without showing to the bouncer that you're like 35 years old or whatever. You should be in the club.
Is that the minimum age of entry for a club? Yes, for my daughter.
You don't have to give away all your personal details. You can prove that you are eligible for this thing without having to give away all your information.
Yeah,
that's sort of the unlock for ZK proofs.
Uma also gave another great example, which is image verification, which is absolutely coming. Anybody who's those people are very excited about image verification.
Yeah, absolutely.
But anyone who's been online for the past year, whether it's on X or even like Meta, right? This kind of deluge of AI image slop and videos. It's only going to get worse, and it's only going to get harder to discern, right? ZK will give platforms the ability to credibly prove that an image is real or not.
Yeah.
Now, again, from the retail user standpoint, you don't care.
Yeah.
Right. You can just take it on faith that if Meta or X or whomever is like, oh yeah, we're very, very we're pretty certain that this is a real image shot from a real camera. That's enough. And you don't really have to care that the only way that's possible is through things like zero knowledge proofs. So yeah, again, that's the
All right, so congratulations, Cryptia Girl, and
oh yeah, hold on a second, Graham. So I just got a DM here. So both Aya and Cryptia Girl, they didn't meet all the requirements.
What?
Yeah, we had 3 requirements, which is you have to follow us on BTCTN, you have to follow Threshold on the
T Network,
and you have to repost a live stream. So
these people didn't complete all the requirements. They did ask great questions, though.
They did ask great questions, but they failed to do all 3 of them. So I don't know. What do you think? I'm inclined to. Should we choose 2 more?
I think we should give it to them, David, but on the condition that by the end of tomorrow, these people actually do fulfill all of those requirements.
Okay. That's very generous of you. Very Canadian of you. You detected that Tamuru. Okay, fine. I'd be okay with that, but one stipulation on my part is tomorrow's winners, right? We had 2 today.
Yeah.
The 3 tomorrow. We're not going to be generous.
No generosity.
No generosity tomorrow.
And also today's 2 winners, you better get in there and complete the requirements.
Yeah.
I'm afraid you're not going to get that $250.
Yeah, and we'll get we'll tag them in the comments, and to make sure that we'll say we're like, hey, you won, but you got to do X, Y, and Z.
Yeah.
It's like 3 simple things, people. What were they again? I can't remember. Sorry. What was that? No, that's a joke. Follow us, BTCTN, follow Threshold at the T Network.
The T Network.
And
repost the live stream.
Repost the live stream. That's all you have to do.
All right. David, let's wrap it up. Let's wrap up our coverage for today. We're going to be back here tomorrow with another full day. We've got great guests tomorrow. Charles Hoskinson,
Vlad
Tenev of Robinhood. It's going to be good.
Hunter Horsley of Bitwise.
Nice. All right, so very much looking forward to that. That wraps it up for today. See you guys tomorrow. We'll be back.